All right, let's see if we have. What's up, guys? Good morning. So we make sure we have sound. All right, we're good. What up? What up? What up? I was talking to the old lady. The old lady that's not so old. It's the Ivy League live stream. Welcome. I'm Justin. If you're new, ask your questions. If there's something you're struggling with, want to know, a ticker you want to go over, just throw it in the chat. All right. So I'm gonna go over my game plan. All right. That's what I'm gonna do right now. So if you guys have questions, I'm gonna get myself ready for the day. All right, because we have some opportunity that is on the horizon, and you need to be ready to take advantage of it. You know, don't let it leave you in the dust. All right, I have a lot. If you guys don't know what a playbook is, I have a lot of different playbooks for Fed days. All right, maybe I think I've tried to transfer some of them over, but yeah, we'll go over the playbooks. Like we're what it is like setups from the day prior, the morning of, and then how we get that 2 o'clock trading action, and then we can look at that and say, hey, you know, time over time, we've seen this same pattern play out. So, shout out to the guy at Wawa who says it's company policy that they card an ID, and it's okay. I'm like, it's only company policy. It must be, here in the morning or something, because it ain't company policy in the afternoon or any other time I'm in here. They just, making rules up as they go. I just had to get that off my chest. That's all. A little frustrating. So let's get into it. How's everybody doing? I hope you guys are doing great. Got your sleep. All right. Where are the thy rates? Where are the thy rates? If you're new, please. We're trying to get to 100 subscribers. I do this myself. We are at 50. Hey, we made it halfway. We halfway there. Thank you guys. All right. We've been blessed. We've been thankful. We have called this market to a T for the past 5-6 weeks that we've started this channel. We've been on them early. All right. What is Bitcoin, BABA, oil, financials, what else? There was a lot going on there that we called out, and we got on it early for the run up. Been really thankful. Your mid cap, large cap tech. So, been really thankful. So, where are yields at? Yields have dropped a bit, but not necessarily. They're still just hovering right here at 4.8. And I'd imagine the 10-year is still where it's at also. So, there's a good opportunity. There's going to be an opportunity Like, you don't know what's going to hit you when it comes. All right. And when that time comes, hopefully you're here, because it's coming. The time is coming for what I have cooking. All right. And it's just going to be a little bit more time. It could start today. I'd actually want to see it today. I'm going to chart it all out. So if you guys don't know on the Fed meeting, we'll get a couple people in here. If you guys could take the time to like and subscribe if you haven't. Thank you for joining us. I'm Justin. I've been trading for about 7 years, 8 years, 6, 7 years, maybe going on 8. I don't know. I stopped counting. It's like 2016, 2017 I started. So whatever the math is on that. So let's see. So Bitcoin is still sitting up here in this range, which is good. It's not a bad sign. It's really not. What do we have here? 5 minute? No, that's not what I want. An hourly? Yeah. Oh, so it did break down a bit. But I don't know. Let's see if Bitcoin can start to rally. Let's see if Bitcoin can actually start to hold this. And with a little more time, possibly make another rally up. Or does it give us the next leg down? All right. That's what I'm going to be watching, because that can bring some opportunity in different sectors. Because we always talk about the rally, you put in some type of base, okay? Even to the downside. Look, downside, put in a rally, and then you finish it off. All right, looking like it wants to curl itself up, and then it shits the bed. All right, so you got your rally, puts in your base, you get a shakeout, bang. Same thing. And it starts coming down, bang. You make your new high. Now it's getting smaller. These consolidations are getting smaller if you can't tell. All right, if you guys can't see it. Wow, I guess they just outdid themselves or something. What was the announcements? That's what we want to know. So this consolidation is kind of worrisome. It's really small type price action. Usually that's a good thing, but it's just depending. Like the base is putting it. It feels like it's getting smaller. I don't know. We'll just have to wait and see. I'm gonna keep my eye on the dollar. Let's go into the news today. So Union Pacific is trading a whole lot higher. Wow. Where is it at? 3 minute. So 235.60, 235.60, 236, 236. I was curious when this thing was going to break out. This thing just hasn't done anything in a while. Hasn't done anything. So it's about, wow, look at that. Look at the opportunity that was. The opportunity that was. Wow, man, that's crazy. That's insane. It really is. And look at the weekly chart. See, we talked about this last night. See how things have been just kind of forming. Look at this nice pennant. If you don't see it, I can see it. If I go here, right? Look at that. Look at that breakout, guys. You know, look at that breakout. That's a nice chart pattern. That's a really nice chart pattern right there. Oh yeah, if I ever seen a chart pattern, it's that one. So it's a descending wedge. You know, so it blasted through the 200-day moving average. Now you're going to come into a bit of resistance up here, 239. I think the top end of this thing, it's at 236 right now. It's hard to say. I'm sure it goes on to make new highs because it's just, you know, it's those down names. I've said it early, guys. If you guys joined us and you liked and you hit the notification, you would already know that these are the type of names that we're expecting a run. These are the names we're expecting a run. You know what we could do? We can always measure the move. I want to get ready, guys. I want to get going. We got a lot of opportunity today. A ton of opportunity today. That's going to present itself. All right, we're going to go over the game plan. What direction do we think the markets are heading? I'm going to get into that. All right, we're going to get into, I doubt we'll get a pullback. I doubt we'll get the pullback. But if it's here, yeah, it comes right to the top of that base. Isn't that funny, guys, how everything measures up? If you start measuring your moves, you're going to start seeing resistance, support, and all that fun stuff. Like it'll start to make sense a little bit. You guys probably can't really see my chart. I'll fix it in a second. But again, I hope you guys are doing great. Let's get into it, guys. Let's get into it. We're going to get into futures. Let's see where we're trading. This way we get the whole picture. Let's get the whole picture painted. 100-day above the 50, 200-day below the 100. This 100-day moving average, or the 50-day, I should say, needs to bring itself up to have a nice, healthy market, have the moving averages where they should be. And it's going to take a little while. It's going to take some time, but you know, that 50 days got to work its way up above the it's got to start trying to work its way up above that 100-day moving average, which means the price is going to have to go higher. You know. All right, I'm going to jump into it, guys. Just trying to give a couple people a couple minutes to hop on. I know it's early. We're here to find the winners. If you guys have any small cap, mid cap, large cap, anything, throw them in the chat and I will go over them. That way we can all help each other out. All right, it's free 99. All we do is ask for a like and a subscribe if you have not already. We're here to make some money. All right, we're here to make some money. I didn't know about you, but okay. So what happened here? Closed green this week. Let's see. That I did put that in the chat, didn't I? So we're gonna kick it off with the SPY. Where are we at? So this 360 level on the futures. What's funny is if you guys have looked on the futures, if you guys looked on futures, the SPY actually put in a lower high. Believe it or not. So, I think we're getting a little heavy for some reason. I do. I think it's getting a little heavy, but it can still go on. I'm not blind to the fact that this can't just continue. All right, let's do it, gang. So we have no major moving averages right now. All right, in the way to worry about and focus on. We do have this top here. All right, you have two tails here at the top. We're gonna watch this range. That's our range. So this, if you go, you want to go to the daily to start getting your open and closes. They're so important because they'll help you. Like who's to say now? Like we pulled back. Do we come back up and bounce and test? Like, do we test the close of here? You know, we've already broken yesterday's close. Where are we going to pull back to and what close of the what day are we going to test? And it really helps. Like, it helps to know where's the 9 EMA. Look what happens at the 9 EMA. Look at the push and pull on the daily. All right, you can use 20 moving averages, whatever works on the chart. All right, whatever works on the chart, you use. Now, a 20-day moving average is more of a short-term moving average. 20-day moving average is what? It's like 2 weeks? 3 weeks. No, a month. That's your monthly moving average. 5, 10, 15, 20. 20-day moving average. So that takes 4 weeks into account. Right? Let's do it. I'm so excited for today, guys. I'm going to be on my shiz. I'm going to be on my shiz today. So if you don't know, you about to find out. I do not want to talk like that. That way I come in, I get my ass handed to me or something. I don't need that. You don't need that. Nobody needs that. All right, I gotta hurry up. I hate that I gotta click around. So if anybody knows anything about Thinkorswim, there's something I also want to do as well. I want to get the standard deviation on here and on the lines. If somebody could help me with that, if anyone here knows how to do that, that would be awesome. Okay, so this will be the top end of our range right here. Let me get this. So we'll make this. Let's see how well it matches up. Again, as you can see, we're putting in lower highs. As little as it sounds, as little as it is, it's a lower high. It is what it is. And I'm just gonna go into the indexes real quick. We're gonna go into a couple stocks, see where they're at, because we're gonna go to the Qs and such, and that way we're gonna come up with our direction. What's the direction of the day? And then we'll take it from there. All right. Come on, Brody. So looks like we do have some room to move on up. Why do I have to click? So again, there are two things I'd actually, if someone could maybe send me to a video or something, but I want to be able to like have like my lines or something like with the click of my mouse is what I'm trying to get at. That's what I'm trying to get at. So as of right now, we have closed. Let's go to a 15-minute. You know what? Let's go to an hourly. All right. And I should have whatchamacallit on. This clicking is gonna, it's so frustrating. Pivot tops. Again, so we're right back into this area. We're right back into this area. I think we got to think about testing the range. I think we got to start thinking about testing the bottom end of this range, like the middle of this range here. Right? We come up, we pull back, maybe it breaks, we pull back and retest it and hit the low of the range. Looks like we got some downside coming the next couple of days. I mean, these Dow stocks have been strong, so we'll have to look at them. Let's go to, we did a 30-minute chart. Let's do a 50-minute chart. Okay. And do we get more downside? That's the question also. Do we go further than what we've done? Pivot high. This has got to be your area. 459.02. 459.02. Let's see here. Yeah, let's look at this. I'm going to use this base here as my area. Yeah, right there. And we've already taken a low off of it. So the obvious target, 457 to the downside. All right, you can't break back above. We break back up here, find support, then you got to look for the upside again. All right. APH beat. All right. And again, I hope you guys are having a great day. Ask any questions, anything you guys want to know about. So we have Boeing. We're going to go through a couple of these earnings. We're going to do Microsoft, Google, and all that. I'm just running over futures to see what's going to be the direction. Now, again, like I said, the S&Ps, I'm going to go over the Dow, the IWM, and the Qs real quick and just look to see what do they have. That way I can expect the SPY to do. We had Union Pacific, who had decent earnings just a bit ago from the sound of it and from the look of it. Okay. I'm going to stay here with that pivot low. And it's been a little funny range that we've had going on here because usually Yeah, we're going to keep it where we got it. All right, this area, pivot low here. See if we stick it. If we can't, if we do not stick this previous pivot, guys, then expect the bottom of the range. I would expect it once you get a break and retest of it. All right, let's go to NQ. And if you guys don't know, you guys can play the NQs in equities. All right, I think it's NDX. It's just like buying 10 contracts of QQQ. We want to keep in mind a few different things. You guys want to, so I don't know if you guys do this, but this is what I do. You know, when I come into the day, so we're halfway there. So when I come into the day, I come in like, you know, like I'm working at a hedge fund. You know, it's time to perform. It's time to perform. I take my risk. You know, have I earned the right to take the risk? You know, this is a beautiful double top here that I would love to see it pivot back to. Not sure if it will or not, but this is a nice area here for it to fall back into. It would be really nice. This 1536, I think you get a lot of, I think you'd have some more buyers step in there. And so let's go. So this is the daily. You are at the 9 EMA on the futures. But again, NDX will be the equity for the futures, which is about 10 contracts. For the Qs, you have also you have like I was saying, you want to make sure. What's up, Tegan? Sorry, I just got thrown off a little bit. I hope you're doing good this morning. So you want to manage your risk. You want to, like, you know, when I come into the day and stuff, I always take. I'm on a desk. I'm on a prop desk at a fund. You know, don't get over your skis. Be smart. You know, things like that. Have you earned the right to take? You know, have you earned the right to add on more risk? Things like that. Is it worth it? You know, what are the things you want to do? So this level is still cleared out. The things that you want to do is, you know, you want to stay with volume. You know, you want to go to stocks that have news, a catalyst that's going to give you the momentum and all that good stuff. There's a couple of like small things I'm going to get into before we get into all the major stocks here. So the Qs are holding this level. Again, if we break this level, that's a 30-minute chart. The Qs are so much lower than the SPY, obviously. Looks like they're trying to hold up here. So I'm just going to give it a little bit for the traders to come in. Look, it broke. We pulled back. We've tested it. If we break this area, I would expect the bottom end of the range to be tested. If you try, because you're trying to find, you know, get your footing. I mean, worst case, you would look at it right here in this little area, but still, I think this is your area. You know, you can wick down a little bit. It's just, do the buyers step away? Like, they've tried to buy it here, or they've bought what they wanted here. They've bought the pullback. You know, it's just, dude, who is in control? Remember that today when you go throughout the day. Ask yourself, who's in control? Are the buyers in control, or are the sellers in control? It really helps. I just want to make sure there's nothing that I'm missing before I go on. I have my thesis of what I want to see. I wonder if we're getting a shift. If this, yeah, look, it's starting to break right now. So what time is it? We got to go. So it's 8 o'clock. I got to make sure that we don't have data also. /RTY. You know what? I'm not even worried about IWM. So we're going to be also being mindful to the we're going to be mindful to financials. Financials really showed themselves yesterday with that sell-off. Boom, boom, boom. That should be my area right there. 454.47, so 454.50, the same area I was talking about yesterday. So this is a failed attempt higher. What's funny is futures did not make a new high. Futures did not make a new high. And what's funny is we got to that psychological 460 area, and I feel like you're starting to see your profit taking. So we'll have to wait for the Fed meeting and stuff. I'm going to get into a couple. We get into like some stocks. We're going to get into the news. I got to make sure. I want to see what we have today. I think we have more real estate data. Which is pretty big. We've had a ton of real estate data. The Fed is going to be watching this, and it's 8 o'clock. So it's 8 o'clock. 7 a.m. 30-year mortgage rate is still unchanged. MBA purchase 159. Purchase index. Mortgage applications were down, so that's a good sign. This is what they want to see. They want to start seeing mortgage applications. They want to start seeing things slow down. All right? Refinancing, obviously, it should slow down. If you didn't refinance your home, what does the Fed mean for the market? The Fed is going to... It doesn't mean anything. What's funny is a lot of people are going to... they're talking about how big of a deal it is. I mean, in a sense it is. But, you know, what happens when you raise interest rates? You know, it's a... Interest rates are a financial tool that really can dictate, you know, the market cap of a worth of something. The cost of capital. How much does it cost to borrow? The cost of borrowing money. The cost, how much extra are you paying for the home that you want to buy? All right. Now that the rates are up and the prices necessarily haven't come down, if the rates are a lot higher than they were last year, that means you may not afford the same amount of home you qualified for the previous year. You may have to get a smaller home. You know, it's just, it is a tool that brings valuations either up or down. Valuations of companies, valuations of homes. You know, everything is a market. You know, your money, your paycheck, your job. Your job is a market. It's called the labor market, real estate market, stock market. You know, you have currency market, whatever. Like, there's all kinds of markets. But anyway, interest rates affect the cost of capital. How much does it cost to borrow money? So if interest rates are going up and it costs more to borrow money, then that means you should technically have less borrowing because nobody's going to take that deal. You're going to have some that do, but, you know, so the Fed meeting is, you know, that's where interest rates come from, if you don't know, you know, and then you have, I don't know, 2-3% where the banks put on top of theirs. I'm not a banker, so I can't even get into all that, but usually you have your Fed funds rate that's set. If it's at 5.5, then usually banks will lend. They'll get it at 5.5, I guess, and then they'll lend at like 7.5 or 8, whatever your credit is. So it's important. The Fed meeting is important, and let's not forget the balance sheet. All right, so if we bring up the Fed's balance sheet, then we'll notice here that the balance sheet is still at $9 trillion, and they said that they wanted to bring the balance sheet down. Are they scared to? It's big. It's a big deal because I don't know if I think that they don't want to bring it down because they don't know what's going to happen. And this balance sheet is still up at $9 trillion. It doubled in a year. It doubled in a year from, it was like $4.5 trillion in 2019 into 2020, and then to 2021. All the liquidity they injected into the system. You know, so what it is we're going to get Jerome Powell today, and we might get some answers on that. Okay, we may get answers on the balance sheet reduction. And the thing is that they're not selling. See, here's the Fed balance sheet. Now it's at 8.2, so they're working it down. They are working it down, and this is maybe where we start to see the market pull back. Now you could tie these to the market. You can. Financial conditions, you got to learn what they are. Fed's balance sheet, you got to learn what it is. Because you had a nice pop here when was the banks. This is them adding liquidity, money, you know, to help these banks out. So the Fed means interest rates. And the Fed also means talking to people and talking the market up or down. Not directly, it doesn't directly say, this, he doesn't say it to move the market, but he does it the best he can to say, where they stand on future interest rate hikes, future balance sheet reduction, things like that. And he tried to do it in a way where he doesn't have the markets volatile, going up and down and hanging on every word that he says, because it's funny because volatility does pay, but they also don't want to just have this market going crazy, and it's not their job. It's not professional. It's not, an orderly market. They want an orderly market, and, they want to do the best they can to bring down volatility, unfortunately. But quantitative tightening also brings in volatility, because there's a big difference. A lot of people don't know this. Quantitative easing kills volatility, because for every buyer, there's a seller. On quantitative easing, there's a lot of money. It's easing the financial system. So there's a lot of, for every buyer, there's a seller pretty much. And every seller, there's a buyer. Now, quantitative tightening, there is, it's an increase in volatility. And the thing is we have had quantitative easing since 2008, pretty much for the most part. You haven't had a sustained market that was quantitative tightening, with like Fed not, in the middle of it, adding liquidity, taking out, putting back in. But more so the quantitative easing part. We haven't had quantitative tightening in a while. So you're going to get volatility, and that's what pays. Because there may not be a buyer or a seller. There's not as many buyers and sellers. And at what price are they at? So it creates volatility. Maybe the buyers aren't there to step away, and then, the sellers have to bring their price down, and then it brings in buyers. So that's up and down price movement psychology of people, where they want to buy and where they want to sell. Quantitative tightening, just remember, it's, quantitative easing is for every buyer, there's a seller. And that's why, whether it's the Fed, whether it's a retail, whatever, that's why volatility is killed during quantitative easing, times. But all that's why the Fed is important. That's what it means for the market. Just, you need to know the Fed, interest rates, all that fun stuff. Fed balance sheet, financial conditions. What's going on? And it's not just here, it's around the world. There's going to be a slow in demand, not just here, and it's around the world. Just, just about all the other major countries, Australia, Europe, and Germany, and whatnot, they're all raising rates too. They're also trying to battle inflation. So, all right. So far we're holding this level. What I'm going to look for as of right now is maybe we run up on the SPY today. Now this isn't like, perfect or anything. I want to see if we just run a test up here. What is this, like to this 455.83, 456? Let's see if we get a bounce up to that area and then maybe pull it back. So far this is what I'm thinking. I'm thinking so far we could, if we can't break this level here, if we can't get up here and break up above the 9 EMA or VWAP, we're in a downtrend right now, but it's 8:15. This is a 15-minute chart. We're going to give it time. At 9 o'clock, we're really going to see, because now we have somewhat of a double bottom here. If this level continues to hold, then I'm going to look for, possibly a higher low, or a lower high, I mean. So that's that for right now. All right, so let's get into it. Let me get into the news we have and the data and everything. Let's do it. I gotta get my stuff on. We only have an hour. That's crazy how time flies. But if you guys have any tickers or plays that you guys are looking at, throw them in the chat. If you're new, welcome. I'm Justin. I've been trading for 6-7 years, probably going on 8 again. I don't really count. I still count. So we do have a lot of oil data today. New home sales also at 10 a.m. Again, we have real estate data today. This morning, the Fed's going to be watching this, because this is going to give them, this new home sales month over month is really going to give them a keen, it's not like it's not going to dictate like whether they do or don't raise rates, but or add more. What it is, it's the year-end target. The year-end target for December, you get the summary of economic projections, and the Fed puts out a year-end target. And as we go throughout the year, does that year-end target change for different reasons? All right, is the year-end target 6%, 5.5%, which is the Fed saying this is where we want to be by December 31st. This is where we want interest rates to be. All right, and you got to just keep an eye on that. Let's go to CNBC, see what we have going on. Stocks making biggest moves pre-market. Obviously Google, so let's do it. So if the SPY we think is going to test, possibly put in a lower high, we can probably look for Google to also put in another high and maybe pull back. Maybe we test pre-market highs. We do have a target move there. Let's see here. So I'm just going to use, obviously all we have is pre-market or after hours from yesterday. That's all we have right now. It feels like this thing wants to pull back. You could get this happening, that you could get a lot of buyers that are up here, and they have the chance to get out at either break even, or they've cut the loss smaller, or now they have a profit. It's hard to say. All right. It feels like Google's just been struggling for some reason, and we need to, so where is that? 126. We have a base there. All right, let's go. I have a lot of stuff I want to run through. I want to run through some semiconductors. I guess I got to bring up the 4-hour because it doesn't want to bring it up for me. Oh, that's it. That's all you want to give me? Why is it doing that? That's so weird. Yeah, there's our pivot high right there. That's our pivot high right here. Let me... Come on, man. Sorry, guys. I'm trying to do this so I can... I need to give myself resistance, and then I need to get the upside target, so I know what the range is if it gets broken. All right. And I pretty much got it there already. Okay, so we're already there. Looks like I'm good. I could probably bring it down a little bit, though. Yeah, I could probably bring it down to here. It's probably where it's at, 132.29. 32.29. Again, I hope you guys are doing good. Sorry, I just have to get this right here. Now I feel like I lost it. Alright, that's an area I'm going to be watching. So if we break up above this area here, I want to see if we put in a range. So 130, it's not much, but it's like a $3 range that we could possibly put in here. But we could get the rejection. If we do get the rejection, then we'll use the bottom end of yesterday's aftermarket. Again, you can use the daily chart, whatever you find best. I want to know what it takes to get a pullback. What's it going to take to get a pullback here? And there is our base. Would you look at that? I just don't know if we get a pullback that far, though. I really don't. So what I'll do is, let's go to 4-hour. We're going to use the pivot high. Oh, so we did. It's not. I thought this thing was way far away, so I apologize, guys. Maybe we do get the pullback here. I wouldn't mind seeing the pullback here. So those are going to be my levels. So the very downside to this is going to be Okay. All right. 127.75. Call it 128. Okay, in that area. Let's do a 30-minute. Let me get rid of this. Remove. I gotta get my stuff ready, guys. And again, if you guys have any questions, you guys can throw them in the chat. Whatever you guys need, I'll get it as soon as I get to it. I gotta get myself ready for the day. I will get right into that, buddy. I'll get right into that. So that's gonna be a nice little range we have here on Google. It will be. That'll be a nice range. That's a $4 or $5 range we have going on here. But yeah, I'm gonna go through your snap and stuff here. 1 second. So what did I say yesterday? I felt like we could get a gap up on Microsoft. All right, so it looks like we're holding this area. So far, so good, guys. All right, so far, so good. And what's also funny is notice how the SPY, I said we're going to get that little upside target, and then we pull back. What would that mean? Same thing for Microsoft. You're hearing it first. This is what I'm going to look for. I want to see if we get a bounce. Right? Microsoft gets its bounce, it comes into resistance. The SPY gets its bounce, it comes into resistance, and they all bounce and then pull it back. That's what I'm looking for. Sorry, guys. I was just saying. So I was going over my plan. I don't know where everybody went, but I was upside. You need both. If we start holding this area, 338, I want to look for a rejection here at 342. Okay, 342, and it goes up to about 343.50. 343.50 is going to be the area I want to get short, because I think we can also get the SPY to also pull itself back. Okay, it's this little area right here. All right, that little area right there, I want to be short. Why do I want to be short there? Because, if I think the SPY if I don't think the SPY is going to put in a new high, now unless, things change and Powell says something, then obviously, my thesis is going to change. For now, I'm going to look to turn this base into resistance and see if we can float down to that 50-day. I want to see if we can float down to the 50-day. Okay. Oh, okay. Sorry, man. I don't know what happened. I'm sorry about that. I'm not sure what happened. All right, sorry about that. Nah, I was just writing down my levels for myself. So we have Google. Let's get into we'll get into some Meta. We'll get into some AMD because we had Snap yesterday. We're gonna get into Snap. I'm gonna go to Meta and then Snap. I don't want to hurry up. I still gotta look and see what. So Alphabet, Microsoft reported slowing. PacWest shares regional bank stock jumped more than 28% on news it will be acquired by Bank of California. It didn't jump more than what? PacW. Let's see. So it did reverse itself. Okay, so it did go back to the upside. All right, so that it did do that. Meta. All right, Meta. So this is what I do. I also, put those things up there. Like stop loss. I got to clean this chart up. I haven't been here in a while. This is nice. Look at this prior range here, guys. So Meta, if we hold, and this looks perfect too for a long. All right, we start holding. So what's this level here? What do we have? 15-minute chart. This is going to be 300 and 350 for Meta. So Meta 350 cents. What is going on? Oh, is it? Yeah, man. I hope it does. Let's see if I can see if I'm right. See if I'm reading the market right. So 350, I'm going to look for Meta 350 cents as support. So that would be S1 and my target S1 long 350, and you could use a stop loss probably down here at 297. Give it, $3, $4, because what we have here, see, the thing is you want to look at daily charts, weekly charts, because they really tell you the tail where your moving averages are and stuff like that. But if we hold this 300, 325, 325, you got to look for Friday's or Monday's high. You got to look for Monday's high, that previous pivot. And what was it, like last Wednesday or Thursday, Tuesday, Monday? Yeah. On a Tuesday, it's like 304. Wow, that doesn't seem like a very big move, does it? 300 to 305. Call it 305. Long to 305. To 305. That's not too bad. 305. 305.50. So 305, 305.50 is what I'm going to look for. So again, Meta 300. We're going to look for this bounce pullback. Why do I say this? This is all adding up. The SPY, the Qs. If we're going to say that we think we get a bounce, a bounce back to test yesterday's highs and Monday's highs, whenever it was, that double top that we put in, we're putting in a lower high. If I think the SPY is going to pull up to retest that level and then possibly pull back off of it, I mean, earnings have been decent, so it's hard to say. We could blast through it. But if we pull back, look what everything else has. Look at Meta. Look at Microsoft. We're going up to a resistance area. do we pull it back down for the Fed meeting? You know, do we get a nice move in the morning to the upside, and then do we pull it back for the Fed meeting? That's what I'm wondering. That's my game plan. It's my game plan. If we're holding this level, as long as we hold, even if we shoot down to it, I'm buying that bounce back. I'm not just automatically going to buy it. I'm going to let it pull itself in. I'm going to see the volume. I'm going to read the tape, or time and sales in level 2, and I'm going to, gauge whether I can put on the risk or not. Because I also want to remember we have Fed meeting here in a little bit. So we want to, you don't want to overdo yourself and wait for the volatility if we get it, which is going to be later on this afternoon. It could give us another like day 2 move. You could get like a nice gap up or gap down when we finish the day today. All right. You could. Doesn't mean you will. So again, Meta 300. We'll look for a long up to 304. That's a 4 or 305. That's a $5 move. $4, $5 move on Meta. I mean, anything past this, it breaks it, holds it as support. I mean, you look for the 308.75 area, 308, 309 area. 5. These are all psychological numbers too. All right, let's go to, so that's Meta. We have Microsoft Meta. Let's go to AMD. Matter of fact, I'm going to go to NVIDIA. All right. I gotta clean these charts up. Oh, shit. Let me do this real quick with Meta. No, Meta's way above its moving averages. It's rallied its tail off. So let's go to NVIDIA. Then we're going to go to Snap. And we're going to go to stuff you guys want to look at real quick. Get that bull flag. So it's looking like AMD isn't going to hold itself up, unfortunately. I'm going to have to turn the AC on here in a minute. This is a 30-minute chart. All right, so I know from yesterday that, oh no, this is NVIDIA, so it's way above its, whatchamacallit. I'm going to clean this chart up real quick. Let me get rid of these lines. If anybody on here, if you're new, if you could like, share, and subscribe, that'd be great. But also, if you could, if there's a video or something that you guys know of to be able to not have to click, if I could just get from this arrow, because I've seen it done before. I just can't find it. I just haven't found it. So I don't have to like go to the bottom of the screen to click and get an arrow and all that fun stuff. So there is our base. So there we go. Pretty easy. If NVIDIA holds, let's look for a day 2 run. NVIDIA 485.50. NVIDIA, we're going to look at a long from 485.50. Okay, 485.50. That's NVIDIA. And then we're going to look to see if we can bring this thing up to the upside. We're going to look for a few dollars here. To 465. All right, 465.62. Now this doesn't mean that we don't pull it back either. So hold on, let me go through the chart. These are my targets if I'm on the long side. I have both ways. 465. So let's go to the 15-minute chart here. Where are we at? We are right here, 45. I think NVIDIA might actually come down. I think NVIDIA might pull it down. I might have to be long at 453.19. So change of plans. 453.19 will be the long. Because I feel like it's trying to bring itself down here. It's going to be up to the Qs. I'm going to be watching the Qs along with this. Yeah, it's trying to put in a lower high. So maybe we take the short if we get a bounce. Maybe we look for the short. And I want to see if we can get this thing back down to 450. It's an $8 move. let's see here. See, it's 8:30, so we still have some time. So it's still early. We want to see what happens at like 9:15. 9:10, 9:15, 9:20. When traders start getting in their desk and start moving this market, what's happening? So let's see here. Okay, sorry guys. I'm sorry. 458.50. So they said that they're seeing a slowing demand in cloud services. Maybe that's not good for AI. Maybe it pulls itself back with
issued statement in response to 13D filing made by Canal Capital on July 25th. Says remain open to engaging with all shareholders and to reaching a constructive solution with Canal.
So if we see, I wonder if we've tried it already. That's what I'm seeing.
YTEN Yield 10 Bioscience files request for regulatory status review.
So I'm here, guys. I'm trying to
Camelina designated to produce EPA component of omega-3 oil. That's Yankee Tango Echo November.
Yeah, I think that's going to be my plan for this. I think it's going to be my plan for NVIDIA is I might look to the short side. I may be looking to the short. Oh, so there it is. So 458 does not hold as support. Okay. Let me bring this over for you guys. There you go. Is that better? Should be better. So I do apologize. Oh shit. Damn it. It's all good. It's all good. Uh, 458.65. So we'll look for like pre-market highs. 459.75. And then 458.50. I don't know why I'm spending so much time on NVIDIA. I really don't. I really don't know why. If the market does pull up to the upside, I have the upside target and then I have the downside target. That's all we can do as traders is, so if NVIDIA does pull up to this area, I think it did. That's what it did yesterday. I want to see if we can get kind of up to 459.67. What is this? It put in like this weird base yesterday. It was so weird. All right, so short, we're going to say 460 area. It's like a dollar range. I'm going to look for NVIDIA. If we can't break above yesterday's highs, 460. This chart is so ugly. I just don't know if this thing... Here's what I think could happen for NVIDIA. All right, yesterday, with Google and everything happened, Microsoft happened. I think NVIDIA is going to be like just stuck in the middle and not... Because you got the news with Microsoft saying software, cloud, all that stuff, AI stuff is slowing down. And then you got Google who's ripping. So it's like, I'm going to look for a bounce. If we get the bounce up here, see, this is our pivot. Pivot low. Pivot low. right? Right there. If that breaks, if 458 breaks, okay, 458 breaks, my downside target will be this double bottom on the daily at 450.50. All right, 450.50 to the downside if 480 breaks. So 475. I thought it was 480. I thought I said 480. Or 458, I mean. That's so weird. I don't know, guys. I'm losing it. Maybe I just need to get away from NVIDIA. For some reason, it's so weird. It's being so weird right now. So there's a previous pivot, pennant. I just want to make sure I'm reading everything right. Now it looks like it could start to gain some upside right here. I'm going to put a mark here. And this is going to be the level. All right. This is going to be the area that it's at. And I'm going to look. Of course there's a line. I do apologize, guys. Usually live streams aren't like this. We do have a break retest. See if we can go higher. But I'm going to put it right here. All right. I'm going to see if we can get. I want to wait and see what NVIDIA does. Because it's important. Let's see what it does. Let's see what it does right here at 457.50. Okay. 457.50. We're just going to see what it does right there. That's going to be the tell of the tape if we break down, if we do hold and work our way up. We work our way to the upside, then we got to look for 467, 468. Yeah, 467. NVIDIA short. Let's see.
With the presentation now on that.
And then our downside targets are going. See, we have a pivot high here too that we got to watch for. NVIDIA might not be a trade today for me. NVIDIA probably ain't a trade for me. I'll have to wait and see. I feel like there's other things to be trading. So what do we have here? 114.16. We have AMD. All right. I got to get rid of these lines. You don't need to be there. I got to get rid of all this shit. All right. Let's do it. Let's go to a weekly chart. Boom. I want to teach you guys this stuff. So we do have an area we could pull back to, and look at this. You see where the 100-day weekly moving average is? Look at this base. All right. See, it's just above the 100-day moving average. Nah, it's good. Look at that. That's a perfect area for AMD to get to. This is going to be my target for AMD to see if we can get it down here. I want to see if we can get AMD back down to like $98. All right, $98 will be my target, and that's not today. It's not going to be today, but it's going to be in the coming days. I want to see if we can get it down there. Yeah, 98.50 is the target. That will be the target. We're going to put that up there. I want to see if we can get there. Let me get rid of this stuff. I'm going to get rid of all these lines, as a matter of fact. Getting rid of all of them. Some of these I can use. So there is resistance. Yeah. So let's see if semiconductors are weak today. Like NVIDIA, I'm like, I think I could go, like it could pull back. Got to see what we have, like 9:15. It just feels like it's pulling into resistance and whatnot. So let's do it. Let's do it. Let's do it. I hope you guys are good and got your sleep. Today's going to be action-packed. It's going to be action-packed. I did not look at the moving averages either. Shit. where is that daily moving average? Gotta be quick. So are we gonna make this 50-day resistance? 114.41. 114.41. 1441. 1441. All right, so weird. Let's see if AMD holds this level, guys. If AMD holds 112.50, 112.45, you gotta look for the upside range of 114. It's only a few dollar move, but I mean, it's tricky. It's tricky. No, I don't really care for that song either. This is where I'm gonna look to see if we can get it to. Right around here. I feel like semis are going to be weak. Especially, so where do we have big selling coming in at? Where do we have big selling coming in at? All right. That's the question. Where is she at? Where is the selling taking place? We had some here. Do they step back in? Do they have more shares to sell? Right? I think we got to look for this upside here. Yeah, I'm going to look for this area. If we get the bounce back. We said 114.22 was the 50-day. So on the daily, do we start to try and pull ourselves up and retest that 50-day today? Right? Do we start to try and pull ourselves to test it one more time? Because if we look at the daily chart, I know there's a lot of lines here. This is why it's important to use the daily, because it kind of gives you a better picture. So if we're here, right, we're at 112.61, call it 112.50. What do you think the chances are that we possibly make another little test run to put in like a tail of sorts? You know, look at the volume, right? If we look at this volume here, guys, look how low the volume was on that upside yesterday. Look how low the volume was. Ow, my hand. So you're coming down, you get a bounce back. And then do we pull it back? All right. If we get a follow through type of day, it's hard to say what we get. We have Powell today, so I'm going to be patient. I'm going to trade, I'm going to take my time. I'm going to see what I see. I don't know what small caps are moving this morning. Man, I got to hurry up, guys. Fuck. I had to do a couple things this morning, so I...
From the Gap confirming the appointment of Richard Dixon as its new CEO coming from Intel.
Yeah, let's see. Let's see if 1150 breaks on AMD. I'm just... This chart doesn't look good. I like Microsoft and the Google. Like Microsoft looks like we could pull up, reject it. Like those are the stocks that I want to watch. Those are the stuff I want to watch. Like I don't know what, like both AMD don't look good to me. It's not a good setup, guys. And I'm sitting here trying to figure it out, and I'm like, I just don't see it. You have a pivot high right here. Like, you have another pivot high here, here, here. Like, what's the next one to go to? Well, we got a previous high a day yesterday. You could look for a pullback, a bounce back into the high a day yesterday. Maybe you don't break it, and you put in a lower high, or it doesn't break and then it gets rejected, and then you test the bottom side of this level of 110.50. That's what I would look for. All right, that's what I would look for the like AMD and stuff like that. I would look to see if we bounce up to try and test yesterday's close, which is right here. Here, let me show you. We do this. We do this. Yesterday's close, right there. We will put it right here. Edit properties. We'll make it a dotted line, and we'll turn it turquoise. Boom. So we're gonna see if we get a bounce back up to yesterday's close. We get a bounce up to yesterday's close, and it breaks. Then we're gonna look for yesterday's high. This is the easiest way to do it. Easiest way to do it. And then you move it up. The farther it goes, you just keep moving it up. What's your next resistance level? All right, you have a pivot high up here at this base. It would be like last week's high up here. All right. So we'll walk it up. So if you get a bounce back and you can't get above yesterday's close, then you look for the pullback. And then you look for it to pull back down to, you know, this whole area here is like bar. It's just a consolidation area. I'd say 110.50 is the area. 110.50 the downside area on AMD. What did Boeing do today, real quick? Yeah, I'm going to snap right now, but look, I knew it. I almost bought calls yesterday on Boeing, and I didn't know that they were going to have good earnings or anything. But you know, it's just these chart patterns. Look at this chart pattern. Of course, there is. See, a lot of these names are doing this. You're putting in this pennant. You're breaking out, you're pulling it back, bang, now you're on the run. You know, this is why you gotta come here. You wanna put yourself in the momentum type of names, you know? So, that's that. I need to get some of my stuff ready here. All right, let's go into Snap. Let's go into Snap real quick. Fucking God, this phone. Excuse my language, I apologize. Oh my God, I almost had it. Alright, let's do it. Let's go to Snapchat. Let's go to the weekly chart. All these lines. All these lines in my life. So, weekly 50 day. I'm going to put a little circle just so I know where it's at. Because these are important. You know, these are areas of like where it can bounce back and off of. Things like that. So there's your 200, 150 day. And look, you just got a golden cross there too, guys. Isn't that funny? That's so funny. You just got a golden cross on Snapchat. Upgrade. Spotify got an upgrade. Are you kidding me? And why do they keep downgrading Target? Like they do. It's so messed up. Target's the jam. They just don't sell as many products as Walmart. Like the like fishing and like just sports and stuff like that. It's just you can notice the differences between Target and Walmart, and Target's slacking, at least where I'm at, with like what they sell compared to Walmart. This is gonna piss me the fuck off. Anyway, it's not about me right now. I'm just trying to get my my phone to start working. It's just my phone ever since I did the last whatchamacallit, the last SO or whatever for iPhone, it messed my phone up, and I need a new phone anyway. So all right, let's do it, guys. I apologize. Let's see, what do we have here? There's your 9 EMA. This is a daily chart. We're so far down, so let's go to Okay, so that smaller one's going to be the
That's XPEV.
daily.
Volkswagen to invest about $700 million in XPeng and purchase.
Oh my God, my phone. What is going on with you today? Yes, I got it. We're good. We're good. We're good. We're good. We're good. Let me log in. That way I have two different places to order, get my orders in at. Sorry guys, just give me 1 second. I just got to get everything set up. All right. Let's do it. All right, let's go. Let's do this. So we got Snapchat. We got the 50-day coming in here at what looks to be $11. That might be a good area for a bounce back now that I'm seeing it. All right. Let's go. Let's do this. So there's our 50-day. Boom. Let's go to a 30-minute chart. 30-minute chart. 30-minute chart. 30-minute chart. Yep, it's still consolidating there, isn't it? That's awesome. That's awesome.
With PayPal to offer simple, flexible payment options. That's Sandy Foxtrot Tango, Papa Yankee, Papa.
So PayPal, Microsoft News, guys. All right, Microsoft News, and with PayPal, they're merging or something. They're not merging, but we'll see how the
PayPal shares are spiking here now on the news.
Oh, of course they are. I gotta get this stuff off of here because it'll.
74.55 on PayPal.
All right, we're good to go. So, yep, we're still the same, man. I gave you your circle. You know, this is what we're gonna look for. There is not a circle there. There, whatever. Look right there. Hold on. That's what I'm gonna look for. That's gonna be my area I'm gonna look for. Right there. Shit. Right there. That's for you, Teague. That is for you right there. That's our level. That's the level we want to watch. Alright, worst case, if it does break to the upside, what are we saying? We got the market we think could pull up. Okay? Nope, market's breaking down. So you know, that's changing the course of the day now. So that's why I say we gotta wait till about 9 o'clock, 9:15. We start getting the market to move. All right, so let's get ready. NQ. I was not able to go through any of the news this morning and go through stuff. I still have a little bit of time. I needed to get up earlier. I got up at 5 o'clock this morning, but it apparently wasn't enough. Or 5:30, I should say. So, sell Dish calls are keeping it. Oh, shit. I forgot about Dish, buddy. Listen, if you have profit in both, especially with the IV, man, you got to take your profit and stuff it in your pocket, bro. And then take that profit, that money, and then put it to work on another position somewhere else. I mean, that's what I would do. I'm not, I can't tell you what to do. That's what I would do. If you're up on these positions, you take profit. Grow. That's how you grow your account, by taking it. Because if you don't take it, the market's going to take it from you. The market's giving it to you. Don't let the market take it back. That would make you feel like shit. I would feel like shit. Take your money. You got it. The market works for you. You don't work for the market. What is this? Dish? Look at that. Falling right into support. So let's watch Dish. If it breaks this low, I would take profits because you could come back down to bounce off of this double top. And just, I would take your profit because it's hard to say if it recovers all the way back up in one day, and tomorrow's Thursday. So if it starts to curl, and test pre-market highs, it very well could. Watch pre-market highs, This could get some volume in it. Let's look at the 5-minute. It looks like it already does have volume this morning. Looks like there's plenty of volume. Comparatively so with what it's used to having. Which is important. Like, look at the pre-market volume. There's a lot of volume there. So this thing should have whatchamacallit. It should have a nice day today, like in either direction. The market's going down. You got to take your profits if you're long. If you're long, you got to take your profits. Got to. That's the only way you get paid is if you take it. So for the SPY, I still want to see if we get a bounce back to get short. If this is going to be the direction, I got to find out why the market's doing what it's doing. What happened at 7 o'clock? New home sales, like 345. What? Is that 345 this morning? What happened at 345 this morning? Was that the European consumer confidence? Loans to households year over year? So I don't see anything at that time for the market to go crazy like it did. Wow. All right. So this is big. All right. What it looks like we're doing is yeah. Now, unless Powell comes out and says, yeah, we're not doing a rate hike, which I don't think we'll get. I think we're going to pull it back into here. This is going to be my target, 453.69. We pull back in here. Or if we pull in here, then look for upside because what's it still doing? It's still putting in higher lows. So let's draw a... Let's do this. Let me do this real quick. Equities, boom, apply, okay. Let's do this. Let's do this. I wonder if it's already there. Kind of curious if it's already there. Let's see. Yep, I knew that wasn't going to work. I knew it wasn't going to work. Alright, so that's a rejection off of it. I would want to see the SPY start to bounce here. Like, even if it bounces here, what it's doing is now I feel like it's putting in lower lows. And you might get a bounce up only to like curl it over. You may come up, curl it over, and then start rolling down. We're going to see. We're going to find out. We have a lot of data tomorrow. We could trade sideways. That's always an option. You got to understand, like, there's got to be a reason for, like, a big move. There's got to be a reason for either taking money or putting money in. We just don't have, we have catalysts that are coming up later on tonight into the, like 3 this morning with Bank of Japan interest rate. You have Powell later on this afternoon at 2. You still have PCE. You still have GDP numbers tomorrow and then the Friday. Like, institutions aren't going to be placing very many bets until they get some of this data. Maybe they trade going into the data. That's what we also got to watch for. That's what we also got to watch for. It's okay to just not trade all the time. Not necessarily like trade all the time, but there's always something. I'm just saying if we put in this see, I want to see if we start to bounce here, but if we put in like we can't get back up above here, then do we sit at yesterday's open? You know, this area right here. So I'm just trying to think of my options. We're down. Let's see. Let me pull up a 5-minute chart. No, I'm on a 15-minute. That's fine too. It just feels like if we get a little down direction in this pre-market, we bounce back and maybe put in a higher low. You know, I'm still thinking that. But I'm first going to watch this level right here. Right? See if we get above it. All right, let's go through. Oh, fuck, man, I got to hurry up, guys. Spotify got to upgrade. Let's go to...
said on July 21st, Craig Futuro, company CFO, notified the company.
Slowed revenue. So Microsoft reported slow revenue growth within its cloud business during its fiscal fourth quarter and called for lower than expected guidance. It did call for lower than expected guidance. So that means what? That means AMD. That means, you know, Nvidia may start to slow up for them. Yeah, I think I might look for the long off the bell. I'm going to give it a little bit. Let's look at the volume and see if we can kind of see if there's anything, like there's any pre-market volume that's decent. It's still early. You know what I mean? It's still early, guys. Got to give it to like 9:15, 9:20 where they really start putting their stuff on. So it's not bad. It's really not bad. 850. Look at the difference in volume. So it's not too bad. It's not too bad at all. What's I gonna do? All right, let's go here. So we got Microsoft. We have Microsoft. There's PacWest, Snap, Coca-Cola, Boeing. Yeah, what did Boeing report? The aircraft manufacturer rose more than 3% after it posted a revenue beat for the second quarter. Boeing's losses per share also came in lower than expected. The company's results were driven by an uptick in airplane deliveries. Nice. Great job. The bank stock added 2.5% after announcing a 30 million share buyback program late Tuesday. It's also nice. That was the other one I was looking for when I was telling you guys about some of these companies having trouble with them doing share buybacks to help hold their share price up. Texas Instruments fell 4%. What's new? 4% even after reporting results that surpassed Wall Street's expectations. It also shared lighter than expected guidance for the current period, citing sluggish demand. Sluggish demand. That's another semiconductor talking about sluggish demand. How does AMD trade off of this type of news? Teladoc jumped 6%. Teladoc Health beat on the top and bottom lines in its most recent quarter. The telehealth company reported a narrower than expected loss of 40 cents per share compared to a loss of 41. According to the consensus estimate from Street Account, the firm also posted a revenue of $652 million, better than expected $649.2 million. So in a quarter, that's 612. So they're a $4 billion company, pretty much. Their market cap is about $4 or $5 billion. Dish Network. Here we go. What did it do? Tegan shares of telecom company jumped more than 9% in pre-market trading. Bloomberg News reported. Actually, Tegan reported it. You heard it here first. Tegan told y'all, yo, Dish. I'm trying to tell you guys ain't listening. Dish. And we're still over here not listening to him. He's like, guys, Dish Network. Psych. But yeah, would start selling its wireless services on Amazon this week. Thermo Fisher, Union Pacific. See, this is what I mean. These Dow names can really get going. All right, so have a quick look. So the Qs ain't doing shit. Qs ain't doing anything. Union Pacific, Thermo Fisher, Dish. So we have Dish, Teladoc, AT&T, Texas Instruments. So we might want to look at semiconductors now. Kind of curious how they trade. Kind of curious how they start to trade now.
BA Boeing CEO Dave Calhoun on CNBC.
So MU's coming into 100 weekly moving average, which is also at resistance. It's already rejected off of that area, though. Let's go to a daily. So there's our 50-day finding support at 64 MU. I think the liquidity is going to be with AMD if we're going to look for downside on these semiconductors. There's a lot of tails in there. MSFT. The meeting's at, well, the paper comes out with the decision. That'll be out at 2 o'clock, and then the meeting's at 2:30. And we'll have it here live. Do you guys have any tickers or any stocks you guys want to look at? I may check out BABA again. I'm not sure. So we have a gap down coming up. Let me actually put this here. I know this is weird, but
JZXN, Juicy Holdings regains compliance with NASDAQ minimum bid price requirements.
okay.
Continued listing. That's Juliet Zulu X-ray November. JZXN.
So here we go. So far it's working out, guys. Look at the bounce on Microsoft. That's what we said yesterday. That's what we said. We want to see if we can get a bounce and then get short. All right, bounce, get short. I did not. Why did I get rid of that level right there? Why did I get rid of that level? What you like about it? I need to play some music. I need to play some music. Yeah, AMC, most definitely, bro. AMC. That's right, it did have news. It's trying to curl itself up. Look at that. You see how it's not putting in higher lows or lower lows? It's bottomed. It's found a base. This thing could start to go to the upside. I don't care what anybody says. It did reject the 200-day yesterday. You gapped up, ripped through it. It pulled back below it. If this thing can regain some steam, I would watch out. Because it's this. All this is telling me you got a nice pennant being put in here. Right? Look at that. That's beautiful. I don't know why I went all the way back that far, but as you can see, something's got to give here. Something's got to give. Something got to give, guys. That's an ascending wedge. Look for the pullback to the 100-day moving average. Look for the pullback here and see if you can get another long off of it. If it held your base and it held here, you know? Come on. Oh my gosh, that's because I have that line up. Yeah, and look at it starting to like, it's got to slow down. It's got to just curl up. Some of the shorts get hit. All right, let's get ready for the day. AMD, I got to get this. Let me go turn this AC on real quick, guys. I'll be right back. 2 seconds, 10 minutes to the open. I'm going to get my chart set up. Let's get this thing popping. Let's get it ready, guys. Let's go. Chat, bada bing, bada boom. All right. If you guys could, take your time, like, share, subscribe. We greatly appreciate it. You guys are awesome. Let's see what happens today. Let's see what happens. Oh, shit. I could go... Sorry, I don't mean to... Guess we could go through Tesla and whatnot. There's a break. Tesla is such an ugly chart. It really is. Tesla's got such an ugly chart right now. It's a shame.
KO Coca-Cola said there was some strong demand for some of the juice businesses in China and India. That is KO Coca-Cola.
So we have Apple, Microsoft. Let me look at Baba real quick. What's it, Bingo? How you doing, buddy? We just went over a lot of the stocks. Why am I typed in Bingo? I typed it in the chart. You got me there. Baba's coming back down. See if Baba gets tries to find support here. 94.50. 94.50. See if you get a bounce back and maybe a rejection of pre-market highs, which would be like this area right here. This is where I'd like to take. If Baba cannot break back through this level right here, we'll put like a little arrow. We'll turn it around. Right there. That's the level we want to say. Baba can't get through there. Shorty makes short. All right, that's our level. If it can't break. Oh my goodness. All right, let me turn this AC on and we get my charts set up. I hope you guys are doing great. Like, if you could, guys, like the stream for us. And as we get going, we're going to start the morning. If I get into a trade, I'll let you guys know what I'm looking at, what I'm seeing. So, you know, as for you guys, if you guys see anything you guys are seeing that's running, I was not able to go through small cap. I was not able to go through my stuff as far as like small caps that are going. Any like, let me see. Let me pull up my scanner real quick. Come on. It's being a little slow. Which I like about it. know why I have that song in my head. It's so ridiculous. What you like about it? Why is so we have Pac W on the high, obviously. So we still, man, we got 5 minutes. Pac West, it's up on the highs, not doing too much. I don't expect it to. Why is Tilray on? Was there news with Tilray? Look at Tilray, guys. Did it report earnings? Oh, that's why. So we got to look at Tilray. I think you got to watch for this though. They might sell the news. I think this is a sell the news type of event for Tilray. Might catch a short. Look how small the weekly candles are. Wow. That's so crazy. That's ridiculous. Ooh, what you know, what you like about it? Sorry, guys. I have a Drake song stuck in my head. So, Tilray is on fire right this second. What you know about it? $2.08. $2.08. Hello. Hello. Gap fill. We have a huge gap here. So, what do? We let ourselves know where the gap is. 208. I'm going to look for a pullback right there. So see if we get support, Tilray gets support right there. I might look for a long, but you got to watch. This thing might get sold. TLRY. What is it? 193. So 190 long if holds. 190 long if holds, and we'll get up into the gap fill. But you got to watch your 100-day moving average at 217. 217 is going to be an area that's going to be tough to get through. It's got news, so, you know, anything can happen. Look how big that circle is on the freaking chart. That's crazy. What you think about it? So 215 is going to be the 200-day moving average, roughly. So look, it did. Look at that, guys. Look how it broke and retested it. So what are we going to look for if this thing holds? I'm going to look for a gap fill, and I'll probably just buy the shares. You know, I'll probably just look for the shares and see if we can ride this thing on up. All right. So that's one idea. Oh, my gosh. We just got a few minutes. ABVC is popping off right now. ABVC. See, I got distracted this morning. It's all good. It's only Wednesday. Yes, we are close to open. That's not really anything. We are close. I'm not sure. I'm not sure right now, buddy. What you like about it? XPEV. Dish is on the high. XPEV. XPEV. Did they report earnings? No, they didn't. Look at XPEV, guys. Wow. Shit.
BBAI, Big Bear AI, selected by.
All right, I got to get my stuff ready, guys. I can worry about XPEV later. Shit. Come on. So it's above all moving averages. Boom. Weekly. You have a 100-day up here at 2272. I'll actually start using the line. Come on. Hurry. Guys, good luck today. I will call it out as I start to see things play out. And yes. What you like about it? Come on. Busted. Double bottom right there. Boom. Get in. You have a little gap fill right here. There's a little gap fill right there. Come on. I might look for the short up here. All right, let's do it. Might be a little big. Let's go. All right, let's do it, guys. Let's do it. Good luck today. Boom. Let me get these straight. 50 seconds. Let's get it, gang. Let's get it. Don't worry about jumping right off the bell. Again, Tegan, you got profits, bro. Just, you know, let's think about taking those profits. I want to see if the Qs hold right here. We're going to pull back. See if we go long right off of this level right here. Pre-market lows on the SPY. There's your bounce, like we just said. There's the bounce. What do I want to be looking at? Microsoft. MSFT. That's the big one. Boom. It's game time, guys. It's a nice rejection there, guys. Still rejecting there. Just give it some time. Just give it a minute. Let them play with each other. Let them take each other's money. What you like about it? Sorry, I just have that shit in my head right now. Alright, so here's Microsoft. What did we say? We looked for the bounce back to get short. I was not ready. I wasn't ready. What you like about it? Let's see here. Boom. Now, the reason I take pre-market off sometimes, now again, the move happened pre-market, so maybe I should leave it on. Just, you know, my moving averages. Come on. This kind of messes with me. So, there was our tail. Alright. Just want to make sure I'm reading this right. Alright, NASDAQ's falling, guys. NASDAQ is falling. Where am I going to look for support on the NASDAQ? I'm going to look for support at 376. 376 should be our first line of support. All right, we'll see if we get a bounce back off of that area. 376 on the NASDAQ, on the Qs. Whoa. Whoa. Whoa, 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 whoa. Whoa there, Slick. Who the hell are you talking to? I'm trying to get there, buddy. I'm trying to get there. Just trying to get all my stuff set up. I was a little late getting squared up today. Just let things play out. Let it pick a direction. I want to see what we do down here at this level on 376.50. This thing's just tanking hard. All right, let's see. Let's see if we can. Gotta see that video. Sorry, guys. I'm just talking to myself, singing whatever. So there was our bounce. What do we do now? We want to see if pre-market lows like 377.50, 377.48, 377.40, 40. I mean, yeah, 377.45. So we haven't done anything, you know, at least in the SPY. We haven't done anything. You haven't moved. You're still stuck where you're at. So there's a rejection on Microsoft. Why am I on a 15-minute? Are you kidding me? I'm sorry for getting stuff done late today. I was up a little late last night. Now, I'm not... Nah, just hold on. I mean, you know, you can do what you want, buddy, but let the shakeouts be. Listen, what you got to learn is that this first part of the market, your options are still priced pretty high. So there's a break. There's a break. The Qs are weak, so your tech stocks are weak right now. So your tech stock is where we want to look to be short. Oh man, what's something that I have?
HBI, Haynes Brands,
Whoa. Abby, you're gonna have to hold on.
Activist investors said to be buying Haynes Brands. I'm hearing Ryan Cohen mentioned.
Look at Snap. So Snap's on the downside. Look at that. What'd I tell you, dude? Look at that. Perfect game plan. Right, Tegan? We gave you the game plan. We said look for the bounce up, it not be able to break through and reject it. All right? Beautiful. That's a low volume bounce right there. That's a low volume bounce. Beautiful low volume bounce right there. This is where I would look for the short. 1019 area. Abby, you're going to have to hold on. Please.
Hotel Bravo India, potential activist interest in HBI.
You're okay. All right, sit down. Please sit down. Please. Come on, sit down. Sit down. What are you doing? No. Sit down, please, baby. Baby, what are you doing? You're killing me, girlfriend. Oh my God. It's my cat, by the way. Sorry, guys. See, you're killing me, Turkey. You're killing me. This got what? Yeah, dude, you gotta be a professional about it, bro. You gotta wait for it to get to the level, let it pick a direction, and then you catch the momentum. That's how you make money. This got halted. Dish got halted. Is that what? Yeah, it did. Dish got halted. This is the area. Let's go, Tegan. Let's go. To the downside. What? Why is it to the downside? Is there news?
Haynes brand shares continuing to spike here now.
Stocks.
6.5% at the high.
All right. Well, That's 3 standard deviations. We gotta look. That's almost. Yeah, it's 3. That's a 3 standard deviation move. Let's look for the bounce back. Wow, man. I hope you took. I don't know if you got calls on those. That's crazy. That's crazy. Where are my next levels at? Shit. So I'm gonna be watching Dish. I'm gonna be watching Dish. All right. So here's a good area to see if you can get a bounce back to get short possibly. Right here is a gap. Haynes brand is spiking. Look, there's a gap fill right there. Come on. I don't want to miss Microsoft and all these others. There's a break of the 100-day. Boom. And I mean next you know, you just have this right here. Why is it so loud?
Volkswagen up 25% now, 19 to plus 15 cents. X-ray Papa Echo Victor.
Yeah. Yep. Yeah, it definitely got halted. Alright, so the Qs are bouncing. The Qs are putting in a bounce. I want to see if the Qs get back up to this 378 area. The SPY hasn't done anything. It's actually put in a flag. SPY's actually put in a flag here. It might actually start. What do you like about it? What are you doing? No turkey. No, you don't need that. What you like about it? There's not enough price action up here at all. It's really not. Dude.
10 a.m. Eastern time.
Oh my fucking god. I'm gonna get irritated, guys. I hate these fucking charts. Excuse my language. I do apologize. But I think I gotta find something different than this because this ain't doing anything for me. It's just screwing up. So look, if we get a bounce back, right? And we get a bounce back, like I said, on the Qs to 377.48, 377.50. We'll look for the short on the Qs there. If it can continue. Trying to bring up the SPY. My little baby girl is in the way, but it's all good. She said, I'm just a kiki, Dad. Just gotta love me. I do what I want. Jesus Christ, man. Again, don't be in a rush. Don't be in a rush. If you are, you know, I don't know what to tell you. You can't be in a rush. You have Powell in just in a few hours. This market could just sit here. Oh my fucking god, man. I just can't get myself right. So I'm looking for that to be resistance on the SPY. So there's our resistance right here, which is, what level is that? That will be resistance at 455. 455. Yep, 455. That'll be the area of resistance. And we'll have to look for the downside. See if we get down to 454. It's tough because, hold on, because we held, if the Dow goes up, so we held 454.51. Yeah, it's probably going to break. Look for the bounce. If we do, look for the bounce back, guys. Look for, like, if we break this level of 454.99, 455, so we've broken it. Look for the bounce back to 455. Alright, I'm going to look for the bounce back, or the pull back in the 455, see if I can get a long, and then I'll take that up into, like, it's a small range. It's not a good, 50. It's 50 cents. You know, got to see what the Dow's doing. It's not much. It's really not much at all. Yes. Let me get back to work. You're right. It is. What you like about it? It's lower volume. Let's see here. What have you looked at the options on that? What do they look like?
Aerojet Rocketdyne shares popping to the highs, $57.35. Alpha
Oh my
Juliet
God,
Delta,
yes.
AGRD.
Come on. I hate to be doing that in the mic. I do apologize.
HBI,
Look at it, find support right there, that area
Bravo India,
with
making more new highs now,
with support.
$5.51, up 13%.
Look at the volume coming in right at that gap fill.
Potential interest. Hotel Bravo India.
What you like about it? All right, so we got VWAP.
Boeing on their strong report.
Shit.
$227.70.
We got Boeing.
6.25%.
What do we have here?
Alpha.
So 1.6 million shares.
XPeng, XPEV, shares making new highs, approaching $20 now, up 29.5%.
XPeng is up 29.
Volkswagen, $700 million. X-Ray Papa Echo Victor, XPEV. $20 now on XPeng, $20.19 now, up 31.5%. XPEV.
Fuck me. Look at it just go. Look at this thing go. Unbelievable. This thing's just going to town. Dude, come on. I don't like not being ready for the day. I don't like it. I really don't. It's all good. I haven't really seen anything that's really caught my attention. Again, so there's a pullback off of that. You do have a gap fill. I would just watch it after 21. I don't think there's much room left on this trade. If you're not already in like XPEV, I wouldn't even. It's already up 30%. You know. What you like about it? Oh shit, Meta. Let's go to Meta. So here comes Tesla coming into yesterday's close. See if you get a rejection there.
Seeing the weekly $21 calls trading now. X-Ray Papa Echo Victor.
Let's see if it gets here.
XPeng making new highs. $20.74 on XPeng. XPEV. UNP, Union Pacific, making new highs following their CEO appointment, management changes, and their earnings report now up 11.3% on November Papa at the high.
What you like about it? So it looks like we're trying to find that area to be resistance now. This might be a long setup.
GD CEO estimates total revenue now expected up 1.2 billion to 42.45 billion.
You're okay,
for
baby.
2023, but margins will shrink 40 basis points versus prior guidance.
So it broke up through the level. I think you had a lot of shorts take profits on this BABA trade. that it you had a lot of people take profits on this BABA, and that's why you might get another little short squeeze there. But that's the area that we're looking to see. It might just consolidate. Let's go to Meta. Why do I have the... What the fuck is going on, man? I sit here, I got the damn 15-minute chart on the SPY up. What? I'm giving myself a migraine. Giving myself a migraine. Which I like about it.
EBOC Teladoc at the highs on heavy volume following their earnings report yesterday. Up almost 17% now, 26.68 for Tango Delta Oscar Charlie.
So we said 300 on Meta. Long the 305, it broke 300. It's weak. It's weak. Oh. Hey. Yeah, it looked like it was popping its head up for a run. So what do? We look for 300 to be resistance now? I'm not sure. NASDAQ, is the NASDAQ weak? The NASDAQ held. I feel like, look at the volume today, actually, guys. The volume is not bad at all.
Spiking to the highs, $13.04. November India Oscar.
Yeah, we got decent volume today.
9.5% NIO.
So I'm going to be watching that. Now the Qs are coming up to an area of resistance. Let's see if the Qs can't break 377.45 and they start falling. Alright, so the Qs are starting to turn. That was a hold of yesterday's highs. What you like about it? SFT. I need to hurry up. What is up with these time frames? I'm like just wondering, why are they changing? That's it. I'm done. Just gotta be patient. Patiently waiting. Yesterday I was already in and taking pieces out on a trade yesterday. You know, sometimes it's like that, guys. Sometimes it's like that. We have a big couple days coming up. Huge. We have should be a crazy afternoon. And then we have even crazier, I think. I think it's going to be even crazier. You know, coming at the later here in the week when we get PCE. That's inflation data, you know, that the Fed uses. All right, so what are we going to do? We're going to go up and test yesterday's close. Looks like that's what you might want to do. We're going to run a test at 378.75. Long on pullbacks, I shall be. Is this why you wait for direction? Okay. Doesn't mean it's going to happen, but I like the fact that I think we're going to get a pullback and then test yesterday's close. Now that's the Qs, mind you. Mind you, that's the Qs. So here we go. We're getting our pullback. It is low volume. It's not low volume, but it's high volume.
Max linear shares moving off the lows here now. 25.97 down about 23% after.
I mean, we still have. So I'm also seeing a bit of resistance. Like right at 378. 378 right here could be a little bit of a tough area to get through. Come on. What's you like about it? Alright, so what did we say? I'm sorry, Bingo. I know, it's a tough morning. Things are kind of just, a little all over the place, honestly. It's like there's so much, it's like, where do you get your action at? Where do you... 377.99, 380 on the Qs is the spot I'm watching. Because if we break that, then I think we do test yesterday's close. So here comes the pullback. Alright, so there's the pullback in the Qs. Let's see if this sticks. See if that sticks. See if that's a buyable dip. It might be a failed breakout. Look at if the volume is a...
Dow Jones reporting 7 car companies jointly investing in EV charging stations. Investments totaling at least $1 billion. Automakers aim to add thousands of EV chargers in the U.S.
I got so much stuff going on, guys. There's so much stuff going on. I still want to see if we can test yesterday's close. I really do. Nvidia. What did we say? 457.50. Short. Yeah, 449 might be the area for for Nvidia. If this sell-off really gets started. So look, there goes the Qs. I had a feeling, guys, we could get this thing, get some upside on it. I gotta find something. Gotta find something. Jesus fucking Christ. Come on. Gotta use the restroom real quick. So the SPY's pulling back.
XPEV, XPeng. More new highs now, 21.17.
That's so crazy. It's still going. Still going. That's so insane. It's still going. XPEV.
New home sales of 697,000.
Feels like
Consensus 725,000.
there it goes, guys. I told you the Qs could be going to the upside here. I want to see if it can get up to yesterday's close. I really do. This is going to be the area right now where it's rejecting from. It's like, I'd say it's like, yeah, 378. 378 on the money is the area. $378.
Blackboard launches refresh partner program to drive innovation and customer impact. That's BLKB.
Please, baby. Stop. Hey. It's okay. If you want to clean and take a bath, then hop down. So yesterday's close is up here. Let's see if we get there. I know, you gotta jump down. You gotta knock everything off of my desk. I know, sweet girl. I know. I'm gonna go use the restroom real quick, guys. I'm gonna look to see if we... This was the plan. Remember, I said we're gonna pull up and see if we can come into resistance and see what happens. Which, boom. Look at the Dow falling. I don't know why the Dow would be falling. IWM is up, and the SPY I think should be flat. Just by looking at them, yeah, it's flat. There is a small uptrend. Of course, I gotta go click something else. Fuck. Alright, let me use the restroom real quick. I'll be right back. Alright, there's downside on the SPY. Can I... Come on, give me my Microsoft. I want my fucking Microsoft and I want it now. MSFT. So we're getting a pullback. There we go. We're coming into the area of resistance. Minute. Come on. Look at the reversal. This is what you don't want to get caught in. The up and down sideways stuff. You know, don't get caught in it. Oh, shoot.
Intraday high. Airwinds Technologies, Alpha Whiskey, India, November.
Abby, please. Come on, girlfriend. I don't know whether to leave pre-market on or not. I'm really mixed up. I don't have anything that is really... Let me see. ENVX, ENVX. I mean, it's definitely at a pivot top. I'd have to do some research on it. You know, I can't really tell you what to do, but I don't know if you have a gain in this. If you do have a gain, I would so I'd have to find out what it is that they do, Bingo. If they're an energy company, if they're, let's see, CJ Rogers, CEO, NVX. Oh, Innovix. Is this biotech? I've heard of this. Look, there goes Baba. I'm sorry. I'll bring this back up. Daily charts above all moving averages. Weekly chart. Boom. Oh, this is a fairly new stock too. I would do my research on it. Right now, it looks like it's putting in a lower high. Look, high, 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 and then maybe it sells back off again. It's hard to say. Does it sell back and then start, moving to the upside for you? I'd watch that $15 area as a level to keep. It's kind of double top. It's like really 15.50 to 15. I'd probably have my stop loss at like 15 or 14. I don't know. I'd give it it's hard to say. I'd give it at least $1, $1.50. Looks like it's trying to pull back though. Looks like there's a lot of sellers up here. You'll have to see if you have any shares that are unlocking and all that stuff. I'll go over it in a little bit. But anytime, man. Anytime, buddy. SFT. What did they just call out? Oh, Baba. So there goes Microsoft. I feel like that's lower volume though. Am I wrong? So let's see here. This volume decreasing, I don't like it. It's a weird day. Look at the SPY. The SPY is sideways. The SPY hasn't moved an inch. It's not surprising either. Feels like the Nasdaq's the leader today. The Nasdaq is it's down, but it's like, I don't know. I have to look at the Dow and everything also. So the Nasdaq's holding support there. Nasdaq is holding support. There was Google, Boeing, which I don't like about it. Alright, I'll be right back. I gotta use the restroom real quick. I'm gonna keep my eyes on the NASDAQ, and then I'll keep my own just like AMD. See if I can just get a small trade in, something before we get into the Fed meeting. But give me 1 second. The Qs, they're struggling. Got some volume coming in. All right. Any moves? As soon as I do, buddy, I'll let you know. I just had to take a leak real quick. But no, let me see. Why is it a fucking 3-minute chart?
The NTC halted on a circuit breaker, Benetech. November Tango Charlie.
Let's see here. So look at it's just we're sitting sideways, guys. We're sitting sideways. Unless you guys have something that's moving that I don't see. Oh, is it gonna give it to me? I just don't know how many people are gonna be a seller of that. Alright, so they're giving it back. Alright, so we're gonna it looks like we're wanting to run back in and test this level.
Jeffrey says a new CEO announcement marks a step in the right direction for the gap.
So I'm really curious if we can get Does anyone see anything with momentum besides XPEV? XPEV I feel like is already taken off on us and that's too late.
January 140 call trading. Romeo Oscar Kilo Uniform. Roku shares is near the high 72.73 now, 3%.
Sounds like Roku's taken off. Yep. Alright, let's do it. We might have something here. Look, man, that thing fell right into the support zone. Right into it. Come on. You can come in.
PRST saw that activity. Wall Street Journal with an article earlier, can AI replace humans? We went to the fast food drive-through to find out. That's Presto. PRST. That share's getting a pop here.
You had to be looking at that. I've been on. Yeah, that's good, man. But nice. Yeah, they did move. I just seen Roku that it's got some momentum towards it. It looks like it's coming into some resistance. Um,
The will hold it on a circuit breaker.
this little girl's being needy today. The SPY is literally sideways, which is all good. We expected this, but shit. I'm sorry, guys. I didn't have it on. Yeah, sorry, guys. I'm sorry. Yeah, the little. I had to go open the window for. All right, you guys notice this volume that's coming in right now? Look how this volume's getting heavier, and on a 5-minute chart, it couldn't hold. Watch if this level cannot hold. I feel like it's turning it into resistance now. Look at the spike in volume. Once it broke above, if it's unable to hold it. Look at it. Shot up. It's coming back down. It's not able to hold this level, I feel like. Watch level 2. If you guys can't see it, let me spread it out for you. Let me make it smaller for you. Maybe you can see that. No, I don't have a Discord server. So there you go. There's the rejection on Roku. Let's see it. Look at the volume starting to come in. But yeah, no, I don't have. Man, you guys can't see the time in sales either. Hold on. Nasdaq's curling back around. It failed to go green. Where it's like strike. Nasdaq's sitting sideways. Sitting sideways. What's in the days? Let me see. Look, ABVC looks like it's trying to get some upside to it. ABVC, BDRX, reverse split. I just don't know how Roku. If anybody's ever had a Roku, um, I don't know. Maybe it all depends, but I just don't know about Roku anymore. Their products aren't that great. It all depends. Maybe I'm wrong, but oh my gosh, this girl is just. Of course, today she's got to be. Look, there we go. I sort of got short Roku up there. That's what I was hinting at. There's a bounce. Whoa, look at the SPY reversing. What's going on? Is there data? Look at that. You guys see that? Look at the SPY. Look at that tail that came down. This one tail just flushed, and then it flipped back in reverse. This candle is the size of the day's range too. At that, so you gotta watch for those shakeouts. You can't just get caught slipping. They're gonna take your money. Wait for it to pick the direction. Actually, you know what I see? You guys see this? I don't know what's going on with my feet. Look at that. Look at that pennant. Look at that beautiful old pennant. Oh my God. Abby, what do you need? You got food. I don't know why she's just yelling this morning. I hope she's alright. Look, the SPY does not want to pick a direction. 455, you're short, and 454, 50, you're long. It's literally a 50-cent range right now. I want to look to short Roku. I want to bounce back up to 72. I'm going to be patient though because there's a little bit of support here.
Coming up in 5 minutes, crude a draw of 2.4 million barrels expected. Distillates a draw of 75.
Let me go make sure she hasn't. Look at that quick rejection off of it. 3,000 sell or buy side order. You guys can't see the time in sales. So we got there's some big orders to the buy side. I'm trying to see if, like, where is the brick wall of selling? Right now the buyers are winning. So if you're reading the time in sales, if I can bring it over for you. And again, this thing isn't trading that many shares either. So that's a low volume bounce. Let's see if we start getting these sellers to step in here and start bringing this thing down right now. Watch, see if this thing starts turning red. You got more red than you do green right now. All right, 72, 46, 38. There's a 10-cent spread. See if it starts widening. It is wide or tightening up. 52 bid, 54 ask. I was like, you right there. You got like a wide spread, and the spread came back in. It got a lot tighter. I want to see the tape speed up. I need something to happen here. Whether they're waiting for the bounce higher, which is probably the case. It's still holding the 9 EMA. Do a bunch of orders start to come into the buy side right now and get a bounce off of this to break back through the level, or do we fall out of bed? Highest volume of the day is to the downside. The buyers are just stepping in again, and there's two 1,000 share buy orders that just got filled. I'm not seeing, look, another 1,200 to the buy side. I'm not seeing anything over 1,000 shares to the sell side getting filled yet. I have not seen it. Doesn't mean it hasn't taken place, but I haven't seen it. Look, buying again. If I had to tell you, I think this Roku level is going to break. Look, 1,300. They just keep, it just keeps getting floated up. 69, 64. 74, 68, so it got real wide there. 72, 64, 71, 69. There's a third. Look, there's a 14,600 sell order that just went through. They're up here. They're still sitting up here. That's a big order. I might go ahead and see how it's flipped. It's 50-50. It's red and green. I'm not sure. I'm watching Roku right now to the downside. I want to see if Roku rejects this level, or if the shorts get shaken out. I want to wait and give myself. I'll look it up though. Look at that brick wall of sellers. They're just hanging in there. I feel like it's gonna break, even though you have a. This is why I don't like Roku and stuff like that. It's like kind of. They can be funny to trade. Oh, man. Let's look at Tesla. Roku's boring me.
Crude, a draw of 600,000. Gasoline, a draw of 786,000. Distillates, a draw of 245,000. Again, crude, draw of 600,000.
So, Tegan, where would your profits be at?
2.348 billion.
You got some volume there. Where would your take profits be at if you were long Tesla? I just had to feed the little girl. You could get a few dollars out of Tesla. You got a lot of selling up here. Let's see. Let me see. Let's get down to business. Let's see. Let's get a Roku. There goes a SPY. Don't fall for it though, because as soon as it gets down there, it gets bought right back up. Nvidia. Yeah, it was, man. It was. I didn't even see the news or anything for it. It's just like, just so unexpected that, uh, that like the electric vehicles went off like they did. It's still going. You gotta be kidding me. Got to the targets. That's crazy, bro. It was. Is that a failed breakout on the SPY? That's what it looks like to me. Looks like the SPY wants to start rolling itself back over. Kind of wondering if you get some dip buyers in there. Alright, so Microsoft put in a new low. Fuck, I didn't catch that. Is that the retest right there for the SPY to break down lower? We will find out. Damn it, I missed that one. Unbelievable. Fuck. The NASDAQ has not gone anywhere at all. Look where we opened on the SPY. We opened at 454.47 and we're trading at 454.61. We're 10-15 cents higher than where we opened. It's got the volume. It's got to hold this area. It breaks down. Oh, Tegan, yeah, that's like it's got volume. It's got buy side volume. Just know where your take profits are going to be. I mean, what's your target? Because you know this very well turning it into support now. You know what? 269.75, 270. Is that a profit target? You know, a nice $3-4 move. It's not bad. Let's just hope the markets don't fall out of bed right here. Let's hope they don't. I don't think they will. MACD's pretty low. RSI is still low. But they could. Look, they're starting to try to turn it into resistance now. Now we're closing down here. All these candles you had closed like right back up above that level. All right, here we go. Looks like the market is attempting to reverse itself. 270 strike. Nice. Yeah, man, that's where I would, if I were to go long this, that's what I would be, that's the same thing I would do. And when it got to 270, I'm out. I got my money, then I wait for Powell. I wait for the volatility. I want you to see something. Look. Look at the buy side volume. It's decreasing. Oh, okay. I thought you were long. I was like, okay. I mean, I can see it. Well, 261 to 267. I guess that is a decent move, right? It is a $6 move. But this this volume to the upside, the buy side volume is just decreasing. Level 2's got some speed to it as well. Or and time and sales, I'm sorry. I wish I knew what was up with this girl today. I know you're tired. I know you want me to pick you up. I know you want me to pet you. I know. I know. Man. I might watch it with you, Tegan. Boom, send it. Send it down. Keep it up. Look at that 4,000 sell order up there. And well, there's 4,000 to the buy side right back at him. So. What are the Qs? Nah, man, give it time. Look for the failed breakdown or the breakdown out of this flag. The volume is to the upside. Volume's to the upside, but that doesn't mean that the sell can't come back in. And the thing is that it's already moved $6. It's already moved $6. It's should revert back to the mean. See what? Watch the Qs. What are the Qs doing? Looks like the Qs are rolling themselves over. Not by much. They're not rolling themselves over, but... Excuse me. You gotta watch because down here... I wonder if you start getting some buying to step in. That's exactly what I was going to say. I'm curious if we get some buying that outweighs the sell side. We'll see. It just wouldn't surprise me. I've been doing this for so long. It would not surprise me if we start to get, not on Tesla, but like the Qs. Oh, we held the level. Watch the shorts start getting out on the Qs. What's that? IWM. IWM is falling. Come on. Oh, there it goes. It's hesitating. Looks like a nice double top on the Dow. He said Vodafone. Is that some jail shit? Vodafone? What the hell is going on here? All right, so there's the breakdown on Tesla. You broke down out of the flag. Let's see if you can break her down. Break a brick down. Right here on Tesla. Is that a failed breakdown? And it comes back up to find support and rally. We'll find out. There we go. That's where it should be. That's why. There's the short. Right now would be the time that I'm going to get short Tesla if I were to get short it. Oh, man. Fuck. Just, you see what I'm seeing in the NASDAQ? It looks like it's trying to, like, hold itself up right here. Just can't rush. I gotta be patient. I'm going to actually probably put a Tesla short on myself. Should you get out of your calls? I don't know what calls you're in. Alright, you gotta do what you gotta do, buddy. If you don't know how to trade, or if you don't know price action or how to read the tape, you know, we can teach you. We can teach you how to do it. We can teach you how to make your own decisions. And know that, you know, you're on the right side of the probabilities. 270 strike Tesla. Oh, I thought you were short. I'm sorry. I thought you were short. I don't know, buddy, because it could just hold. Like, look at this. So, there's two different things I see here, right? There's two different things I see. So, I see this. Look at this. I see this. And that. It's like I see two different flags going on right here. You got this one. You got the bigger time frame. Look at it bounce right off of that line. So that tells me shit. Come on. Fuck. There it was, guys. That was a freebie. Yeah, exactly, bingo. 1 minute bearish reversal on Tesla, exactly. Exactly. Fuck, I missed it. I'm sitting here drawing, you know. Here, see if we can get one more bounce back. So let's see if we can get a bounce back here. I don't know. See, even that. See, it's there too. Fuck. Damn it. Wow. Look at the gap down on EMPH, guys. I haven't played this thing in forever. Let's go back to Tesla. That was a nice short. It was in resistance. Yeah, Tegan, you can't buy the highs, man. You got to learn. If you don't, trading doesn't have to be tough. I'm sitting here drawing lines, and I should have just taken the position. Let's see where we can find bounce backs. If a stock is truly strong, it should give us another opportunity. So maybe, fuck, man, it's just gonna fall out of bed. I'm going to give this a minute. I want to see if I can get another entry on this. Nice. I'm with you, bingo. I'm with you. Right here, prior day's high, or initial high. Look at this bounce. 264.32. 265. That's a good area. There's your pivot high with yesterday's close. I'm praying I can get a bounce back. I don't know if I'm going to get it though. All right, I ended up getting there on that bounce back to that resistance, hopefully resistance level. I'm going to give it a minute. I'm in Tesla short also. There we go. We get some follow through there. Come on. Just let her rip, Tater Chip. She might start to bounce back up here. Fuck, I should have took a piece off right there on that extension. I took a piece off there, guys. I got a nice fill, too. I took a piece off right there, right into that support, just in case it wants to turn itself. Shit. See it fighting? It should break it if it does. There you go. Good shit, bingo. I'm a hold for a bounce and get out. I would. See, there was the bounce. I was watching that area right there. Look at the increased volume there, too. Look, they're fighting this thing, man. Buyers are like, yeah, I want to bounce back to test the flag again. And it's not going to give it to them. Look, the time in sales is mixed. So what level is this? I'm just going to put that. Damn it, it wouldn't let me do it. I'm just going to put the Fibonacci thing here because that's all I have. Oh, I can't. Shit. So, you know, you have your penny going on. Look at the volume here, guys. And where it came from was on the buy side as well. So sometimes when you see these candles, it closes red, but there's a lot of buying in there. That's why I took it off right in front of that level. I got a decent fill. Because you may get another little bounce back attempt to test the 9 EMA. It's right at the support level. What else do we have? What else do we have? What else do we have? You got your 23.6 Fibonacci right there. She's just going to break. She's just going to break. The NASDAQ's rolling over. Nice job, guys. You target. Hey, that's your target. Stick to your targets. Nice. Nice job, guys. Lock in those profits before later on today. We lock them in. We got more. You know, we have the right. We earn the right to take the risk. That's what I like to say. You know, there's your test of yesterday's close. Great job. Nice trade there. Nice trade. I just bought 10 contracts, and as soon as I hit that pivot low, I was out. I think I got damn near $15 each contract. You know, it's not much, but still, for a $1.50 move, you know. I think I got in at 60, and then look, here comes the follow through. It's not even going to give you a bounce back. Look at the increase in volume. It's not even going to give you the bounce back. The momentum's just going to take a hold of it. Wow, what a breakdown, man. Wow. I'm going to leave it up for you guys. I just want to see what the 3-minute chart looks like. 2-minute chart. Nice job, guys. Beautiful trade, guys. I didn't plan on trading Tesla today either. That was nice. That was a nice trade. That was beautiful. That was I think we all ate on that one. We all got to eat that one. God damn it. Teague, I'm rooting for you for a bounce back, buddy. I think it would be nice to get a bounce back up in here to this 266.15 area. And the increase in volume, it's just giving up. This thing's weak. It's not even going to give you another chance. I'm sorry, man. I'm sorry you ate it. I'm sorry, Teague. Oh my God! Look at that follow through. Oh, I went with the
MNK.
I went with the 260 actually. I went with the 260 put because I figured we'd give back what it did today, and it's around 261. Yesterday it was at 255. I figured 260. I'm $5 away. I get $1, $2. You know what I mean? I was in the 260 puts. Dude, this thing is falling out of bed right now. I love Tesla. I really do. I do too. Bingo, I'm with you. I think we get a bounce back to retest the support level up here. Doesn't mean we have to. You could just shit the bed. You could just fall out of bed. You know, but so with this move, do you guys use Thinkorswim? So I'd like to be able to have standard deviation like lines on here, like 1, 2, 3, and 4, like to the upside and downside. But I don't know how to do it on here. I really don't. I don't. I'll have to look it up. He said I ate a rock. I'm so sorry, Tegan. So sorry, bro. And I could see why somebody would go long, especially like with a 3-minute or 1-minute. Like you get this buy side volume here that's steady. You're holding support, but the thing is you got resistance right up here. It's like the reason I asked you is like, where's your stop loss, and where's your take profit? And like that was a sign to say, like, is that trade worth the risk to reward? You know, if you're talking about coming into resistance up here at 269, and we're at 267, 8.9, so you're saying $2. Okay, yeah, I just, you know what I mean, I care, you know what I mean, I just want you to eat. I just want you to eat. So, yeah, that's why I do that. Let's see here. Why am I on a 5-minute over there? There goes a SPY falling out of bed. That's a failed breakout if I've ever seen one. It looked a little sus. This candle was a little sus, like it came down to hold it and then reversed, and then it just couldn't get above this level. I wish I would have wrote it down. Let's see. So what are we gonna look for? What I'm gonna look for is where are we gonna find where do we think we can find support on the SPY? Sorry, I keep messing this up. Dude, this Tesla thing's doing it. You still in it, Bingo? There was look at the entry right at the 9 EMA when we finally got it. They piled back in short.
VA Boeing executive says still confident in the regulatory process for the 777X. That is VA Boeing.
This hurts. I can still be holding almost out, letting more run. Good. That's what it is. There you go, bro. That's what's up. I'm glad to see you. You know what I mean? You're doing your thing, bro. I had to take what I didn't have to, but I was just like, maybe I should have gave it time. You know, it is what it is. Damn right. Great job, dude. Great job. Broke yesterday's close. Now it's reversing the whole move. I mean, we can probably expect at least this. You know what I mean? This is the move we got. We can probably expect it back over here. Back on the opposite side. Not sure where, you're obviously going to have your little pullbacks and stuff, but,
Salisbury Bancorp out with their earnings and the outlook.
So,
59 cents in earnings for SAL.
just taking it right back. Look, it's starting to turn that area into resistance right now, too. Or looked like it wanted to. Damn, look, they hit it again. They were just waiting at the 9 EMA, and they didn't care that it was already down $3 from the highs. They didn't care. They still went short at the 9, at this yellow EMA. Look at the SPY. SPY's falling out of bed. So I want to see if we can get a reversal when we get Powell on. Are we going to give back yesterday's day? Looks like we're giving yesterday's day back. Tells us all we need to know. Man. I doubt it would give it to me, but I would love a bounce back to get back into this thing short. Maybe that's when we get it. Is you guys know how like 12 o'clock, 12:30, going into 1 o'clock, we start ripping it back up. Going right back to where we were. Not sure if we get it this time. Not sure. There's the bounce on Tesla. So the SPY is... Why am I on the 3 minute? Why am I on the 3 minute? 5 minute. Nice. That's good though, Teague. That's good, man. You're cutting your you're stopping out. That's good. That's how you manage your risk and just admit when you're wrong. I gotta say, that was a beautiful trade. That was a beautiful trade. We gotta give it up for Teague. I'm still waiting for see what we get this afternoon. This is you guys see these candles? See how they're nice and tight? We could just get a continuation for the most part to the downside. What's our levels? Those candlesticks that are nice and tight to one another, that tells a story there. That's a sign of a continuation type of day. Let me look at the where's all my... So fold is up. Come on. Wow, that's crazy. So the volume is ironically to the upside. 3. Okay, yeah, that would be the 20 million. 0. Tick. That looks like such a big move, but it's really only like like $2. Remember, like in 2020 with CPI, we were getting like that was a candle, like $1 a candle. Oh man. All right, I'm gonna find out where I think we go. I'm gonna come up with a target to both sides of the aisle. Let me move this. Great job, guys. That was a. I would have never traded Tesla today. I owe it up to Teague. If we guys, I wonder if we're going to try and come in and test the 372. I might, if we get a bounce back into Powell, I'm going to look to get 372 puts on the Qs. I may try it. I may try it. I don't know how much they're going for, but I feel like 371, 370. This double top, 371. Really, it's like 371 and then 371.88 is what I see. That's where I wouldn't mind getting, so some downside risk. I feel like if we're going to get it, I feel like that's the area we can get it. No. Oh shit. No. Hold up. I thought it almost happened to me again. I thought I never got out of Tesla. I was like, okay, word. The bird is the word. That happened to me like a while ago, and I got lucky because I got like a ton of follow through. And I'm looking down, I'm like, oh shit, I never got out. It never filled. Oh no. That's not what I want to do. I'm just trying to get my targets for like both sides of it. So that was a nice rejection. We came up and hit that pivot low on the Qs at 380 and then just fell out of bed. We hit it yesterday. And then downside came in today. I can't see your comments at the moment, but just give me 1 second. So I'm going to look to see if maybe even if we get... I mean, we could even see 370, 50. 370, 50. Wouldn't surprise me. But I am going to use 372. Like 372.50 to 371. That whole area right there where the double top is. Oh shit, let me put up 2 hour. See, that's what happens when we're patient, guys. You know what I mean? That's what we get for being patient. We just got paid for being patient. We let it do what it needs to do, and we take We take our spots. We hit our entries. We nail them. Great job, Bingo. That was a nice trade, bro. I could have held on a little longer, but just didn't want to. I just wanted to get some extra money under my belt to manage my risk for later. I could have held on to it. We got a few more days, but I had no, looking back now, there was no real reason for me to sell. I should have just teared out of it, but it paid me pretty decent. So I said, you know what, let me just go ahead and take it. Again, I do have a lot that I do get trades where I will take my follow through on them. And, because ultimately for you to be, to last at this and, sorry, this guy's talking. You got to be able to make more than you lose. That's number one. And a lot more than you lose. Let's see. 2 hours. Let's look at the 4 hour. So that's my target, guys. I'm going to look for this prior double top and see if we can get to it on the Qs if something happens here at this Fed meeting. I feel like the level's right where we're at now. Right where we're trading at. It's like 370, 375.85 or something like that. Look, it's coming down. 375.71. Let's go back here. Oh, yeah, that's what I was just talking about. I want to see if we can get back down on the Qs. So we just bounced off of. So if this 375.50, where we're at now, 375.50, if it holds. All right, see if you bounce back to the low of the day where we opened. Or, see if we turn in 376 rejection on the Qs. 376 rejection on the Qs. Let's see if we do that. And your 9 EMA is right there on the 3 minute also. With pre-market and after hours added into it, mind you. So it may be a little different if you have pre-market or don't have pre-market. But that is my 376 upside target. See if we can turn it into resistance or we go back up to 376.50 low of day and then turn it into resistance. So I'll show you right here. Let me pull it up here. It's a nice flag for Tesla. Still weak, I think. That was a beautiful trade, man. I can't believe we got the follow-through extension on that. $376 is going to be the first area you want to watch for the Qs to see if it bounces back and rejects. All right, look. Why is it so high? It's not going to let me. I'm watching right here, buddy. This day right here. I'm watching this area right there. It's a little different. Yeah, I'm watching this area right here. Right here. I want to see if it turns it into resistance. Alright, so at this 9 EMA, I want to see if it turns it into resistance. There we go. Oh, shit. Yeah, it was. That's good stuff, bro. Just get that Tesla stuff right back. Um, yup, looks like we'll get a bounce. Man, the Qs are so weak. And they have all the right in the world to be weak too. I'm glad you were able to get that. This is why it helps, man, being in a chat with people, because it helps like figuring out a game plan for something. You know, I think we were all in agreement that a nice short up here at this resistance area, you know, and I don't think I'd have traded Tesla if you guys weren't here. So I got to thank you guys just as much. You know, this was a nice area to get short. You know, right off of this pivot, right off of this area. You know, look at that. It's beautiful. Matter of fact, maybe I should move that level down, but not really, because there's the open, but it's nice. That was a nice trade right there, right off 269.99. Now we might just start consolidating. What time is it? It's still 11. Let's see here. And what are we? So we're down all 75 basis points. That was yesterday's high. Get rid of that. Remove.
U.S. Securities and Exchange Commission votes 3-2 to adopt a cyber attack reporting rule. New rule requires disclosure of cyber intrusions within 4 days of becoming their material to investors.
So the SEC says that they have to report cybersecurity. I guess if a company has something like they had a cybersecurity break-in or something, that they need to report it in 4 or 5 days, or 4 days, within 4 days. You know, there's so many things about trading that can actually, like, kind of mess you up. Like, let's say, like, when I was first trading, or like, I would use like the 3 minute. I would use like a 3 minute. I would use 3 minute candles, and then I would change to like 1 minute, and then that change from 1 minute was, you know, it took a little bit to get used to. You couldn't change right, trade right. Just going back and forth on different time frames and learning them. You know, if you're not used to one or something, and playing, I feel like that trade was a lot easier for me to take on the 1 minute and hold through the breakdown. I forget. Oh yeah, because it broke down. I didn't get the entry until here, off the test of it. Unfortunately, because I was trying to bring it up and I wasn't able to get in up here, off of the breakdown. This retest up here and breakdown, but time frames, you know, people don't really think. There's so much about trading that people don't like talk about, like just getting your sleep, or like even caffeine, like a lot of stuff. Trading on different time frames. It's weird, but you'll notice on days like where you just, you know, it's where it works and it doesn't. I'm probably going to go make some coffee real quick. I thought I had some Red Bull in the fridge, but I didn't. So everything just got a rally and we pulled off of it. Looks like we're sinking, guys. We got to start paying attention to this. I mean, look at Amazon. It's back down on its lows. Where's Google? You know, Google's up on its highs. It's probably the only thing that's up on its highs right now. MSFT. Microsoft's on its lows. So a lot of the stuff played out, you know. It didn't quite get to the target, but got close. You know, we said we wanted to be short up here. I don't know if you can see it, but there's two lines here. I thought there was. I thought I put one there. I guess I didn't. And look at that. That was the target. The 50-day moving average. You know, it put in a double top. 341.50. That's crazy. That's so crazy. That's literally the target. Wow. So we did it. We hit the 50-day moving average. The analysis was right.
Now, it gets a 2-year payback, but the upfront cost is this quarter, and now we implement it. We're about 60% implemented, so that payback
I'm going to be back in like 10, 15 minutes. I'm just going to go,
two other things that we did in the quarter.
I'm going to go make some
We
coffee.
reached the last agreement on
And,
paid sick leave with all of our
and I'm going to
craft.
come back
And
and
that's
come up
real
with a game
cost. It's
plan
wonderful
for the
benefit
rest of
for
the
our
day
employees. They get the
before we
opportunity
get
when they're sick,
going with this Fed
or
meeting.
their family members are sick, in price, inflation. And then the other agreement we reached, which is really historic, was with all of our engineers on the transportation side. We have a schedule now, 11 and 4. And what that gives our engineers is predictable work schedules. They love that. It's life-changing. For us, what it gives us is predictable workforce, so that when we call somebody to take a train, they're available. We talked about how that adds cost. We aren't yet ready to be able to unpack exactly what the productivity and service offsets are, although we're confident they exist.
Yeah, you and I have had many conversations about labor and workforce. In terms of the volumes picture, weaker consumer markets, inflation, two things that you talked about contributing to some of that weakness.
She's
there.
so sexy.
When do we start to see volumes turn a corner? And
She's
perhaps
so beautiful.
just as
Let me
importantly,
reface that.
if
She's
volumes
beautiful.
have been softer, what does that
She's
mean
such a
in
nerd,
terms
too.
of future pricing?
Yeah, notably, Morgan, the real soft areas of the economy for us were in lumber, housing, consumer goods, so packaging, and also just in the intermodal product, whether it's international intermodal or domestic. So that's all kind of retail-oriented, retail-facing product. What we need are consumers to get comfortable again in their reallocation of their dollars between service and goods, and then start buying goods again. We also need consumers to get used to the interest rate environment so that homeowners start being more comfortable selling homes and then trading up, right? We need more inventory of existing homes, and we need starts to increase. I think that all happens. When it happens is the big question mark. The other good part about looking forward, Morgan, is the industrial economy is poised to be very strong. The United States is positioned very competitively in the world markets. And I think with reshoring, nearshoring, and supply chain reformulation, it's going to be a very good thing for the United States.
Interesting. We've seen the shift in container volumes. You mentioned intermodal from West Coast ports increasingly to East Coast. Is this a secular shift, or is there a point at which it reverses?
Yeah, it has been in part a secular shift. If you go over the last 2 decades, every time there's labor disruption on the West Coast ports, some part of the share goes to the east or alternatives, and a portion comes back, but it doesn't all come back. And so I think to a degree there has been a little bit of market share lost again, but much of what lands on the West Coast wants to land on the West Coast. It's a gigantic market in the LA basin and all up and down the West Coast, and it makes a lot of sense to land there and bring it inland into the middle of the country. I anticipate that's going to continue. We are providing new service product with an eye towards where else it might go. We've got a new service product on the Gulf Coast in Houston, and we'll continue that work with our partners in the East Coast as well.
Lance, final question for you. What's next?
First things, make sure this transition is smooth and successful. So all my attention's on that. Got to run through the tape. And then it's time to take a little time with my wife and my family and live the life that we can enjoy now. And I'll worry about what's next, bigger than that half a year from now.
All right, Lance Fritz, the outgoing CEO of Union Pacific. Great to speak with you today. As always, thanks for joining us.
Thank you, Morgan.
Guys, the stock's up 10% right now. Big move for the railroad, and it really is very much centered on the succession news and Jim Vena, who, as I mentioned in that interview, a known entity not only in the rail industry but on Wall Street. He's a board member at FedEx, for example. He has worked at Union Pacific in the past, as Fritz just mentioned, had been a contender at Canadian National when they were looking for a CEO not that long ago as well, and really very much seen as one of the key disciples, if you will, or proteges of Hunter Harrison, who pioneered precision scheduled railroading.
Morgan, I'm curious as to the presence of the activists here and what influence they had in this. and what your sense is, and what their problem was overall. Like, what was the issues that they had raised?
The issues, and this goes back to a lot of this sort of spilled out into the public earlier this year, around February timeframe, was this sense that, according to this longtime stakeholder who had at the time $1.6 billion stake in the company, was one of the top 10 largest stakeholders, shareholders, was that there was underperformance versus the other railroads, and that they wanted to see some of that addressed. So in terms of what Vena brings to the table at a time where you're actually seeing some of the other railroads, particularly like a Norfolk Southern or CSX, shift away from this concept of precision scheduled railroading, or at least some of the connotation, for better or worse, that's associated with it, in this day and age, after some of the rail issues, safety issues that have been raised, whether that's right or wrong. With Union Pacific specifically, with a 63% operating ratio this quarter, kind of speaks to the fact that there's perhaps some levers to pull here and ways to extract more profit and better service for the railroad, and maybe this is a strategy that does it.
Yeah, I think Sorbonne had said they expected to go up or double in the next 2 years if Vena takes that role. So he does have a lot still, even with today's pop, to live up to on those promises.
Morgan, thanks for bringing us the interview.
Thank you, Morgan.
Morgan Brennan. Speaking of leadership changes, we're going to take a look at Alphabet results and what CFO Ruth Porat's job transition as well could be telling us. That stock, that would be the best day it's seen since February. We're back in 2.
How old is this guy now? I really clicked on it. Oh, he still looks like he's 10 or 12. He still looks like he's 12. No shit.
One thing we're seeing, increased costs as well. Big tech, of course, going all in on AI. Big capital expenditures coming. That's the focus of today's Tech Check with your Bosa D.
Yeah,
David, generative AI
doesn't look any
money
different.
Too. And so if
Still
this
looks
was
the
supposed
same.
To be the show me the money quarter for Alphabet and Microsoft.
White, straight
get more
Republican in
traditional
mail.
that didn't exactly
Did you
happen.
guys see
But it
that?
would be gradual. Google talked broadly about benefits.
Look at this fucking shirt.
In fact, as you said, AI is going to
White, straight Republican in mail.
Both Microsoft and Google said that CapEx costs
Oh
are
my
gonna
God,
grow
I'm crying
for
right
all these
now.
opportunities in AI.
Fucking white people.
Which is, of course, the current undisputed generative
God, I
AI
would love to see somebody wear that shirt out in
everyone's trying to
public
get
and
their
I
hands
would
on.
just bag the
One of
fuck
the most
up.
interesting threads to come out of last
Oh,
night's
man.
earnings, though, was the role of
Do you see
Alphabet
this
CFO
shit?
Ruth Porat. She's moving
If
to
at
a new
first you
role
don't
as president
succeed,
and chief investment
try
officer,
doing
which
what
would put her more in the line
Bob
of
told
fire
you to
for
do the first
regulators
time.
when scrutiny and pressure is only increasing.
Oh my
It also
God, if
opens
these
up
if
that
these
CFO
shirts
role
aren't
for someone
aren't
else to
so
come in
white,
and try to replicate or continue
if
the
guns
success
kill
that
people,
Porat
I
had.
guess
Remember, she
pencils,
created
cars,
the
and
current
spoons.
operating structure separating the money-losing moonshots
Oh
from the
my
profitable
God.
workforce. She increased transparency. She was behind
They
the
really
corporate
sent me an
buyback.
ad
She
for this.
essentially brought Wall Street
That's so
sensibilities to a
crazy.
high-flying tech company,
White straight
which
Republican in
succeed
male.
her gains as CFO.
I'm sorry, I
Porat
can't get over
hugely
that. That's
successful
fucking
time doing
hilarious.
it and wants a new challenge. Key question,
I
who
can
will
only
step
see
in
the
and
person
do
wearing
that?
it.
Yeah, I think Deirdre,
Like,
there's a hope amongst investors that the
what the
whoever
fuck did I
succeeds
click
her
on?
will be as if
Oh
not
my
even
God.
more focused on costs. Who knows? But I guess that's certainly something investors have always kept
Come
a
on.
close eye on.
No.
And even
What?
over the last year, when you look at the
White
mega caps
straight
and this
Republican.
efficiency drive, Alphabet
What the
Google has
fuck?
seen as kind of behind some of the others.
I don't
They're a
know.
little
I thought
bit
that was
late
kind of
to make
funny.
the kind of
It's like
layoffs
not
that we
in,
saw,
maybe not the way you
certainly
thought
from
I
Meta
thought.
and even
But
Amazon.
I don't know.
And you know, this idea that maybe Alphabet could have done more. So it is interesting to look at sort of her reign from the beginning in the mid 2010s to now, and maybe that legacy is a little bit undone over the last year or so. But remember, she's going to be chief investment officer, so she will still have a hand, a large one, in the financials. It'll be interesting to see what she does.
Bro, wasn't that so crazy?
But also, as the investment
It
officer,
literally
maybe
said that.
possibilities for
It said
Alphabet.
white, straight Republican and male. Like, what the fuck? Yo, oh my God. Let me tell you, if I see somebody wearing that shit out in public,
Thanks so much. Yeah.
I seriously have a
Former
tear.
Kansas City Fed President
I seriously
Thomas
have a
Hartnett
tear.
weighs in on whether
That was
rates
so
will peak. The
ridiculous.
Street is expecting another
And I'm
25
like,
basis
it
points
fits.
this
It
afternoon,
fits.
but if you recall in June, this
I could
was
see
a
some dumb white motherfucker wearing it. Excuse my French.
if that's happening, what it is.
Oh my God. That was too crazy. That was too good. Somebody bought it. You know somebody bought that shirt. Oh man. Holy shit. That's so funny. Oh man. That seriously brought a tear to my eye. Oh shit. Oh my goodness. Man, this guy. He's starting to get a little famous, this guy here. He was on the Compound last week. Compound and Friends last week. I didn't think he... Alright, so I'm trying to get some stuff in order. Hold on, what time is it? It's 12 o'clock. Look at Bob, or Boeing, just going. Just going. It finally got above that 224, 220 area. This whole area was like a struggle for it. White straight. Oh my God. I have half the nerve to like mess with somebody and say that. Holy shit. What's even crazier is why would it send me something like that? Why would it send me something like that? I don't know. Maybe we needed a laugh. It knew what it was doing. Oh my God. And you know somebody bought that shirt. You know there's quite a few people that bought that shirt. I almost kind of want to get that shirt and wear it around as a fucking joke, but I couldn't keep a straight face.
We're going to get 25 basis points from the Fed this afternoon.
Just so you know.
Boundary, the Fed funds rate,
Just so you know.
5.5%. That's the highest level it's had since January of 2001. Our next guest looks
Oh
ahead
my
to
goodness.
September and thinks another hike may be on the table. Joining us now, former Kansas City
Well,
Federal Reserve President and distinguished fellow.
If only
at the
I
Keta
took
Center at George Mason
my own
University,
advice
Thomas Honig. Mr. Honig, good to have you.
and
You know, I'm curious,
really go along
do you
these
think we'll
down
get
names.
Any hints from the Fed or from Chair Powell at the press conference about the next potential hike?
I seriously doubt that he will give any.
Yeah, he's not going to.
avoid giving any
He'll say,
hints
we'll
because I
see
don't
what
think
it's
the
like
Fed
when we
knows
get
quite
there.
Yet what they want to do in September. They're looking at major forces that they have to still figure through. Number one, we're still experiencing, the U.S. is still experiencing the effects of enormous fiscal stimulus over the last 3 years, including not starting just with the CARES Act, but more recently the infrastructure bill, the CHIPS bill. These are all increasing spending. We're seeing it in wages and wage pressures now. So they have that side of it that they're dealing with. That would suggest a rate hike. But on the other hand, they have raised rates by a factor of more than 25 now. If they move ahead today, as everyone expects they will, that has slowed the economy, especially.
So here we go. We're getting back into the
it's affected commercial real estate.
middle of the day.
And so they're balancing that.
11:50, 12, 1, 2. I wonder if we start to rally. It's weird.
The chairman would be very careful.
So I'm on a daily here.
We'll see, not to hint one way or the other very much, but to say we're data dependent. We're going to wait and see.
Yeah, you mentioned that fiscal stimulus we've gotten out of Congress, of course. The IRA is another one. So infrastructure, IRA, chips, that's a lot of money. But how does the Fed measure that? And are they capable of sort of measuring it in real time in terms of what the longer-term impact will be?
Well, they are capable of measuring it. Whether they can measure it as precisely as you would like so they can say what they're going to do in September, no, that's doubtful because how is labor going to go forward with this and how much more pressure are we going to see? Real interest rates right now are positive. If inflation continues to come down, that means real interest rates will be even stronger. So that may pull some other, pull the economy down some more and slow the inflation. So they are measuring it constantly, but they don't know yet how it's going to shape out by September. They think they may, but they don't know for sure.
Dow laggards, Honeywell. Actually, I was looking at 3M as a potential Facebook, Netflix long. Look at that thing. It's already up to the 200-day moving average, guys, with volume. So,
what are your expectations on that front? What do you think the
I
overall
mean, I don't know how far this thing's got to go before people start thinking it's a buy. I mean, it's been sliced in half, at least in half.
About, for the largest banks, the 2%, that's from Michael Barr's outlook, 2% increase in capital. That's going to affect the largest banks only. They usually can manage through that pretty carefully and do so. And I don't, even though they're going to say it's going to stop lending, I doubt very seriously that will have anywhere near the effect that higher interest rates will have on lending. So I think it will be a modest effect.
Wow,
on the economy
man, this
and
thing
on
is
the
done.
institutions. And
Look
in
at that
the
inverse
Fed,
head and
since they're
shoulders.
looking at, market
That
risk
sucks.
and operational risk,
I
the
wonder
fact
if
that
you're
they're
seeing
looking
the
at this is
start
probably a good
of the end
thing,
of a
and I
company.
would suspect it will actually
That's crazy, isn't it?
financial stability in the longer term.
Look
which
at that
is what they
weekly
have,
left
and
shoulder,
will be
head, right
separate
shoulder.
from the effects that monetary
I don't know if
policy
you
is
got
gonna have
the
over next
bounce
6 months
back
or
to
so.
it where that
Interesting. So you think that it
would
won't
be.
have as much of an effect as higher interest rates will on lending. But those two combined, is that a concern of yours, given just the overall impact of higher interest rates?
And
plus
I don't
higher
think there
capital
was
rules
ever a
and just the overall
2020
credit
with this thing
availability in the
either.
system at the same time?
Well, the credit
Yeah, right
availability
here.
issue is
It was already in a
obviously
downtrend.
complicated. Number one,
COVID didn't do
higher
anything
interest
to
rates are
it.
affecting credit, no question about it. But also the uncertainty around the level of interest rates
crazy.
are causing banks to be more careful. Their loans are under pressure because of the higher interest rates.
All right, I think we could start getting the cues to see if it'll turn itself around just a little bit. Maybe it pulls back to here and then goes up a little higher.
banks to
and
pull
then
back.
we get a
I think the
reversal.
additional, marginal
Because
increase
the
in,
RSI, if you think about what'll
capital
happen
probably
there,
should have come 2 years ago, but the fact that it's coming
it'll
now,
pull
I
back.
think,
It'll
will
come
also
on.
add to the
It'll
slowdown.
pull
It's
itself
not
back, and
nowhere
it'll get to
near
like here, and then the
as
RSI will be
substantially
down
as the
here,
interest rate
and
increases.
they'll buy the
Even
dip.
today's rate increase will slow it
They'll
down
buy
more
the
than I
dip,
think
and
the
then
capital,
see if they can bring it up a
increases
little bit
will.
higher here to the
If they
69,
stay there at these higher rates very long.
68
So that's where
area.
I would
We
focus
should take
my,
it up here.
interest
It's
and
my game
attention
plan. It's what I'm
because
thinking. Kind of
the
just
economy is still
thinking
on
about what it is I'm gonna look
fiscal
for.
stimulus. They're still trying to slow it. That's where they're going to focus, and the capital ratios will come in as a factor, but less so than the interest rate environment.
Thomas Honig, appreciate your time. Thank you.
Sure, glad to be with you. Thank you.
British billionaire Joe Lewis, stock trading on a yacht and now insider trading charges. The details after this.
Oh, of course. Of course there is. Of course. I wonder if we're putting in... I'm going through the scanners and stuff right now. I'm kind of just getting myself prepared. I wanted to see if, we could... So what are we going to want to watch for? All right, what are we going to want to watch for out of this Fed meeting? We want to know... Really, it's not whether or not we're going to get rate hikes next month or not, or next meeting. But, because I think the data's, it's going to start coming to the point where the data's going to start showing a lag. And if they're still raising, and you're starting to see the contraction, which we are, they're probably going to want to stop. Because they know better than to just raise going into it. But again, we have a lot of liquidity. There's a lot of money out there, so maybe they can. I don't know. Nobody really knows. Ow, that hurts. But I mean, they know, obviously formulas and they have different formulas for things, and knowing the rate in which things are changing really gives you insight, like on month over month rate of change. 1 month you see a decrease by 0.2%, then the next it's 0.3, then the next is 0.6, then you're seeing a doubling of the change in data, and that means it's speeding up to whichever it's, the demand is slowing down by a fair amount. Things like that, knowing just the rate of change from each month, year over year, knowing formulas, stuff like that. Let's see. TDOC, there's Teladoc. Okay, TDOC. Actually, I want to see what 3M's doing today.
Welcome back. Federal prosecutors bringing insider trading charges against billionaire Joe Lewis.
Citadel
has more on that wild story, wild allegations. Robert,
look, another gap up.
Yeah, Leslie, really
gap
wild.
up,
Joe
gap
Lewis
up.
surrendering
Wow.
to authorities in New York this morning. He will appear in court this afternoon. He was indicted by federal prosecutors yesterday on 19 criminal charges, including securities fraud and conspiracy. Now, prosecutors say Lewis, who is 86 years old, worth an estimated $6 billion, organized a, quote, brazen insider trading scheme. They say he received inside information about companies he invested in, then passed that information to friends, romantic partners, and even his private jet pilots who made millions in profits. In one case, he lent his pilots $500,000 to buy stock in Mirati Therapeutics before news of a clinical trial became public. Lewis's girlfriend, Carolyn Carter, and the two pilots have also been charged in a civil case by the SEC. Lewis's attorneys say Lewis has come to the U.S. to answer the, quote, ill-conceived charges and will defend them vigorously in court. Lewis is the founder of Tavistock Group, which invests in real estate, resorts, and restaurants around the world, many in Florida and the Bahamas.
Remember,
He also owns
it's all on what you know.
Hotspur's soccer team in England and is one of the world's largest art collectors. Friends say he spends much of his time on his 320-foot yacht, which has its own trading floor and indoor
That's
tennis
awesome.
court. So, guys, always surprising when someone with this level of wealth and success is accused of insider trading, which, granted, made a lot of money, but not relative to what he's worth.
Yeah, I mean, what do they have to prove, though? You know, so he was both the tippee and that he was getting tipped, and then he was also tipping others. Where are we in that whole thing?
Yeah, so he was receiving information from these biotech companies that he invested in, mostly on clinical trials. He would then pass that information on to the pilots, his girlfriend, other friends, in some cases lending them the money. And then when those results were made public, the stock would pop, and then they would sell. So it was, you know, receiving non-publicly disclosed material information and then passing that on, which is why the pilots and the girlfriend were also charged.
Material, non-public information. Robert, thank you.
Thanks.
MNPI, it's been a while since we've seen a serious insider trading case, particularly from a high-profile person like this.
Absolutely. Trading floor on his yacht?
Yeah, well, that's all right. Don't you have one?
I do.
No?
I'll be there next week.
Okay, good. All right, well, that's going to do it for us right here on Squawk on the Street. Let's send it over to Courtney Reagan for the half.
Thank you very much, David. And Leslie, welcome to the Halftime Report. I am
All right,
Reagan.
I am going to start getting things prepared.
And the fate of this rally as the Dow tries for 13 straight days of gains. Our investment committee is standing by to break it all down. Joining us for the hour, Joe Terranova, Liz Young, Surat Sethi, and Steve Weiss.
Give it up for Liz. Liz Young. Give it up. Give it up for Liz Young. Gotta give it up for Liz Young. The women of finance. Liz Young, another one of my favorites.
3.9% at 3.877. We got a WTI sitting around $79, just a shade under that. We do have Boeing and 3M leading the Dow here after earnings reports. Microsoft and Visa are the laggards for the index. Union Pacific, KeyCorp, Zions, Comerica leading the S&P 500 after we saw that deal in the regional bank for PacWest and California. And communication services and utilities are the leading sectors for today. But we've got a lot going on here and a lot that we need to talk about. Let's kick things off with Alphabet. Quite an interesting report that we got after the bell yesterday. Surat, you own this one. What do you make overall of the report that we got from the company? Largely as expected, but good news.
Yeah, I think it was better than expected because given the last quarter, there was a lot of people were just focused on Microsoft, that they were leading in AI. Where was Google going to be here? Was search?
Who thinks we can get back up here?
Advertising did really well.
I'll do.
YouTube did really well.
Who thinks we
Cloud
can
did
get
really
380?
well. So
I
I
do.
think the expectations were met.
I think we
in
can.
fact, exceeded. And I think now the stock is actually reflecting that, and it's caught up to kind of where Microsoft is. It's a core holding for us. I like it, and I think they have a lot more going for them. Their operating leverage is just huge, and that's one of the things we like about it. The cash flow is incredible.
I'm thinking,
talk about here. I know that you own it, Ruth Porat.
I mean, obviously, we got to get through. We got to, well, we're making the support now.
Look, she's acquitted herself very well as CFO, so deserves promotion. Happy.
Is he talking about Liz Young?
Style living? I don't know. But it'll be great for the stock because she brings the discipline. So she was the one that came in and said, look, all these vanity projects, all these think projects, that's great, but let's break them out and actually let's stop doing a lot of them. So let's have this financial discipline that we need to have. So being in a bigger position will only double down on that. So yeah, so I'm optimistic. I don't think I needed it to be a holder of the stock, which I am. I'm not buying more based upon that. But I still think
I think we wait till we get another 380 test to think about the short, or at least for me, maybe put in a lower high, maybe.
23 target raises.
That was a nice buy the dip
I mean, what do you think
for
of
the range.
valuations at these levels?
They're pretty high.
That was a nice buy the dip, Tegan.
It's been an incredible rip this year, one that I have missed entirely, particularly.
It's all good, Liz. You're perfectly fine. It's all good.
To be specific,
you know, we know you're human.
Valuations in any way
Don't
that
even
you
worry
slice
about
or
it.
dice them look high. They're above 5-year averages, 10-year averages, 15-year averages. They're above the range where they normally are when the 10-year Treasury yield is at these levels. We're obviously nearing the end of a hiking cycle. I hear there's a meeting today that we're going to get some news on. And valuations are nearing 20 times forward earnings. That is
quite expensive, and in the midst of earnings season, that doesn't mean that they need to come down, but what they need is for CEOs to justify that level. And when you look at valuations on a forward 12-month basis, that means that we need to have justification and gratification of that level within the next 12 months. I'm not completely sold that that is going to happen.
Joe, you're nodding, but you're not in this one. You're not in Alphabet.
Well, Alphabet is breaking out. It's at a 15-month high, so it certainly will be under consideration when we rebalance the Joe T strategy on Monday.
He's got his own ETF. Isn't that cool?
It's clear. That's the story here in this earnings report, and they've maintained it. Look at Snap today.
Yeah.
Snap is down 19%. Why? Obviously because we see that the search advertising is continuing to contract there. So I always believe that's what this week was going to be about. This week was not going to be about AI. This week was going to be about search advertising. And Google has clearly maintained that dominance. I think the right way to think about the reaction post-earnings is that it, to Sarat's point, it exceeded expectations. And I really believe, Courtney, that's what has to happen in this earnings season, because to Liz's point, you have such an overextended technical nature in a lot of these mega caps, in technology itself. Look at Texas Instruments today. It's down significantly. Why? The expectations were so high. Look at the S&P overall.
Just want to get my levels ready.
Away from the 50-day
I don't know why,
average.
if it's
You're
just me or if I'm not seeing
10.7%
things correctly.
away from the 200 moving day average. So I think Alphabet is an outlier in its ability to exceed those expectations, and it's doing maintaining that digital dominance.
Well, we'll find out if it's an outlier as the others report. We've got Meta, we've got Amazon, Nvidia. But
It's gonna take me a second. See how many times I have to like click around to do shit?
Microsoft quarter was good. Guidance was not so good. So the market's punitive. So you can't expect to have momentum drive stocks up to unreasonable valuation levels.
I've been saying the same thing.
If they miss. However, the issue is they're also rewarding them when they make it, further expending.
All right.
Expending them.
So
Liz's point, it's not just that valuations are
this is
high,
where we're going.
it's that
455. That looks
valuations
like a
are
good
rising
spot.
Interest rate environment,
It's
and
nice.
those don't match
Oh wait,
up.
this is 15,
So,
isn't it?
look, you know, I've got some good exposure in the market. I do own
Yeah, if we
Microsoft.
start holding this, guys, you guys got to think about
I'll look for an
this
opportunity to
455,
buy it lower than
15
where it
area,
is.
455
But I made that
area.
mistake with Netflix, where I bought it for a
Maybe I
trade,
should look at futures.
And now that trade's turning into a longer-term trade because I didn't use a stop on it.
I think you have to acknowledge, though, that there is a subtle message within the market, and I'm not
He said I
saying that the
didn't use a
market
stop
isn't
on
vulnerable
it.
for correction. Because
Subtle's my middle name, as you know.
I wouldn't.
No, that's
No,
for sure.
I'm not
But
gonna say it.
I think the market
It's
is vulnerable
inappropriate.
for a
Is
correction.
it
in this quarter.
appropriate?
But the subtle message has been
not
that the
needed.
old economy is catching up. It's not as if the NASDAQ is catching down. And that's really been the story over the last several trading days. Look, the Dow Industrial is going to go for what, 13
I cracked
consecutive
myself up, though.
positive closes? We haven't witnessed that since January of 1987.
But we needed that, right? Because the generals were leading and none of the soldiers were catching up. So
But the question was, would that happen? Would there be the catch up or the catch down?
Catch down, right. And it's better for the market when you're catching up, because now you can get some of the other stocks to participate. And then, by the way, if the generals do not deliver, they will actually get shot.
Right.
So
Yes.
you'll see that happening now with some of the big boys, and it's going to be interesting when Meta, Amazon, all of them, will the advertising stay there? It's not just going to be about efficiency. We knew efficiency was like the first quarter word. Now it's revenue growth, earnings, operating leverage.
And Steve, before we sort of move on here, you sold out of the QQQs, though. You said you own Microsoft, but why did that?
Because I had enough exposure, so I had another stock that we'll talk about. So QQQs, sometimes they're a trade, sometimes they're to fill in a spot in my portfolio while I'm doing some work on something, and so you can't really go by that. But I thought I had enough exposure. I sold them yesterday. I didn't want to double down with Microsoft and with Alphabet reporting, Meta report, and Amazon. I own all of them. That's really enough QQQ exposure right there.
Okay, and Sarat, obviously we've sort of talked around the edges with Microsoft, but slower revenue growth and looking forward, the forecast a little disappointing. What do you make of that quarter?
I mean, the stock was up 40% year to date, so it reflected perfection. But they're still doing very well, and I think you're getting some give back right now. It's a core holding. It's a company that's really firing on all cylinders. maybe you get a little bit of slowdown of growth, and they're investing. They're investing in AI. We knew that was going to happen. So I think when you see kind of, hey, where do I want to take some
Wow,
money
we've
off?
recovered.
Maybe
This
it'll take a
means
couple
something.
quarters to
Take
get
notice
back.
of this.
I still think
So we sold
it's a
off.
great
We've
company, and maybe you
recovered
get
it
better
all
prices
back.
when it comes back
See if
around.
we start to hold the highs and
Good said on
push
the
to
call,
the
growth for
close.
AI services would be gradual, which
You know,
perhaps
see
was
if we start
disappointing.
pushing the
EBS says, look, it's more about
455.
tempering rather than inflating the
455,
expectations there. But
55.
Stifel is sort of saying we're not discouraged. It's going to take a while, but it's going to get there.
It's managing expectations, right? I mean, NVIDIA came out and said, hey, AI is going to
Microsoft
bump our
got to the
revenue up
target.
so much right away. So if you extrapolate that to some of the other companies saying, well, why aren't they doing it? Well, because this is a software company, it's a chip company. So you have to
Falling
kind of say,
asleep.
well, who's going to invest? Who's going to get the best
Getting
return?
tired.
And that was the fear for Google as well. If
CXPN.
Microsoft's investing, is it going to be taken away from them?
Oh, shit.
The pie is so big that people who know what they're doing there, investing in the right way, can actually all benefit. It's not a one person take all.
Microsoft is the primary beneficiary of AI. So this quarter or the guidance does nothing to take that off the rails. So if you think about it, when they incorporate AI into all their products, I'm not talking about.
Look at AMD.
like we're seeing
We
right
just got
now.
some.
It's not prime time
Look
ready.
at
You're
TUP.
gonna need
It's
to
at it
upgrade
again.
everything. You're going to want to upgrade everything. So the question is,
That's
will
insane.
there be a pause in their normal upgrade cycle, their normal renewal cycle? You're not going to get rid of it while the new products get ready to be rolled out. That's typically what you see. You don't see it so much with software products like this, but that may happen. Don't know. But bottom line is, you can't think of any other company where AI, aside from NVIDIA, and they will have competition ultimately, that's going to benefit more than Microsoft.
Okay. I mean, Liz, does it feel fair to you, though, that Microsoft is down 4% if all this is true and they're going to be a beneficiary going forward? Why is the market so disappointed on the revenue guidance?
Well, look, you have to work inflation into this, too. Inflation is something that, as inflation comes down, revenues come down. I think that's pretty normal. If valuations are extended based on, like I said before, getting gratification on some of this theme in the next 12 months, then yeah, there is some give back that has to occur. I don't necessarily disagree with Steve, but I think there's a lot of investors that are choosing their horse in this race. And AI is still so new, it may change our lives. It may change the universe of tech stocks, but we don't know yet who those winners and losers are going to be. I think we can all name a story of the past.
It's 12 o'clock.
When AOL was supposed to take
On the
over
dot,
world,
I'm
remember
in my
when
top.
Blockbuster was,
Just kidding.
cutting
Listen,
edge, that sort
I'm
of
gonna
thing.
go
Things
brush my
change over
teeth.
time, but it takes
I'm gonna go wash
years
my
for those
face.
stories to
I'm gonna go
play
make
out.
some
So I think we
coffee.
have to be careful
Then I'm gonna
not to
come
hitch
back.
our
It'll
wagon
be
to something and
probably
really be committed to the
12:45,
company
just
being
before
that
1
winner.
o'clock.
I don't think we know even how the middle of this story plays out, let alone
And then
Joe, I
we're
wanna
going to get
take
this
an
Fed meeting
opportunity to
rolling.
sort
We're going
of
to talk
look
about what we
forward
want
to
to
Meta.
hear,
From
what we
we
don't want to
heard
hear.
about the ads
We're going to
today,
have our
about
levels,
that
top
Google
side, bottom side.
encouraging for Meta here tonight?
You know,
It should be. And it should
clear
be,
game
and we
plan
should
so we know
be
what to do.
hearing from
We
Meta
get here,
the,
we're doing
activity
this.
surrounding Instagram and WhatsApp, because
We
those,
get down there, we're
certainly
doing
Instagram
that.
was just a fantastic
All right.
acquisition
So I'll
for
be
the
back
company.
in like
I would just like to see them stay consistent in the
4:12
messaging.
in like 20
Stay
minutes,
away from the
15,
metaverse,
20 minutes, 45
focus
minutes. I'm
on
just going to
talking
brush my
about
teeth
cost
and make some
efficiency,
coffee.
focus
So I'm going to
on
leave this
talking
stuff up.
about just
I have NVIDIA up here.
utilizing, the balance sheet to
SPY,
build forward, whether it's
so on and
threads
so
or
forth. I'll
expanding
see you guys
and
in just a couple
diversifying
minutes.
the platform more further, and being amenable to what they do best, which is to be there for small businesses and provide that opportunity source for them to leverage their business.
Surratt, Meta has had such a run. Is there a risk that there could be a sell on the news if this report is strong?
Yeah, I mean, the fear is the strategy drift, right? Hey, the ship's now on the right course. Let's, as Joe said, let's go spend money more on this. If they even hint at that, you're going to get a lot of the momentum.
When you say on
out.
this, meaning the metaverse?
On the metaverse.
Okay.
Right. I mean, if they can kind of say we're spending, but it's not going to be outside of the ordinary, but you do need them to execute, because efficiency is what brought them here. But the execution and the return on investment, are they making money on Instagram? How is Threads doing? What is Facebook users doing? And Joe, the WhatsApp question's just been out there. Like, we just don't know how they're going to monetize that. And at some point, that's option value. But I do think, this stock is priced also to perfection. I mean, it's up from $90 to where it is now. So
Forget about where it's moved. What's the valuation on it?
Well, the
valuation is lower than all the other.
But it all depends
magnificent.
on if he decides to take the cash and reinvest it in an area that doesn't have returns right away, right?
On a PE basis, on an EBITDA basis, it's not an expensive
But you could have said the same thing
protection at all.
before. He said I'm going to spend $10 billion in the metaverse, and then he cut it back. So that's why the stock has a discount, because honestly, people don't really trust what the management team's going to do. So he's got to kind of stay on the same course.
So I'm hoping that they say something. So Threads have moved up 10% in Threads, right? He chose to launch it, which I think was a smart thing, to launch it when Musk was at his weakest with Twitter. He continues to be getting weaker, right? But it wasn't really ready. So he saw what Microsoft did with chat and said, okay, I'm going to launch it. I know it's not ready. And sort of backfired a little bit. You didn't have the same momentum. But there are more features, better usability features to come out in Threads. I think they're going to talk about that tonight, maybe get the excitement going. We know that the user base has fallen off by 70% since they announced it. So the stock came down that 10%.
Joe, jump in.
Yeah, let's just caution the viewers that this is a mega cap that tends post earnings to move significantly in one direction or the other.
Yep.
So I believe over the last 2 years, it's moved 15% post earnings. Options are implying today about a 9% move. That's still a very large move. Obviously, we're seeing a little bit of a contraction in the volatility relative to the last 2 years. But I think it's important to understand this is a stock that will move significantly post earnings relative to some of the others.
I want to turn now to the Fed. We talked about it on the edges, but we are now less than 2 hours away from the latest decision on rates. So let's get over to senior economics reporter Steve Leisman with more on what to expect. I know you've got a very busy day ahead, Steve. Thanks for being here.
Oh, no problem, Courtney. The Fed expected to resume rate hikes after a one-meeting pause, bringing the overnight rate up to 5.38, highest in 22 years, as we await guidance from the committee and the Fed about whether this could be, hey, the last hike, or is there more yet to come? The market trading with a 97% probability that they will hike, 19% chance of a hike in September, and 41% that they get back to hiking again in November. So it's kind of like a hike, pause, hike idea that's out there. That 41% is elevated in recent days as the market seems to be taking the second hike a little bit more seriously now. What are the things we're going to be listening for? Does the chairman say that the risks are balanced between recession and inflation? Are rates sufficiently restrictive? Are they still concerned about bank credit tightening? And is there a dissent? Are there a few doves on the committee who don't want to be hiking now? Been some significant economic developments since the last Fed meeting. You can see there the unemployment rate is down 1/10 to 3.6. Job markets remain strong, even though payrolls have come down. CPI is the big change, 1 percentage point lower compared to the last meeting. And GDP is stronger. We took the first half estimate there. We get the CNBC Fed survey along with the government report, put them together, and you're 0.5 point higher on GDP for the first half and 0.5 point, a little bit more actually, for the second half, although still weak. Forecasters keep predicting this economy and the job market will weaken. The data keep defying those predictions. That's why Fed Chair Powell and the FOMC, they're going to hike and keep the possibility open that it's not done yet. Courtney?
Keep us guessing, Steve. Thank you very much. Well, Liz, what do you make of what's to come? Obviously, Steve laid it out, 97% probability. We're going to get a hike today. September, only about a 19%. Do you think it's necessary to continue hiking?
If you asked me at the end of last meeting, which I think Scott did ask me at the end of the last meeting, whether or not I thought they were done, I did think they were done. So I'm surprised that we are this certain that they're hiking again. They probably will. Jerome Powell does not like surprises. It would really shock the market if they did something different today. I don't think that 25 basis points makes a difference anymore. I think this is more about messaging. This is about signaling that they are still committed. And this is about making sure that the market does not do any loosening of monetary policy for them, right? We don't want to get stuck in that same issue that we had in the 70s where we haven't quite got our arms around inflation yet and then it starts to move back up. The reason that I don't think they're satisfied with inflation yet is because we know that we just rolled off the peak year over year. So that 9.1% peak in June of last year was just this last comp. It makes the movement downward look better, but now the comparisons get tougher as the year goes on. And it's possible, we've seen a pickup in some of this commodities inflation. It's possible that the headline reads go back up, and that would probably spook the market, spook investors, if the Fed is still committed in messaging to controlling that. it spooks people less.
Sarat, are you surprised at how strong the consumer has remained? Yes, inflation has come down, but we're seeing confidence high. Visa CEO, AT&T CEO said, look, the consumer is resilient. Does the Fed want the consumer to be resilient? They want to pull back on spending.
I think they do, and they want housing to slow down. They want the consumer to spend down. That's causing inflationary pressures. And I think you're seeing employment still so strong. So to Liz's point, I think that's why they're going to signal we're still data dependent. And we're going to see what else happens, because the other thing that you're going to see is commodity prices. And if they don't, they've kind of rolled over a little bit, but if they don't continue to go down, then the Fed is really stuck. Because if they do say we're taking our foot off the pedal, the market's not going to like that. So I think they're in this position of, hey, 25, data dependent. We don't see inflation yet coming back to our 2%. But maybe 2% is not the right number. And that's going to be a true discussion. I doubt they bring it up today, but down the road, you could see the 2.5% to 3% saying, hey, things have changed, wages have moved up. Just look at what happened with UPS. Now you're going to have potential, with Amazon, Union. So all that is built up in our system, and it's very hard to put it back, put the toothpaste back in.
I was just going to say that, Joe. I mean, I wonder if 2% is even makes sense anymore. Maybe we live in a new world, a new economy. We need to reevaluate the targets that we're going after.
I don't want to see us moving the target. Keep the 2% target in place. I mean, right now we have so many institutions that you're questioning the credibility in that standpoint of the Federal Reserve if they begin to move the target. So I think that keep that in place. I think a couple of things are important here. Number one, how do they view the job market? Do they still see the gains as being robust or not? The composition of the Federal Reserve has changed since the beginning of the year. St. Louis Fed Chairman James Bullock resigning, so it's a much more dovish composition of the Federal Reserve. And then I think Jackson Hole comes into play. I think he has to be very careful in his messaging, because it's not the next Federal Reserve meeting in September, at which point he's going to be addressing investors. It's at Jackson Hole, and Jackson Hole is coming up pretty quickly. So I'm not sure you're going to get very much today in terms of looking towards what future policy is going to be afterwards.
Weiss, what do you make of the possibility of a hike in September? Is it necessary as you sit here today?
But it's on the table, right? So you have seen some commodity moves back up. You've seen oil move up. You've seen copper start to move up. Lumber, we heard from Union Pacific today, their lumber shipments were down. So lumber's not doing as well. Rents have come down, an important part. But the housing market remains strong. So commodities going into that are going to remain strong. Lumber will come back. So I think it's a coin toss right now for what happens in September. I don't think the market's going to look to September. They're going to key off Powell's comments. That's going to work for a couple hours. And then we'll get the earnings reports at 4 o'clock, and that'll take over the spotlight. Then we'll get more earnings reports from the key players this week, and people forget what Powell said and just focus on earnings.
I think Powell also has to think about the effect of the rest of the world exporting their deflation to the United States. China is weak. Europe is in a technical recession right now. What happens in the coming months? Generally, what you see economically is that deflationary element gets exported into the United States. So I think he has to take that wait-and-see approach.
What do you make of what we should hear out of Jackson Hole in the interim, Liz, between the two Fed meetings? I mean, how carefully does Powell have to dance that tightrope?
Well, it depends what some of the reads are that come out between now and then. I mean, they have a built-in pause effectively in August, right? We don't after this, we don't have another meeting until September 20th. So they don't even have to say we're going to pause. They just will pause. And Jackson
Well, they wouldn't
Hole,
say it anyway, though. They'll never say we're pausing.
Right. But Jackson Hole's important. Obviously, we're going to hang on those words. There's always a lot of Fed speakers leading up to, and there's a lot of Fed speakers afterwards. It's not as if Powell is the only one we'll listen to. I think that we're probably going to start to see the data come in softer as we get closer and closer to Jackson Hole, and then their statement has to be consistent with that so that we feel like they're paying attention to that data and living true to their word of being data dependent. So I would expect that by the time we get closer to that September meeting, the expectations for another hike are much, much lower because we probably won't need it. This is when the lagged effects will actually start to rear their ugly head. This is usually when that happens, somewhere between 12 and 18 months after the beginning of the hiking cycle. We are right in that time frame. September would actually be 18 months after the beginning of the hiking cycle. So it should start showing up in the data between now and Jackson Hole, and definitely between now and the Fed meeting in September.
Yeah, that timeline is important to recognize. Thanks. Well, don't miss Scott Wapner's exclusive interview with DoubleLine CEO Jeffrey Gundlach. That's following today's Fed decision that we've been talking about in that news conference. You're going to want to catch that live on Closing Bell. But straight ahead, our chart of the day, Boeing hitting a new 52-week high after a big beat. We'll break down the quarter next. Halftime report is back in 2 minutes. Welcome back to halftime. Let's get to our chart of the day. Boeing hit a new 52-week high today following a better than expected quarterly earnings result. Our own Jim Lebenthal owns it. He joins us now on the phone. Jim, yesterday I suspected you were a little nervous ahead of this report, but today I guess you're probably pretty happy. What are your thoughts?
Hi, Courtney. I am pretty happy, and I was going to make that same reference to us joking during commercial breaks yesterday that this is usually when Boeing gives some ridiculous, huge charge, some write-off, but they didn't. They didn't. Hallelujah. Instead, they gave us an enormous free cash flow beat. That's what the most important thing for this stock is. Cash flow generation that they can use to pay down debt. And they are delivering on that. They are delivering planes. They're increasing their production of 737 MAXs and 787s. Productions equals deliveries equals free cash flow equals better profits and pay down of debt. So this is a multi-year turnaround story that is very well on track. Nothing to complain about here.
It's obviously having a nice move here today. I'm not sure if today is the time to add to a position. Of course, you want to buy when it's a little bit on sale, perhaps. But what do you make about the size of your position in light of these results? Are you adding to it? Are you happy where you are?
Well, you know, I'm doing this by phone, so I can't see if my frenemy Steve Weiss is on there, but he likes to tease me. And hang on,
Jim,
Steve.
I'm happy to see you do well. Maybe you'll stick your hand in your pocket, at least pick up your share of the check next time we go out. So congratulations.
Steve likes to tease me, and this is true, okay? My first purchase of shares 4 years ago above $300. But as Steve also knows, last year I was buying hand over fist at many times, including when he was shorting, annoying the hell out of me. And that's why 3/4 of my shares are about, $175 a share. So even though there's a profit, and Courtney, you referenced this, I still think you can buy the shares here. You're about halfway through a multi-year turnaround story here. There are more gains ahead.
Okay, all right, I see. Stick with us for a second. I want to stick with Boeing. Sarat, you've been looking at Boeing, I understand, but what do you think about dipping in now?
Yeah, look, I think Jim's got it right, and I think they've actually now they're doing the things they said they were going to do, and we were just looking for the cash flow to come out. So it's definitely interesting for us. We own Delta. We like the space, so we're looking at a couple other things in there, and I think it's a good time to. The valuation's still cheap, and Jim got it right buying it in the 100s. But I still think, depending on the work we finish, it could be a good place to at least start putting a position in.
All right, well, Jim, before we let you go, let's talk about Union Pacific. We got some news on that, of course. Shares soaring after announcing a new CEO. What are your thoughts?
So I'll take the 10% gain, but, look, let's call this what it is. It was a terrible quarter. All right, this is a company that has had a lot of quarters of operational issues. The long-term thesis here is that as America does supply chain onshoring and infrastructure spending, that it's going to require materials to be delivered by Union Pacific. I'm not sure that one guy can turn around the operational results here, but I'll take the 10% gain and consider what to do over the next few days with the position.
Fair enough. Not the only executive change that we've heard today, but shares are higher by about 10% on the news. Jim, thanks so much. We're going to move now to get some headlines with Bertha Coons. Hi, Bertha.
Hi, Courtney. In Delaware, court is back in session as the plea deal in the Hunter Biden case appeared to be unraveling just about an hour ago. The judge has been questioning defense attorneys and prosecutors on the scope of the agreement, including linking this plea agreement on tax charges to a deal on the gun charges that Hunter Biden is facing. The original plea deal was to have the president's son plead guilty to a pair of misdemeanor tax charges while avoiding prosecution on a gun charge. 7 major automakers are working together to double the number of electric vehicle chargers in the U.S. and Canada. The team includes General Motors, BMW, and Honda, who will share a multi-billion-dollar investment to build charging stations in urban areas and along travel corridors. The move would rival Tesla's network and could speed the adoption of electric vehicles. The House Oversight Committee, meantime, is hearing testimony from 3 witnesses in a hearing on UFOs today. The 3 witnesses are military veterans who claim to have firsthand knowledge on the subject. 2 of the witnesses say they have seen UFOs. Their testimony stressed that the sightings are a national security problem and that the government has been too secretive. One of those things that people will be riveted to watch, Courtney.
Absolutely. I grew up in Dayton, Ohio. There's an Air Force base there, and people always wondered, were the aliens really there? Questions that we still have today. Thank you very much, Bertha. Well, up next, our call of the day, another price target cut for Disney. So where the committee stands on this trade, that's coming up next.
Grade my trade. Send us your latest stock move, and the investment committee will debate it and grade it. Email us at askhalftime@cnbc.com or tweet us, #GradeMyTrade. today.
Welcome back to Halftime. Let's get to our call of the day. Morgan Stanley cutting Disney's price target, saying that the Hollywood strike is weighing on the industry. Surat, you own Disney. Do you agree with this call? And how long-term do you think an impact could be?
It could be for a long time. I mean, for us, Disney's a value stock. There's no short-term catalyst. We don't know what it's going to be. Iger's going to be there for a couple more years. Our view is, look, the sum of the parts is greater than the whole. They have great content. They have a great global brand. The time to own some of these stocks when they're so out of favor is now. But again, you know, it's like when Meta was 90, and you could sit here and we talked about how bad things were and it could be on the way to 60. But there is a case for us that there is value there. Is it there in the short term? No. Did they raise prices too fast? Yes. Did they spend too much money on content? Yes. Is linear TV going down? Yes. But at the end of the day, this brand, people still talk about it. They've got so many things with Marvel, Star Wars, etc., that there is value there. And Iger would not have stayed on for a couple of years because this is his legacy. And I do think that there's a good company behind it, and there will be value there. But in the short term, if you're a trader or you're looking to do well in the next 3 to 6 months, it might not be the spot to be.
Is there value in the ESPN content? It seems like they can't quite figure out what to do with that.
Well, I think live sports has huge value, and ESPN does have that global brand. So the question is matching your assets to liabilities. How much are you paying for the live sports versus how much you're getting? And there could be other ways to do it. Maybe you just spin it out and it becomes a completely separate channel. Things that other, channels are doing as well. So there is value there. It's how do you create it?
Right, that's a big question. And actually, Scott Wapner has been out west this week for CNBC and Boardroom's Game Plan Conference. And he spoke with the co-owner of the New Jersey Devils and the Philadelphia 76ers, David Blitzer, about the future of live sports. Here's what he said.
We all know that live sports is the best content around. You can't save it. You can't watch it later. And so the value of content is going to continue to grow, in my opinion, above inflation.
Liz, what do you think about the value of live sports?
I mean, first of all, I love live sports. I'm one of those women that I'm like the only woman in Manhattan that has the NFL Sunday ticket and the MLB package. And I agree. I think the value of the content will grow. The advertising space has to change because you can now get live sports on a computer. You can get it on your phone. You can stream it. So the ad space changes, and the days of Super Bowl commercials being the most valuable piece of advertising ever may go away. But the value of live sports will continue growing. I absolutely believe that. The one caveat is that the type of sport, I think, will change, right? People aren't quite as interested in baseball as they continue to be in football. Soccer has become much more popular here. So that's something that I think advertisers need to keep up with as trends change. But I do agree that there's money there. You can't replace it. There's no competition to live sports.
Pickleball TV coming soon?
Yeah,
no.
Maybe.
Joe, I know you're not really as much of a fan of Disney, though. You're playing streaming in a different way. Netflix is your game.
Well, I think ultimately Disney is going to have to figure out how to monetize that asset, and it's been somewhat confusing to me why they haven't introduced gaming. Yes, I've been talking quite a bit about Netflix over the last several weeks. Let me just be explicitly clear on this. At the end of April, it was added to the JOTI ETF at $330. So it's $418 as we speak today. We will rebalance and reconstitute on Monday. Netflix right now, in a comparison to the NCAA tournament, is on the bubble. And it's on the bubble because this is the 5th trading day since it reported earnings last Wednesday, and you're not seeing any significant bounce at all. So what happens in that is that the momentum factor, which was intense, it was incredibly strong, it's beginning to wane. And as that begins to wane, you look a little bit towards the quality side. Now, this is a company that's improved its balance sheet, but the problem is that the sales growth is on the decline over the last 12 months relative to the last 3 years. The average sales growth over the last 3 years is 19%. Unfortunately, over the last 12 months, that sales growth has contracted 4.5%. So this is a stock right now where you've got this conflict between two factors. We'll make a decision what to do with it on Monday. If you're isolating on momentum, you stay with it. But if you're including quality into it, the decision will be made on Monday, and we'll see what we do with the position.
Weiss, when you're looking at playing the streaming wars game, what's your pick?
Well, I think Netflix stands alone. They don't. It's a clean story, so it's not like Disney where they've got legacy businesses where it's clouding the picture.
But then there's less diversification.
Yeah, and sometimes that's a good thing.
Okay.
You know, Warren Buffett says you don't make money by diversifying away your returns, so you run a concentrated portfolio. So I think they are in good seats. It's no surprise that earnings growth has declined. I mean, over the last 3 years, you've had the pandemic and everybody rushed in. But I still think they've got the best content. They've got good management doing it. And they don't have live sports, really.
No.
But, you know, live sports, content's king. But it's when you own the content, not when you have to buy it. So buying that content is incredibly expensive. And I don't know that you get the return on it. Legacy TV would buy content because it would lead into their primetime viewing. But now that's not really relevant at this point. So you know, it's great for David to talk about it because he's the guy that owns the content. Sure. But for others, it's not as good. So going back to your original question, I think Netflix is the only way to play it. You play at the right time. I bought it as a trade. It's been a horrendous trade. Momentum's died. But that's when you have to buy Netflix. Did I buy too early? Obviously. Got to get under 400? Possibly. Yeah. So.
Whenever I think about pandemic and Netflix, I will always think of the Tiger King. We all watch it. Well, still ahead. We are setting you up for some of the big other earnings that are on deck here. This is how the committee is positioned. We'll go through it. Coming up, halftime is back in 2 minutes.
Fabletics.com.
Welcome back to halftime. We are watching a few key names reporting results in the next 24 hours. So let's kick things off with MasterCard. Earnings coming tomorrow before the bell. So Rod, you're in this one. We heard some pretty good things from American Express, from Visa. Expect similar for MasterCard?
I do. I mean, global spending, consumer strong, travel strong, services is strong, so should be good numbers from them, operating leverage. And you know, I don't think you're going to see anything different from them.
Okay, good to hear. Let's move on to Chipotle. The company reports tomorrow after the bell. That stock up 50% this year. Joe, you own it. More room to run in this one. That's a pretty big run for a consumer.
It's certainly priced for perfection, and understand what analysts have done over the last 3 months. Earnings expectations, there's been 24 revisions higher, 0 revisions lower. In terms of revenue growth, there's been 18 revisions higher and only 2 downward revisions. So to your point, it's priced for perfection. Same store sales looking to come in somewhere around 8%. It's slightly below its all-time high at 21.75. You're going to hear a little bit about the franchise expansion internationally, Kuwait and UAE. I think that's an exciting story. And ultimately, it's going to come back to their ability to navigate cost and what does the traffic look like for Chipotle. I will say this about Chipotle. Betting against Chipotle and the management team there has been a losing effort over the last several years. So I wouldn't be surprised to see them exceed the expectations.
Interesting. Stock, though, is down about 1% here on the session ahead of those results. And finally, Honeywell's on deck tomorrow morning. The stock struggling this year, down 3%. So, Rod, you own this one. You like it. You still want to hang on.
I do, but this is what we were talking about at the beginning of the show. Like, some of these really best-in-class industrial companies have done nothing, right? Tech's just run. This is one of the best-run companies out there. You know, GE had good numbers. So we'll see what Honeywell has to say as well, because they have exposure globally as well. And stock's not cheap, but it's really well-run business. Great cash flow, great balance sheet. So it is one that I want to own. I mean, you don't want to own it and go into a deep recession, but if it hasn't performed, this could be one of those stocks that will actually do well and kind of catch up to the market.
These will be names that we will follow up on. Well, coming up next is Grade My Trade. That's next on Halftime. Stick with us. We'll be right back.
Seriously?
Look at the squeeze on TUP.
Look at the size of that. Is that a goat?
You talking about me?
I think this goat is saying gap.
Must be talking about the expenses health insurance doesn't cover.
So who's talking about the money Aflac pays to help close that gap?
Aflac! Gap! Aflac! Gap! It's about to go down, baby.
Stop that goat! Get help with expenses health insurance doesn't cover at Aflac.com.
From big cities to small towns and on main streets across the U.S., you'll find PNC Bank, helping businesses both large and small, communities, and the people who live and work there grow and thrive. We're proud to call these places home too. They're where we put down roots, and where together we work to help move everyone's financial goals forward. PNC Bank.
Is this your dream of retirement?
TUP is squeezing though.
I like fishing.
TUP.
Or is this a little more your style? Retiring well isn't a guarantee, it's a goal. It's easy when markets are going up. But what about when they're not? That's why you need this.
Call for Fisher's Retirement Survival Kit, featuring your guide to surviving market volatility, our stock market outlook, plus the
Is this
Fisher
guy still
Investment
even
Kit's
alive?
3 indispensable guides. Yours free for calling 1-800-213-5317.
Fisher Investments' disciplined approach will help see you through the market's ups and downs and give you the confidence you need to reach a comfortable retirement. And our fees are structured so we do better when our clients do better.
Call now for your free retirement survival kit.
I could run some damn money. Bet. Get me in there. I'll run the shit out of it. I will run the hell out of that money. Oh, put that shit to work so quick it'll make your head spin.
1-800-213-5317.
Circulon with Scratch Defense, built from 3 layers of non-stick.
I'm selling calls. I'm selling puts.
Metal utensil scrapes in laboratory testing, 130 times
I'm
longer
getting it.
lasting than the competition.
I would
Get
work
free
the
shipping
shit out of
at
that money.
Circulon.com.
I can do this.
Luxury that lets you feel infinitely you.
I'm surprised. I'm not surprised, but we did not break this level, guys. We did not break the high day and hold it. We put in a lower low.
The stock hasn't really done much. It's up 12% for the year. They had great earnings. The quick question is,
I think
what
that's
are the
got to
discussions
tell you all you
gonna
need to
be going
know.
forward, and that's why the stock really did not move. So if they can manage that, I mean, you've seen the airlines have done it. You saw Delta did it, American. So I think if they can get through that, stock's cheap. It's 6 times earnings, and you know they've really refocused their businesses. Mary Barra's done a great job. It's a cheap stock, and if we don't go into a deep recession, this is a stock that I think can outperform.
All right, so this one's for Joe. Daniel in New York bought 300 shares of Merck at $108.60. Grade this trade.
I hate to do this, but that's a C. Unfortunately, healthcare overall as a sector has really lost its strong momentum that it had in the last 18 months. When you think about healthcare now, it's really the defense, something that investors are turning away from. So Merck is getting cobbled in that conversation. The purchase that Daniel made was a little bit higher than I'm comfortable with. What I would look to do at this level is ensure that you have a stop in below the market.
Yeah, obviously higher than where we're sitting right now for shares of Merck by just a bit. For Liz, Bill in New York allocated 80% of his portfolio into regional banks. So is it time to sell for loss and invest into tech? You got a number of regional banks higher today, at least.
80% of my money.
I mean, hopefully you allocated those at some point in late spring and have seen a nice run up since then. I'd like to see you reduce that position a little bit. You never want to have that much of your portfolio in one particular industry group. I also don't think we've seen the end of this commercial real estate.
That shit sounds made up.
And you could see a credit event coming. The yield curve continues to signal that. So let's diversify it out. Get a couple defensive sectors in there.
Tell them,
and
Liz.
wait for if there is
She gives the best
in
advice.
Tech, that's your entry point. I don't think that this is the entry point here.
That makes sense. And for Weiss, Mark in Colorado sold Dick's Sporting Goods at $122. It's now at $132. Should he move on, or should I re-enter this name?
First of all, Liz, was that pass fail? Because I didn't see a grade there, Liz.
Oh, right.
You know, in terms of Dick's, look, I own it. It's cheap. I mean, retailer stocks are cheap all over except for like a Walmart. Management's excellent. I'm on the fence here because it's a unique value proposition. If you have kids, you're not buying off Amazon. You want to take them to have the experience of going to Dick's Sporting Goods and picking out whatever it is. You know, I used to love taking my daughters there, who were phenomenal athletes, taking after their dad a little bit. But you know, I don't know what the sport will be because there's the economy's bifurcated. Some are doing well, some aren't doing well. So it's somewhat of a crapshoot, but mitigating against that crapshoot is management, which executes very well. Promotions are down. Their relationship with and their partnership with Nike, which supplanted Foot Locker, is a big benefit. They also sell the latest sneakers in Hoka and on Cloud. So I like it. I'm staying with it.
Yeah, and Chairman Ed Stack always says, look, when your kids grow, right? So things like cleats and performance wear that they need to play sports, it's not discretionary. You have to go there.
Revenue.
So yeah, regardless of what happens with the economy. Well, coming up, the investment committee is making more moves. Steve Weiss just bought a stock that's up nearly 30% in the last few months. Why he says it actually still has more room to run. The name and the trade is coming up next.
We got some coffee. We got some coffee being made right now. I'm gonna run through these. I'm gonna run through some Fed charts real quick. So it looks like internet information is doing okay. Meta's or Google's up 5. Guys, it looks like everything is shifting to red. Remember I told you guys earlier in the week start watching that world and where like things shift. We were green and now it's like everything is shifting to red. Semiconductors. Okay. I mean, it looks like your banks did rebound. Oil's going back down. So it's like everything is semiconductor AMAT. Look at like AMD and them. It's like everything's going red, guys, girls, ladies, and fucking gents. Okay, let's go. Sorry, I just had to wake myself up a little bit. I get a little spur of craziness sometimes. I think we all do. It's human nature, right? So I'm just trying to see what sectors are the weakest.
Stephen Weiss on CNBC by
Man, fuck Stephen Weiss.
Health.com.
Let's hit a committee move. Weiss, you made another bet on China. Why are you getting back in? What'd you do now?
Look, China you rent, you don't own, because frankly, you can't trust the regime. But, you know, she is in a very tough spot. He's got unrest that could be brewing among the massive unemployment for the younger people. And as I mentioned last week, that typically can destroy some ruling classes. But they're stimulating quite a bit. And you see it reflected in oil, maybe not on a day-to-day basis, but overall trends up. You see it in Freeport, which I own also. He's taken the gloves off in terms of, or the restrictions on consulting companies. He's embraced technology. And Baidu is relatively cheap. I'm not going to compare it to U.S. companies. And I don't like when people say, hey, it's cheap, you know, this European stock's cheaper or market's cheaper. They should be cheaper than the U.S., all of the other countries. But this is cheap in and of itself and relative to fundamentals. So it's search. It's a good story. I like Baba as well, as you know.
Right.
And I just think now is the time to play China. They're our top trading partner. They want to bring in more capital. That's going to be very difficult for them. But they've got to massively stimulate and stop going down this inflationary path. So that's why.
So you're renting some Baidu in addition to Baba.
It'll be intermediate rental term.
Okay. Well, final trades are coming up next.
I wonder if Tesla could get a bounce. Set it somewhat of a double bottom. And I'll zoom it out too when we get to later on in the day. And man, we're just sitting here, guys. This is the range. Alright, we put in a double top at 380 on the Qs, and we have the bottom end here at like 375-ish. 376, 375.
Pacific, the shares at 237.93 now, up 10% off the earlier highs following their strong report and new CEO, new president, new chairman. That's uniform November pop-up.
Alright, so I'm gonna go make this coffee real quick. And yeah. Now I want to see if this 454.48, 454.50 becomes a rejection.
Exclusive interview with Double Line CEO Jeffrey Gunlock. That's following today's Fed decision and the news conference. You're going to catch it live right here on CNBC on the closing bell. It is now time for the final trades. Weiss, kick us off.
Microsoft, I don't think it's going to stop going down here, but you want to buy it, whether it's 6 months or a year, you look back and love that you own it.
Surat?
American Express, they had a really good quarter, disappointed a little bit of expectations. I think you want to own it for the future.
Liz?
Utilities get some defense in there as the Fed finishes its hiking cycle.
And Joe, bring us home.
JP Morgan continuing to break out, and the reasoning is really not related to the banking industry. It's more about the growth in the ETF industry, the asset management, bringing in $24 billion in inflows so far this year.
We are going to pass the baton over to the exchange as we wait and see if the Dow can close positive for the 13th straight session. It would be the first time since 1987. If it does so, we'll see if it gets there. That does it for halftime. The exchange starts now.
Thank you, Courtney. I'm Melissa Lee, and today for Kelly Evans, we are entering the final 60-minute countdown to the Fed's next decision on interest rates. A hike is expected today, but
60-minute, clap it up. Let's go. Start getting the jitters. It's coming. 60 minutes away. Powell's in the bathroom puking, nervous. He's doing the M&M thing in the mirror.
He told us about opportunities he was ready to pull the trigger on this quarter. He did. And he's
Telling you, he does it. He gets nervous as shit. I talked to him once.
Teamsters
Said
General
that.
President Sean O'Brien will join us live. That is all ahead. This as the Dow is struggling to make it 13 straight days of wins, which would be the longest winning streak since 1987. And that is where we begin with the markets. And Dom Chu over at the Telestrator. Hey, Dom.
There's part of me, Melissa, that really hopes the Fed and whatever it does gets the Dow to that 14-day, right? Because if it gets to 14, I'm already looking beyond that. It would be the first time since 1897 since that's happened. Anyway, the Dow Industrials, the S&P, and the NASDAQ are all in that typical holding pattern as you might expect ahead of a big Fed rate decision and a subsequent press conference by Fed Chair Jay Powell. The Dow Industrials just about flat on the session, up about 5 points. 35,000.
All right, so we're seeing it. The NASDAQ's leading to the downside, S&Ps are in the middle, and the Dow is getting ready to go red. Everything is turning red, I'm telling you guys. Everything is turning red.
So tilting towards the lower end of that trading range so far, and the NASDAQ
So if you guys see it coming, you're seeing the sell-off, and a bear market sell-off, you know, when you really have a sell-off, it hits everywhere. Ain't nothing safe.
Interest rates, because it is a Fed rate day, so let's check out the yield curve from some of the shorter maturity government bonds to the longer ones. The 2-year note yield ticking slightly higher to 4.91%, or
Still
just
hasn't
below that level.
changed.
The 10-year benchmark note yield.
So there you go.
just
It's
a hair below
1.1%.
moving a slight tick to the downside, and that difference between the 10-year and the 2-year government bond
1.1.
expanding a bit. Now about
Huh?
a full percentage point.
Oh yeah, that's what I was gonna say. It's 1.1. See, I did that all in my head. I did that. I've been doing that all week. It's been 1.1 all week.
Speaking about the tech trade, a tale of two tech giants today. We're talking Alphabet, the parent company of Google.
I'm so smart, I
Microsoft
know.
moving in opposite directions. Both companies reported better than expected quarterly
Clap it
profits
up.
and revenues.
Clap it up.
But Melissa,
I'm just
it often
kidding.
comes down to those growth areas.
So
In
what
this
I'm doing
case,
right
it was
now
cloud computing, where growth at Alphabet's cloud computing is getting better.
is
Microsoft cloud computing may be slowing down just a little bit. That's the reason why the divergence is there. And by the way, Melissa, both conference calls for both companies mentioned what else? Artificial intelligence a number of times. I'll send things back over to you.
Yep. Dom, thanks. Dom Chu. Less than an hour until the Fed's decision on interest rates. Steve Leisman's at the Federal Reserve with what to watch. Emily Rowland is co-chief investment strategist at John Hancock Investment Management. Subhadra Rajappa, head of U.S. rate strategy.
I was just saying, I am
Mark Zandi, chief economist at Moody's Analytics.
right now. I am going over some Fed charts. All right.
Thanks, Melissa. With a quarter-point hike expected to focus at the meeting, it will be on the guidance that will come in the press conference and whether the statement itself gives the dovish guidance from May or the hawkish guidance from June. Let me remind you what each said. In May, the statement said, quote, in determining the extent to which additional policy firming may be appropriate. That signal the Fed was not decided on whether to hike and set up a pause. Then in June, the most recent statement, it wrote, in determining the extent of additional policy firming that may be appropriate.
I got this song in my head, so I apologize, guys. You guys hear me mumbling some random stuff. If you don't know, it's Montana,
so we'll go back to something
French
resembling
Montana.
that dovish May language. He wrote, quote, if I am right and the FOMC intention is to wait until early November and then either tighten again or not, depending on how the economy evolves, and the committee will want to keep its options open this week. The market has its options open, trading with a 100%.
Why do I have
rate
UNH
hike
up,
today,
by the
but
way?
only a 20% chance of rate hike in September, and then in that every other meeting mode, she's a 43% probability the Fed gets back to hiking in November. That's elevated in recent days, but still not a done deal yet. Forecasters, well,
Ain't no way in hell they raise rates in November. There ain't no way in hell.
That's why the Fed and Chair Jay Powell will likely hike today and keep the possibility very much alive. The Fed is not done.
What do you guys want me to put here? Is there a couple things you guys want me to put up? We have Tesla, we have MSFT. I wonder if Google will start to come down. That's a shame for Google. Google finally runs and it starts a bear market. It's like Google can't even get out of its own way.
When it comes to the data that the Fed will have by the November meetings.
Let's see.
I think that's a really good observation, Melissa. I think the Fed is done thinking that the trajectory of inflation, either up or down, is a straight line. I think it got into that, it got a little burned by that idea back at the beginning of this year. You remember we had a couple good inflation reports. Not only were subsequent reports bad, but they went back and revised the ones that looked like they were good. So
Playboy's popping off. GOP, Playboy, work,
1 percentage point decline in inflation.
ABVC.
So yeah, it probably will keep going. It may keep going, but I'm not going to really change policy that dramatically until I'm sure that's where it's going.
Steve, thanks. Steve Leisman. Let's get to our panel now. Start off with Emily Rowland with what the market is looking for from the Fed today. Emily, what is your base case? I mean, everybody's base case is a 25 basis point hike, but in terms of the messaging, it almost seems like it is in the Fed's interest to send out a very hawkish message to say, you know what, everything is still on the table.
Yeah, absolutely. The Fed's probably going to need to be the adult in the room today and warn market participants that if inflationary pressures do continue to bounce around and maybe
I want to see like what's the weak sector, but I also am trying to go through this.
There is the chance that more hikes are on the table here. There has certainly been, as Steve pointed out, some welcome news for the Fed as it relates
like
to
everything and banks are turning green. Like it looks like your semiconductors are just trashed.
Components of the business
A-net,
surveys that we look at falling.
they're hurting.
But the labor market still remains tight. Look at initial jobless claims. They look like they were perking up.
Software infrastructure like Oracle, Adobe.
Been in since early February. So tough job for the Fed today. I wish we were getting a dot plot. I think it would be all over the place. It would be interesting to note the last
I was actually thinking the same thing. I was kind of wishing we would get
complete
summary of economic projections also. I was thinking the same
Emily
thing.
had mentioned what has
Man,
come down
look at
in
that
price,
trade.
but what has gone up in price. Oil up 14% just since the June meeting. We also have grains going higher on Russia pulling out of the Black Sea Initiative, really proving that commodity inflation is sticky. It's something that the Fed has no control over. How does that all factor in, you think, in the Fed's messaging today?
Not much. You know, I think underlying inflation, core inflation, excluding the volatile commodity prices that you mentioned, is trending lower. As Steve said, it's not a straight line. It's going up, it's going down, and all around. But the trend lines are all pretty good. And it's always hard to forecast anything. But forecasting inflation is particularly difficult. But I think we can state with a high degree of confidence it's going to continue to moderate.
Look at that! Look at that head and shoulder on Adobe, guys.
There's a lot more production
ladies and gents.
And used in
wow.
new vehicle prices have rolled over.
Look at that!
We know with a high degree of confidence that the growth in the cost
Hold on,
of
I gotta figure this one out. I gotta get this thing
tied
right.
Into rents, and rents have gone flat to down since the end of last year. So I think it's becoming increasingly clear inflation is headed in the right direction. It may take a while to get back to the Fed's target. I think the Fed's going to remain, strident in its language as a result. But, I think they're going to get what they want and won't need to raise rates after raising them today.
Strident meaning hawkish, Mark.
So, yeah, I mean, look, if I were them, no matter what was going on, I'd talk tough, right?
Yeah.
Because you want to keep inflation expectations down to that 2%, because if you do, it just makes it easier to get actual inflation back in.
I'll just leave it like right
they
there.
have every incentive to talk stridently, hawkishly, but at the end of the day, I think the numbers suggest that they won't need to raise rates after they raise them today.
Subhadra, what's the base case scenario in terms of what happens today in the rates market? What's interesting, I was just taking a look at what's happened since the June meeting in the various asset classes. The 10-year yield has gone up 10 basis points. The 2-year yield has gone up 40 basis points. So what are you expecting here?
Bill Gross says we'll cut
I think the Fed is going to raise rates by 25 basis points, but then retain a hawkish stance. As Mark pointed out, I mean, inflation is coming down. But
so this sector is pretty weak with like Oracle, Adobe.
Last few weeks is a sharp rise in inflation expectations. The 5-year forward, 5-year break even that the Fed looks at very closely has gone from 2.25% around closer to 2.5%. So the rise in yields, the nominal yields that we've seen over the past couple of weeks has mostly come because of higher inflation expectations. That's something the Fed is concerned about. The market is starting to price in, Fed policy that's a higher for longer. And also what higher inflation expectations means is that the Fed is going to keep a hawkish stance perhaps for a lot longer than what the market's expecting. The market's now pricing in cuts for 2024. Higher for longer would mean that those cuts might have to get pushed out further into the later half of 2024.
And how do equity markets view that, Emily? We're talking about Fed funds futures in terms of the expectations, but equity markets in their heart of hearts, are they thinking that there are actually going to be some cuts here? Because I mean, look at where we are priced in terms of valuation on a historical basis. I mean, the S&P 500 is at the very top end, if not higher than the historical average here on forward numbers. So how do we set up here?
Yeah, so equity markets have been basically celebrating every whiff of disinflation that the three of us have been talking about here. And you're seeing that all reflected in the multiple. If you look at the 20% return so far this year on the S&P 500,
And again, thank you guys for the likes, the subscribes, all that good stuff. It's greatly appreciated. This is why it helps trading with a group. Got to give it up for Teague. We hit Tesla this morning. Tegan helped us with Tesla. We all said, you know what? We like the short. We ended up taking a short in Tesla this morning. But we'll see what we got coming up because it feels like it's getting ready to do something. I wonder if it's going to front run the move a half hour before.
That's when you see the unemployment rate rise, and that's when you probably start to see some more volatility across markets.
I'm trying to bring up. All right, I got my files up.
Yeah, Mark, what do you think the Fed's messaging will be in terms of, raising rates at what cost? To what cost? I mean, cost particularly for the labor market. We're going to be talking to the UPS president later on this hour about a big win that they had. It's a great win for workers, but for UPS, it is a headwind, according to most analysts, to their earnings for this year and going forward. How does that factor in?
Well, I think the Fed does not need to raise rates to push the economy into recession to get inflation back in. I mean, inflation's coming back in with an unemployment rate that's at 3.6%, and it's been there for over a year. The so-called sacrifice ratio, the amount of increase in unemployment we need to get inflation in at this point, it seems very low, and I think that will continue. So I don't know that the Fed needs to keep pushing here and push the economy into recession or close to recession to get inflation back into target. Here's the other thing, Melissa, I'll just point out. I think if you asked Fed officials today what target they would have for inflation, privately, they would probably say not 2. That's too low. They'd probably say something closer to 3. So, at the end of the day, why sacrifice the economy to the altar of a 2% inflation rate when you really think it should be 3% inflation? So I don't think they're going to continue to push here strongly because they don't need to.
So you think they're gonna give up that 2% inflation target narrative because they just stuck by it at Sintra?
No. They're not going to give up the narrative. They're going to stick to that, again, stridently, hawkishly, because then it makes it easier to get inflation back in. But, when push comes to shove,
right? If
you're making a choice between, do I push the economy into recession when the inflation rate's 3 and my official target is 2, the answer is probably not, because they, deep down in the heart of hearts, I mean, why 2? That's not the right number, particularly in the context of the current economy.
So we're trying to peer into the hearts of the Fed officials and see what they
that's-
really want to believe
That's what
at
we
this
do all
point.
day long.
I
That's
know.
what we're
I mean,
doing here.
we're dissecting every little bit, every single twitch, every single scratch. I mean, everything. But Subhadra, I mean, if they did back down from 2%, which they have so publicly and just very recently stood by, and I know that this is all in the heart of hearts, and this is maybe internally what Fed officials want, but at some point, don't they have to say and start getting that message out even a little bit? I mean,
No.
maybe no, they don't. Don't they have to?
They keep saying 2. They keep saying 2. They keep saying 2. But I mean, they don't. That doesn't mean they need to push the economy into recession. Here's the other thing, Melissa. Look, we got an election coming up. I mean, does the Fed really want to push the economy?
The Fed is not political, Mark. Come on.
Okay, come on. No, come on now,
I
Melissa,
say
come
that
on.
a
Think
little
about that for a second. I mean, they don't want to get politicized. And if they're pushing the economy into recession in the middle of a presidential election, and they're not going to get politicized by that. I mean, so I don't know. I mean, I think everything seems to point to me that this is the end of the story. You raise rates today because everyone expects it, and then you hang tough, and the data is going to cooperate. And if it doesn't exactly, you bide your time.
Right. So in that, I mean, Subhadra, I don't know if you believe the political cycle factors into what the Fed does. It also has another sort of midway step with the Jackson Hole meeting where they could start to massage the message a little bit. And I'm wondering, if you see any sort of changes happening then.
So I think we get 2 employment reports and 2 inflation reports before the September meeting and the Jackson Hole meeting. So we should have plenty of information by the
some
time
stuff
the
that I
September meeting
do
rolls in, whether the Fed is going to hike in September or are they going to skip and then keep policy on hold perhaps for the remainder of the year. But
so look, Fed meetings, right? Especially in environments like this, you want to make sure you screenshot them, okay? Because there's been multiple times that I've ran back and I've seen the same chart set up from the morning to the afternoon, and it plays itself the same way. So after today, start thinking about taking a photo of, like, you know what I'm saying, screenshot the Fed day. You know what I mean? You'll see how we traded here. I think I have one that's kind of close to it. I have to find the date on it. It's on the picture. It's November 2nd, 2022.
Thank you all for all your thoughts.
Not the same. So, like I said, right now I'm just going through some charts.
Closing bell today for his first reaction to the Fed decision. That's of course 3 p.m. Eastern time. Coming up, a real estate seeks the $1 trillion risk to the commercial real estate market, but there are some buying opportunities, he says. He will join us on
March
set next to
22nd.
explain. Plus, a landmark labor deal worth $30 billion, according to the Teamsters. We'll ask the union's general president about the agreement and what it means for workers across the country. And as we head to break, let's get a quick check-in on the markets. Pretty quiet ahead of the Fed, but a lot can change in under.
All right, guys, we have almost a half hour. I'm going to go grab my coffee, and yeah.
This is The Exchange on CNBC.
So we hung flat. It's around 1300. Let's watch around like a little bit after 1300, 510. At like, well, that would be the Fed. Oh my God. So it should be already, okay, 13. Okay, so there's 1300 right there. It should, let's see if we start to curl up. Let's see if we start to curl this thing up. What is this, a 3-minute chart? 3, 6, 9. 3, 6, 9. Or it might go the opposite direction. 3, 6, 9. It may come back down. I don't know. I didn't know. I got a lot of them here. I feel like some of them aren't here though. Like I feel like I'm missing some, and there's no way that I did not take a picture of it. But this is our range. So what I want you guys to do is also do this. All right, because this is also going to help you guys when we actually trade it today. I'm going to be trading the indexes, and I might actually buy triple leveraged ETFs because that's a thing. You know what I mean? That is a thing too. You know, you can put on a little risk, or you know, you can just get some nice gains out of it.
The Fed widely expected to resume rate hikes today, and my next guest says that will put even more pressure
I
on the
would.
beleaguered commercial real estate market. He sees a number of distressed CRE
That's what I'm gonna do.
swelling to $1 trillion by 2025 if nothing is done to
This
alleviate
is our
distress. But he also
range.
says that with pain comes opportunity.
No,
For what he is seeing and buying, let's bring it down. People, CEO and Chairman
that
of
might
the
be too
People's
dark or
Corporation.
too bright.
Property
Oh
capital
God, that
markets,
hurts.
including New York, Miami, San Francisco,
Ah.
and many more. Too many times.
Holy
Don, it's always good
shit.
to see you.
That
And
hurt
the
my
last time
eyes.
you were on the exchange was
It looks a
end of
lot different,
June.
I'm sure.
And just taking a look in terms of
I don't
barometer
know what it
seasonality,
looks like.
taking a look at the
Y'all getting ready to
traded
see it.
rates, we've seen a real rebound. It does seem like there's a change in sentiment when it comes to the commercial real estate market. You're seeing that
Holy
as well?
shit.
I think a little bit. I think that people are being
That's
a bit
so
more
bright.
optimistic. I mean, look, the REIT stocks for New York office buildings.
I like that blue though. My S4, I had an S4 that color.
significantly. And so now they're
It's a
having a
Nagaro
little bit
blue.
of
It's more
inch
like
back
this
up.
color.
And because I think people are sensing that
Just trying to find like a
the financial
purple, like
sector
something
is
like
requiring
a
people to come
light
back to
color
work.
that'll.
And so workers are going back,
Mhm,
and so there's optimism that these buildings won't be as vacant.
Yeah.
But there's still.
So what's this going to tell me? Well, it's going to tell me if we break up and out of the range and we pull back to test it to go higher on a direction if we get it. I don't think today's going to be that big of a deal. But who's to say it is or isn't? We don't know what he's going to say.
We're just talking.
This is the
during
top
break
and
about
bottom end of the range.
alone. You've actually gotten.
You know what I mean?
You're going forward with the
So this
development,
helps when you get,
and you got a loan.
you know, upside,
We're excited.
and then, you know, you break out of it or you break down through it,
affected the same.
Mm-hmm.
Some markets
you
are
know,
doing
and
very
then you
well.
want to watch
Charlotte, North Carolina is
your
one
standard
where we're
deviation
closing on a
for when
loan
you
to
break,
commence site work for
you know,
a new development of 6 buildings. and
you know,
we'll
when you
start
get like a 2,
with 2 buildings.
3,
It will be
4
both
standard
residential
deviation
apartment
move, you
buildings,
might,
but it's a
that's when
sliding
you'll
scale.
revert. That's when it
And
like
private
reverts
credit
after the
is
4
stepping
standard
in,
deviation
and they
move.
are providing financing for
No
worthwhile projects.
All right,
We
I'm gonna
have
go
a
get my
competitive
coffee real
environment,
quick, guys,
for financing for this project.
and I'll be
you got
right
this from,
back,
credit,
and
which
we're gonna
is-
get this
I mean,
thing
that's all
going.
the rage nowadays, with especially with regional banks pulling back on their lending. In other times, would you have gone to a regional bank or a local lender for that loan, or would you have always gone to private credit?
No, we would have had a more robust competitive environment. So the competitors in this process for this loan were all private credit. In the past, it would have been a mixture of a national global bank, a couple regionals, and 1 or 2 private credit lenders. But we have done deals previously with private credit, but by and large, the bulk of them have been with global.
If I could leave you guys with some music, I would. It's gonna get copyrighted, and I mean, I should be all right now. I can do all the copywriting I want. I ain't nobody. I'm not getting paid for this shit.
So I'm wondering, how
You
does
know what I
that
mean?
change how you view the feasibility of a project? I would imagine other things have to fall
I'm not
into
getting
place
paid
in
for
order
it, so.
for that higher loan payment to make sense.
Yeah, look, the pricing difference isn't as extreme as people would look at it, because if you look at a senior loan from a bank, then they're levering up to 60%. Private credit would take you up to 80, so you would eliminate a mezz tranche that would move the blended rate up anyway. But what's happening is in places like South Florida and other new development markets, the cost of capital, along with other factors like in, say, South Florida, of insurance, for example, and labor cost, it's making projects infeasible. And so these increases in interest rates have sidelined developers around the nation.
Right. The Fed may hike today, and this very well may be the last, but it does seem like the rates will remain higher for longer, right? That's the new thinking. And so what does that tell you about the development in certain markets? Right now you're saying expensive places like Miami and New York, like it's going to be very hard to do new projects. If rates stay higher for longer, does that environment stay? Do we not see as many new developments for that amount of time?
Well, I think we'll see fewer developments if rates stay up, and if the Fed raises rates again a quarter of a basis point, then that'll just slow things down even further. But ultimately, we're going to adjust. I mean, I did business when I started our company in the 80s, and real interest rates were 9%, 10%, and those were considered very attractive. Real estate was appreciating about 10% a year, right along with interest rates. And so we operated in that environment. I think there will be a adjustment, and consumers will have to pay the price for it because prices will go up. Rents are going to go up and already have in many cities, and prices of condos and new construction of homes will go up.
You have the benefit of having that experience. Some other developers do not. Is there going to be a major shakeout in terms of you're going to be able to pick up the pieces from developers who just weren't able to handle this business cycle?
Yes, because I think that many developers, I mean, look, development is an optimistic business to begin with, so we've got to be dreamers and optimists, right? But having the experience of starting my career in the 1980s, seeing banks close, 1,000 banks close in a period of 3 years, gave me a different perspective. So I know the music does stop at times. And I think there are going to be tremendous opportunities at the, at the expense of other developers who've overextended themselves.
Are there markets out there whose demise are greatly exaggerated? San Francisco is one that I'm thinking of. I mean, for all the reports that we have that people are pulling out of San Francisco, we also have all the hype of the AI boom, which may be providing new tenants coming into the city.
Well, in general, in real estate, things have to get bad before they get better, and they have to get really bad before they get better. I believe San Francisco will be one of the first markets to come out, one of the hard-hit markets that will come out of this because it's been so bad for so long, and I think San Francisco's in a position to rebound, and we're beginning to look at that market. It is a target market for us to buy existing office buildings to convert them into residential and hospitality. So I like San Francisco's future because I believe it will continue to be the financial capital of the West. It will be the tech center of the United States. It will continue to do both of those things, just like New York City will ultimately be continue to be the epicenter for finance in the world. This will be the headquarters of the global market indefinitely. And so ultimately it'll come back. And the thing about real estate is you want to buy when fewer people are buying, sell when fewer people are selling. And when everybody's running out, you don't run out. You look to go inside and pick up the pieces. And that's what we're going to be doing.
All right, Don, it's always a pleasure to get your take. You're going to stick around, and we're going to talk to you a little bit more, a little bit later on. Don Peoples. Up next, we'll speak with the Teamsters General President, Sean O'Brien. He'll weigh in on the union's tentative labor deal with UPS and the next steps to ratify the agreement. We've got 33 minutes until the Fed decision. The Exchange is back right after this. Welcome back to the exchange. Shares of UPS shares fractionally lower after reaching a tentative contract deal with the Teamsters yesterday. The union says it gained $30 billion in what they're calling new money, while UPS says it cannot discuss details until it reports earnings. For more, we're joined by Morgan Brennan along with the Teamsters General President Sean O'Brien. Morgan, kick things off, please.
Thanks, Melissa. And President O'Brien, Sean O'Brien, it's great to have you on the air. Thanks for joining us. I just want to start with the fact that you and I last spoke a little over 2 weeks ago, and at the time there was an impasse in negotiations. Flash forward, come back to the table yesterday to negotiate. Deal struck yesterday. I guess just walk us through some of the color and some of the dynamics that took place to finally see this deal come to fruition finally so quickly.
Well, I think what happened was, there was a lot of pressure being put on UPS from the investors. There was a lot of pressure being put on UPS by their customers, and we were putting a lot of pressure on UPS by demonstrating our solidarity. And I think we proved, not only UPS, but corporate America and everybody else, that labor can be a market changer. And I think UPS finally realized that it needed to reward the members that made them tremendous success and help them earn $100 billion.
Yeah, $100 billion in revenue last year. Full and part-time workers get raises, $275 more per hour, basically effective immediately in 2023 once this gets ratified. You got rid of this two-tier worker system. Another paid holiday, ends the mandatory overtime, air conditioning and new vehicles here. $30 billion in new money is what you're saying. UPS is not commenting on the total, and I think the expectation is we're not going to get a comment, if we do get a comment, until earnings August 8th. How do you get to that number?
Well, we get to our number because we cost it out. We have economists that, similar to UPS, they cost out what the agreement is. We know what the economics were. And just for the record, part-timers on average will receive a 44% wage increase over the lifetime of this agreement, which is tremendous. I mean, it takes people out of poverty wages. It's going to change a lot of lives for families. Full-timers will get a $7.50 wage increase over the lifetime of this agreement, as both part-timers and full-timers deserve. I mean, think about what they provided to this country during the pandemic. CEOs, investors were getting rewarded with record dividends and bonuses, and they never touched a package. And our members finally stood up and got what they deserved.
Voting begins August 3rd. It ends August 22nd. Is there any risk here that of 340,000 Teamster members at UPS that this doesn't actually get voted through?
Well, the one thing we would never accept an agreement unless we believed in it, and we believed this was as far as we could go. The last contract with concessions under the previous administration was a $13 billion deal. This, we reversed all the concessions, and we got a $30 billion deal. We are going to endorse it and fully support it and encourage our members to vote for it.
Sean, you mentioned, this is Melissa Lee, you mentioned your economists on staff there. What does your economist see in terms of the economy overall and the long and lagged effects of the Fed's interest rate hikes? We're talking about a Fed meeting. It's going to happen today. They're going to raise rates once again. A lot of analysts on Wall Street are concerned about the impact of this deal to UPS earnings. Stifel has a note out today saying an incremental of 4.5% above costs that were modeled. They say, quote unquote, unequivocally a headwind to earnings. I understand this is a big win for the everyday rank and file at UPS, but how do you sort of weigh your gains with the cost pressures that UPS may face?
Well, I think, look, one thing's for certain is that everybody's concerned about the economy. Everybody's concerned about interest rates. But, and that's all relative to what goes on in Wall Street. We're concerned about Main Street. We understand that there could be tough times ahead. But like anything else, when recessions hit, we eventually come out of recessions. We couldn't wait on projections and hopes and promises that it would get better. We had to capitalize now on what was in the best interest of our members. And UPS is very, very smart. They're a successful company, and I'm sure they'll be able to navigate through whatever challenges they have financially supporting this agreement.
They averted a strike at Yellow as well, which is the third biggest U.S. trucking company that specializes in LTL shipments on Sunday, or I guess on Monday as well. So whether it's UPS or whether it's Yellow just before it, how does this speak to a broader playbook in terms of key requests or demands that you're hearing from union members and prospective union members that they want across companies and across industries right now?
Well, we've got to look at every situation differently. UPS, very successful, had $100 million earnings. Yellow has been struggling since 2009. Our members consistently, since 2009, have given concessions back to Yellow, all in the time where they're getting infusions of cash from private equity and the government. And our members have hung through, had their pensions cut, and Yellow's had a lot of promises on the table. Look, we don't want to see anybody lose their jobs, especially 22,000 Teamsters. But, Yellow has to be held accountable.
All right, guys, I'm going to run out. I got my coffee. I'm going to get the no lag.
And they should have managed it a
I'm
lot better.
going to get this FOMC
I think at the end of the day, we're all trying to work together to find a reasonable solution.
FOMC meeting up.
Get Yellow back on track.
Get ready. Listen to some music. Get pumped up. Whatever. Listen, this range. This is always good for Fed days. I got this range here so I know. It's a visual, easy look at when you break up and out, break it, then you're going up and out. You want to know your standard deviations, 2, 3, 4. If you hit a 4th standard deviation, you're usually going to see it literally reverse right at the 4th standard deviation. But that's why I have this here. It's just easy to, it's really easy to trade. It really is. It makes things a lot easier for when shit gets going, and you don't have to think too much. And
Morgan, thank you.
Okay.
Corporation Chairman, CEO
So
Don Peebles is
yeah,
still with us.
yeah.
Don, this is not the only successful strike. We've had labor being very
All right,
active across the
so
country.
man, I don't know if I can get it like a little duller. Does that hurt your guys' eyes? Is it too much?
How does that impact what you do? Because the costs are increasing for businesses across the board.
Well, I think first of all, I think we do need to have a more equitable society. We
need a more
massive wealth
equitable
disparity. So I
society.
think
What the hell does that
people who are
even mean?
especially on the front lines, like the Teamsters, who help save the economy, because what would we have done without delivery and without being able to do online? But so did Amazon, and so did these other companies. I think what labor has done, we just did 2 deals in California with organized labor. The Building and Trades Union in Los Angeles and the Hotel Unite here in Los Angeles as well. Both
Let's
of those
get it.
deals were
I know,
hard
I'm with you, bro.
But they were
I'm ready.
deals that
I'm
made
ready
sense
too,
for
bro.
the workers, gave them good wages, good benefits.
I got some
and
music.
also
You know what?
gave
I
us a
feel like
good,
getting
reliable,
copyrighted today.
professional workforce. And so there's
I'm gonna
a
play some
compromise
music.
between the two,
I'm gonna
and you
just-
get what you pay for in this country. And so if you want good products, you want good workers, you want people who are going to be committed to you, then you've got to pay.
All right,
them.
so
And
I'm going to be
we
right
operate
back.
from the
2 minutes.
perspective
We
that
have 20
margins of these
minutes.
deals,
Guys, get
maybe
ready.
some of the other sectors,
What's going to be
such as
important,
entertainment,
guys,
for example, ought to be cut. So,
is more
we've been able to work with
him
unions, and we do
taking
this around the
questions
country, in New York
on the
City as
podium.
well.
And
it's all about
they're going to ask some stupid ass questions. I'm telling you, they're going to ask some stupid questions. Because some of them you're going to be like, really? This mother trucker is in here asking the federal, the head, Fed chair questions, and this is what he comes up with and asks last week. Or last meeting, the dumbass from Wall Street Journal says, why did you pause rates? And he literally just said why he did that. Because they went from 75 to 50, from 50 to 25, and then from 25 to end it, they'll pause, give one, pause, probably stop. And leave that last one to say, hey, maybe we'll need it, maybe we won't. Hey, why did you give us a rate hike? Why are you doing 25? Why did you pause last week? What? Were you not listening? So you'll see a bunch of overpaid idiots in here. I mean, some of them, granted, this isn't their first rodeo, but I couldn't believe some of the stuff that was asked there, guys. It was crazy. So, yeah, I'll be right back. I'm going to get all this stuff up. I'm going to get the Fed. I'm going to get on the Fed's site. So when the paper gets released, we know what's going on. Maybe it talks about balance sheet reduction. I don't know. I don't know if they want to right yet.
There'll be great opportunities here, and I believe that New York City, as I said earlier, will be the
but I would also think if they want inflation to come down, why don't you just do it? Get it over with. Stop playing around with it. That's also one thing I don't understand, is why they play around with it. Like, just get it over with. Do what you gotta do. Get it over with. Sink the economy. Like, it's not what they want to do, because their job is maximum employment and price stability, which right now they have. I don't know. but you're still giving rate hikes and stuff. So it's like, if you think if the economy's still hot, then just, you know, do what you got to do and get it over with. Send it to 6 and say, you know what, we're going to give you a 25 this time and we're done. Guarantee you the market would shit. Market would shit and we would be at 420 end of day. Bet. I don't know about 420, but, you know. So, all right. So, yeah, I'll be right back. You see here, like Microsoft, you see how it got to like the 5th standard deviation? I want the actual lines. I want to know where the lines are on the chart, at what price is the standard deviation at. Like, where's 1 standard deviation, where's 2? Maybe I'm just going to have to add it up myself. I'm just going to have to start doing that. Because I'm telling you guys, your rejections, usually, like, there's so much you can do with it that makes trading so much easier. I don't think a lot of people talk enough about moves in a daily, like daily moves, like TUP right now, like getting up to that 2nd, 3rd, and like that 4th standard deviation. When you have like a blow off top, it'll get to the 4th standard deviation and then reverse. I'm gonna have to look it up because I really want to know how to get this on my screen, where I can have like a small lines, like turquoise line or something, where I know that like here's 1 standard deviation. Above that's 2, 3, and then 4. That way, as we trade up, you know, that's when you can look for reversals, and you can use it to also take profits with. You know, that's like one main reason on why a run runs out of steam. I do know the VIX standard deviations by heart though, because the VIX is
Meta's ad metrics, updates on monetization within threads and reels, and any advances
so the VIX is sideways.
AI and metaverse will also be in focus. Jeff Kilberg has the trades today. He's KKM Financial founder and CEO and a CNBC contributor. Jeff, you know, in the after
so what's weak today? I gotta go. I gotta hurry the fuck up. Excuse my language.
What's the setup here?
Excuse me, language.
Well, it's interesting, Melissa, and I think you're absolutely right. There's 2 narratives right now for traders and money managers going into this after the bell earnings of Meta. And the fact of the matter is that Google, we did.
I think this guy played for Notre Dame.
When we
yeah.
look at Microsoft, they really peeled back the onion.
Or went to Notre Dame, I should say.
Moving in 2023, it's artificial intelligence. And what
Alright,
actually
so
Microsoft said is a little disturbing.
what
That's
could
why
I
you're
play
seeing
today?
Microsoft down
What's
5%
volatile?
today.
What are you guys looking at? Like, is there anything that's like been moving today? Not really. I guess everything's kind of just been doing the damn thing, just been chilling, I guess.
I want to be a buy here. I actually still own it, but if you have apprehension here, because
and I will be taking a I will be screenshotting this chart, and I'll save it for, because I'm telling you guys, they're useful. You'll see the same patterns. You'll see a little double top, come up, hold it, bang. Stocks can only trade so many ways, and you'll see it again. Got your little bear flag here. Do we get a failed breakdown and come back up? We'll see. It's a nice little bear flag there. What the fuck?
I bought this IPO at $38 a long time ago, so I am a believer in the hoodie, but you have to trade around this name.
All right, let's move on to Chipotle, the fast casual chain up 50% this year, hitting an all-time high last week.
Need
as the
to
company
know.
continues to maintain pricing power. Analysts listening for menu price hikes, any labor and commodity issues, and improvements in traffic trends. You're a seller though, Jeff. Why?
Well, are you familiar with their barbacoa, their flavor of meat? It's just a little too spicy for me, Melissa. And I think that's what's happening here. If you look at just the dramatic move higher in the stock from its IPO, right? It's up over 4,000%. But I think, again, when you talk about, there's potential a stock split, and that's always a unique reaction. But I think when you talked about the projected revenue of $2.53 billion, that's a 14% year-over-year growth. So again, I want to use options to protect here. I want to sell the at the money, call it the 2090 strike, and I think you can collect about $84. But again, when you talk about implied volatility.
Oh my God, we got 15 minutes left. Shit.
I think you do see a lot
See,
of
it gives
momentum
me
in
this
stocks that are
line.
above the 50-day moving average. So I am cautious here, but if you don't own this stock, I don't see how you buy it here, Melissa, after being 50% year to date.
All right, we do have a quick programming note. Chipotle CEO Brian Niccol will join Jim Cramer on Mad Money tonight after the results cross. And let's end here on MasterCard. Shares are up 15% this
Okay,
year.
high,
and
low,
an all-time
close.
high on Monday on the heels of Amex
3,
and Visa's
4.
strong consumer spending numbers. Investors hoping MasterCard will report the same. UBS also noting MasterCard should benefit from cross-border
Account,
payments.
open
as
interest,
travel remains
volume,
strong, but Forex
open,
wins.
high,
Headwinds
low,
could also ramp
close,
higher.
4.
Jeff, you like MasterCard?
I do like MasterCard. I actually own Visa. I do not own MasterCard, but I'm thinking of implementing it. I think you hit the nail on the head, Melissa. When you talk about those cross-border...
Is this on an
they're talking
intraday
about
basis?
international fees, which are much more lucrative. So if it does stay in the wake of Visa, you are going to see those international fees come into play. But I think with a forward PE ratio of 33 times versus Visa just at 27 times, it looks a little more expensive. But pick your metric, Melissa. If it's a 1-year, year-to-date, 3-year, 5-year, we have seen MasterCard, which is 30% smaller than Visa, outperform.
Yeah, I just don't want it on that move.
At this earnings to buy it.
All right, Jeff, thank you. Jeff Kilberg, KKM,
Fuck.
still ahead. The Fed's rapid rate hikes have already helped push interest rates on credit cards.
That's all right. You know what I'm going to do? This is what I'm going to do. This is what I'm going to do. I'm going to take this away.
High rates on cards, mortgages, and more could go. That's next.
So what I'll do is I'm going to give us the one at the bottom until I can figure out how to get that like stacked. Like 1, 2, even like 1, 2, and 4. I'm not even really worried about 3 standard deviations. I could, but they're so useful, guys. They're so useful. Because you get like a breakout and then you get the reversal and then it's like you can only read in the time and sales and level 2 can only do so much for you. But using that with standard deviation will really help. No, not the channel. Fuck. Alright, guys. Let's do it. Let's go. Y'all haven't liked, share, subscribe. Let's get it. Like, share, subscribe. Thank you for joining us. If you're new, any questions, throw them in the chat. I'll try my best to get to them. Any questions, just throw it in the chat. Alright, let's do it, guys. We got 10 minutes, gang. We got 10 minutes.
Used car loan
I've
rates
got
nearing
Nvidia up
8%,
here.
with subprime auto delinquencies becoming worse now than during the Great Recession. While the
All right,
30-year
I'll be
fix
right
is now
back.
just below 7%, the rapid rise there has reduced buyers' purchasing power by more than 30%. Joining us now to discuss this is Ted Rossman, the Bankrate Senior Industry Analyst. Ted, great to have you with us. We all know that all these rates are going higher, will continue to go higher with more interest rate hikes. What are you seeing, though, in terms of any potential cracks in the consumer?
Subprime auto delinquencies are the biggest area of worry. And I think that's even more of a rising price story than a rising rate story, just because we know what's happened with car prices. I mean, the average new car price is pushing $50,000. A lot of people are having a hard time swinging those payments, especially those with lower credit scores. Credit card delinquencies are basically back to pre-pandemic levels, but that's pretty low historically speaking.
Yeah, HELOCs are another area. Of course, it adjusts with every adjustment in the interest rates. And so I'm wondering how much is there out there at this point in the cycle? Because I would imagine that when rates were close to zero, people took out bigger mortgages and just got cash out.
Yeah, I think the main point about HELOCs is that this used to be a low-cost form of borrowing. I mean, as recently as early last year, we were talking around 4% on average, and now we're north of 8.5%. So, you know, all of a sudden, that's really catching up to people, and I think that's a big point about the Fed's rate hikes, the cumulative effect. Month after month of high inflation, higher rates, that takes a toll, especially on variable rate debt like credit cards and HELOCs.
Right, and so give us an example, because you have the example of the notes of the average balance according to TransUnion. The average credit card balance is $5,733. And talking about cumulative effects, you may be able to pay out that 20% on that for 1 month, for 2 months, but imagine this going for a year, forever, however long, higher for longer.
All right, so what are your guys' thoughts as we go into this? You think they say anything about the balance sheet? Do you think...
You'll be in debt for 17 years, and you'll pay about $8,300 just in interest.
Let's see what happens when this transcript comes out.
We see more people carrying credit card debt, and for longer periods of time.
And what you guys can do is just go to Google or wherever it is you go to, Bing, Google, FOMC minute, FOMC. Google it, should take you to, should take you here.
And yeah, we're talking like $14,000 total.
That's a hefty price for something for $5,000 of debt. What concerns you the most about the consumer at this point? Unemployment still 3.6%, so historically low still. They've got the jobs, they've got wage increases as well. Should we be really worried about this right now?
Right now, I think things are better than we would have expected. The job market, though, can be a lagging indicator rather than a leading one. So I think that's something that we worry about, just in the sense of, hey, there's only one way that unemployment can go from here. I mean, it has to go up. A lot of the forecasts are pretty benign. You know, maybe it goes to 4 or 4.5. Not to minimize those job losses, but that's pretty small in the grand scheme of things. It wasn't too long ago, we saw double-digit unemployment during COVID. We saw double digits back during the Great Recession. We're a far cry from that. I think that's what's propping up the consumer now, the strong job market.
How does buy now, pay later factor into all of this?
That's such an interesting
2 o'clock.
Because it's cutting into credit cards a little bit. But that industry
2 o'clock we have obviously the
rapid rise in interest
the rate decision.
This is a
okay.
business that's really been predicated on low rates. So right now I think the consumer
we have the rate
there.
decision
from an
and
standpoint, the bloom is off the rose a little bit. But credit cards are still dominant.
All right, Ted, thanks for coming by.
And then 2:30 Powell will.
And that does it for us here at the Exchange. We're
be
just
out
minutes away from the Fed's interest rate decision.
to take questions and stuff like that.
Right after this quick break. Stay tuned.
So let's see what we got. We have a base that we put in here for resistance. You have an area right here. Yesterday's close on the top side resistance, and then previously our lows. So we're stuck in a nice little range here that you get going to either side, you'll see the top end or the bottom end of either side, which on this end would be can't really see it there, but if I go here, they ain't talking about. So we have 6 minutes. 6 minutes, everybody. Everybody, we got 6 minutes. So far we found support. If for some reason 454 breaks for a reason, you'll probably break it, pull back, retest it, Powell comes on. Do we get down to 451 or 452? That's what I'd like to see. I want to know, where are we going to close? I'm getting all my levels ready. 5
minutes to the Fed rate decision.
So I would like a push back to 454.50. 454.50 on the SPY if we reject to go lower. And then the bottom end that I'd like to get to would be 452. All right, that's just me though. All right, those are my levels that I'm watching, and then obviously to the upside is going to be the trend to the upside, or the previous high. Pretty much previous high, previous low. All right, guys, I'm going to bring everything up. Let's get it.
Before we get to our panel of experts, here's
Be patient. Wait for Powell. Or, you know, you can scout. You do what you want. You know, I don't know what you do, how long you've been doing this. But be patient. If you want to be good at this, patience pays. Just like today, Tesla short. You know, it's as easy as that. You know, just be patient. Wait for something to put in. Trade the reversal. All right, so I got my level here.
David,
Fuck, they ain't talking about.
What else are you looking for here?
Well, I think, first of all, I think they'll change their language about subsequent rate hikes. So instead of talking about the extent to which they will raise rates,
so that level is
they'll talk about whether they
454.
raise them at all. And I don't
Chevy
think
Ryan
the
Hot
only
Boy.
question is, will they raise them in
That's
November?
454.
Also, I think they have to admit that inflation's come down. I mean, yes, inflation may
yes,
be
I'm being an
elevated from
idiot
their
right now,
perspective.
and then we
We've gone
have.
from 9.1 to 3.0. You know, when the Fed talks about credibility, they
Oh,
need to
come
at least
on.
mention that if this is their number one goal, is to bring inflation down.
What about that point, Stephanie?
I wouldn't mind seeing, honestly, if we could get down to.
Made some progress here.
So I have. I'm going to give you guys my downside levels here. 454. Okay, 454 on the, and this is the S&P.
Should be more measured at the press conference of the press release.
454. The other level is going to be 452.93, 453. Call it.
6.6 to 4.8. The big
Okay.
number this week is going to be core PCE because that's still around
453. They're all dollar ranges, it looks like. And then one last one at 452. That's crazy that they're all dollar ranges. That is pretty crazy.
The rates will remain high. And by the way, watch commodity prices because commodity prices.
And actually, there's one more level. 453.50 is also another level. 453.50.
Since the last Fed decision, grain prices are up
All
as
right,
well
boom.
On Russia.
So I got 3 levels now, and then obviously we go down to the lows.
Here, especially because base effects go away. So it's going to be a
That
little
should
bit,
actually be
not
down
as
by
clear
like
that inflation's coming down in the second half
452.75
of the year.
actually.
Yeah, listen, Melissa, I think that's a really good point that's being somewhat overlooked by the markets at this point. So we also
All right, final level is going to be 452.
down to 3%, but a lot
That'll
of
be the
that
final level that I'll be looking at, and that'll bring us down to that previous pivot high where we'll turn it into support.
So
Maybe we go down further. I don't know.
was getting inflation, headline inflation down to 3%,
All
getting
right,
it down
but
to 2 and keeping
those
it
are the levels
relatively
I'm
low
looking
near
at.
target is going
Good
to be
luck.
key. The second point
It's getting ready to come out. 2 minutes. I'll have the
they're going to focus on the core, whether it's core
whatchamacallit out also.
which is their preferred measure, and those core numbers are
Squawk
still somewhat
box.
sticky. Those numbers are still likely to come down. It's just a question of will they come down
I want to see if we get a pop to 455.
those low levels, and I think the Fed is still worried about this. So I'm going to say
We'll see. Maybe we get upside. Everybody's expecting us to go down. What if we just rip higher through to 460? We didn't hit 460. We hit 460 on futures, but
building in additional risk that they could
it's getting antsy. This might be a non-event also. We have so much more that,
Jim, what do you mean when you say base
you know,
effects? Is that
unless
in the
Powell
comparable
gives us a
effect or what?
a reason to be for this market to move, we may not do much. All right.
Month-over-month CPI.
That would be cool if we tested yesterday's close. I don't know who has puts, who has calls, but all right, guys, let's do it.
Back to you.
Let's do it.
Jim says that there are some places. In
CNBC is going to be a little late, so don't worry about CNBC.
Sticky. Do you agree or disagree
All right.
with that?
I'm going to turn this up.
I mean, we've got owner's equivalent rent. That's beginning to come
Okay.
down. And
Boom.
There's a lot of stuff in the automotive services
Boom.
area, but we think that's going to come down too. So we really don't see much stickiness here. If you can just be a little patient here, I think we'll hit 2% inflation by the PCE.
15 seconds. I should be refreshing this and it show us. But you're going to hear it on the Squawk Box, guys.
But I think that really is about shelter and about the way they measure things like auto insurance and auto repairs.
Good luck.
People
Again,
talk
be
wage cuts, but
patient.
The truth is, these wage gains are really compensation for past inflation. I don't
Quarter of
think
a
they're really
percentage
pushing
point
inflation. They're
raise
slowing the pace of
by
inflation
the
coming
Fed.
down, but I still think we're headed right
Fed
back
will
down to
continue to
two. I think
assess
Fed
additional
should have
information
some
and its
confidence in that.
implications for
Less than a minute to
policy.
go, Stephanie.
Says
We
inflation
had the
remains
S&P 500
elevated.
up 5%
Policy
since
setting
the last
committee
Fed
remains
decision.
highly
What's the
attentive
first
to
thing on your
inflation.
screen that you take a look at when that decision crosses?
Says recent indicators
well,
suggest
the overall
economic
reaction,
activity
but I don't
has
wanna
been
get too
expanding
caught
at
up
a
in the
moderate
short term,
pace
'cause we gotta
versus
hear what
modest
he has to
pace
say, and then
in
we
June.
usually have to digest
Fed committee is
for
strongly committed to
24
returning
hours,
inflation to
sometimes
its
48
2%
hours.
of
Tighter
GDP.
credit conditions. Here, I'll let you guys listen.
Recent indicators suggest economic activity has been expanding at a moderate pace versus modest pace.
They decided to raise the target range for the federal funds rate to 5.25% to 5.5%, so unchanged.
I guess the suspense is whether the Dow finishes with yet another day in the green. It is on the cusp right now. Let's get to Steve Leisman with the results of the Fed's decision.
So nothing on the nothing on the Fed's balance sheet. That was the last thing. Watch yields. That's where I should have had this. See, nothing so far. It may not be an event. We know what's up. We know they're not getting off of their ass on the balance sheet reduction. All right. Then we have the FOMC press conference, obviously, but pay attention to the 2-year. What did Bitcoin do? Actually, so it sold off. Bitcoin's still hanging in there, I feel like.
I guess a modest upgrade, you could call it. Job gains were robust. The unemployment rate remains low, and inflation remains elevated. Concerns remain in the statement about tighter credit conditions from banks, but those effects were seen as uncertain. Very much a carbon copy of the prior statement, guys. The only difference here is they took out holding to raising. They raised by a quarter point, and now they're back into this mode here of determining the extent of additional policy firming that may be appropriate. So there's your guidance line. Have at it, Tyler.
The language there, David, on extent, it's clear that they did not say whether additional policy firming is required.
I think, and unfortunately, I think we're going to see that in Chairman Powell's press conference too, where I'd be interested to see. Last time around, he talked about further rate hikes.
What are you guys' thoughts?
Further rate hikes.
I want to know your guys' thoughts on this.
I think that's still no
All right.
question. Will they talk
You
about
see everywhere, everybody talks about it's such a big event.
But still
It's only a big event if we get a surprise, if we don't know what the hell's going on. All right.
Saying, hey, we made some progress in inflation.
So, recent indicators suggest economic activity has been expanding at a moderate pace. Job gains have been robust in the recent months, and the unemployment rate has remained low. Inflation remains elevated. It doesn't. It really isn't. And you're getting PCE this week. The committee seeks to achieve maximum employment and inflation at the rate of 2% over the longer run. What is the longer run? 2 years, 3 years, 5 years? I don't know. In support of these goals, the committee decided to raise the target range for the federal funds rate to 5.25% to 5.5%. The committee will continue to assess additional information and its implications of monetary policy. And the assessed appropriate stance monetary policy committee will continue to monitor blah blah blah.
I think they're playing with fire and they don't need to. That's why it's unfortunate.
What is so surprising? I mean, what is so surprising though is that we really haven't seen too much of an impact so far, at least when you measure it by the stock market and asset prices, right? I mean, the fact that we haven't seen those lag effects.
Yes, because
Jerome H.
we had a great
Powell.
recession back in
Guys, for
2008. If we
media
had a recession,
inquiries, you can email them.
So we're looking at baby recession if we have
Say, hey,
one,
so
and
can you
also
guys,
inflation
you know, if you
eventually.
want
And
to
of course, if they do overshoot, we'd end
ask
up
their
with
thoughts, look,
lower
we're still
inflation.
right where we are.
I think the stock market's able
We're
to
literally
process,
just
this
right
cycle,
below
this
where we
cycle.
opened,
It
and I
doesn't mean we need to have a business
fucking
cycle
said it again.
out there.
Trying to tell y'all, don't fall for that shit. Yo, come spend $1,000 with me. Give me like $2,000. It's gonna be a big day. Nigga, fuck out of here with that shit. Alright, so we did get out of the range.
To me, the issue is hot or hold. Guns hot
Oh,
or
that's my
hold.
guy.
Do they skip? Do they go passive? Do they let the markets work? More active approach? I think the latter is the route they're going to end up taking. And everybody's been bringing up data. I like to look at all the percentages. It really makes this somewhat easy. Non-farm jobs from the first half of this year to last half of last year are down 21%. Private payrolls in that same period are down 32%. We were talking about CPI earlier. Yeah, 9.1 down to 3. That means a 67% drop. If you look at core, it's a 27% drop. These are real numbers, and it's hard to argue with. I agree with David. We have no idea for sure where inflation goes, but it certainly seems as though it is going to continue to come down. And when we look at some of the year-over-year numbers, I understand there's some nervousness there, but I also see a definite move in the month-over-month numbers, especially on the inflation side. People point to confidence as one of the strengths. I understand that, but that's skewed. Confidence always seems to follow the
confidence
stock
is
market.
skewed.
So that's what we're left with. The stock market, why are investors fighting the Fed? Are they? And if they were, it makes it a whole lot easier to fight it now because they're definitely in the 7th, 8th, or 9th inning. And it's going to be that much easier for investors to now think, hey, money markets look pretty good, but are they going to continue to look good? Have we missed the boat? FOMO with regard to missing the stock march up higher could be the 13th day today.
That's why you'll get money going into the money market. That's such a good idea what he just said. Did you guys really get that? If you understand what he just said to you.
Put another bet out there. I lost because they hiked this time, but I say they're done for the rest of the year.
I do too.
Babazani, as they used
I
to
think
say
they're
on
done
the
too.
exams in college, react and discuss. Yeah.
I seriously think they're done too.
We're not getting any knee-jerk reaction. Normally we move 10, 15 points.
Bob Pisani, we haven't been, bro. That was CPI day, or those were the inflation days.
I think the important thing is everybody understands Powell's not going to close the door on rate hikes, but I'm not sure one rate hike in November or any time is going to make much of a difference.
Right, it's not going to make a difference. You paused.
Moving in the right direction, and Stephanie has always
I said it last Fed meeting. I told you guys we were going to get another rate hike. Do I think we get another one?
3%. If you get a 2 print on there, that is going to get a lot of press. If you on the core, it's 4.2%.
I don't know. This time I'm not sure.
We hit in the 3,
I don't know.
with a 3 in front of it,
We're at 5.5.
So moving in the right direction. I think the risk at the press conference is Powell does not endorse the market's viewpoint. The market's viewpoint is the soft landing, and rate hikes are essentially.
So, I mean, I don't know. What do you guys think? Do you guys think we'll get another rate hike next meeting?
We're coming in hot on stocks. We've got a record run on the Dow. S&P is at a new high. Valuations are high, and we're entering a seasonally weak time of the year.
Look, we can't break that level.
For the stock market. So
I wouldn't be surprised if we start breaking down from here.
Definitely to the downside. One final point. There's a whole school evolving down here that's arguing that disinflation in the third quarter is going to be the biggest problem for the stock market. Companies are already saying they're having problems raising prices and they're cutting costs to deal with the fact that their margins are getting squeezed a little bit. That's sort of a disinflation story, and that's a potential real headwind for stocks there. It's sort of the opposite of the worry that we had just a couple of months ago.
Maybe they're having a hard time raising prices because they've already raised them so much.
Yeah.
Thank you. $17 for a jug of detergent at the grocery store.
Yep.
That's pretty high inflation, folks. Jim, Karen, let me turn to you. I mean, David mentioned the idea that if there's a recession, it's going to be a little baby one.
So what do you guys think? Do you guys think we get a 25 or something next week? As of right now, if we go on and nothing has changed, do you think we get
Look, I'm in the camp that
some hikes? We still get one more 25.
I'd like to see the recession recession come quicker. I'd like to see it.
I would
start in the
too.
fourth quarter, because the sooner we have a recession,
The sooner we can get
mild
it.
it's going to be. The longer it takes
Yeah.
to have one, the more excesses that are going to be built up, and it could be more devastating. So look, I do think it's a more mild recession, but now we have to then think about how the Fed is looking at this, right? If we have an inflation problem, if that's the view that we're in right now, that's the baseline, then okay, we cut rates and then we resurge with inflation. Then I start to look at the yield curve and I say it's very, very important.
What I tell you yesterday, did you just get that? JP Morgan
Do those back end rates have to come up?
buying $2 billion worth of
So I'm not sure that the back end of the market might be hearing this soft landing.
of
The back end of the market
mortgages
seems priced more for harder
in that
rates.
Pac West
I think
deal.
there's some disconnect there in the markets.
You just got
let's
it.
go back to you. We are not too long away from the Fed's press conference at this point. What's your number one question?
Well, before I get there, Melissa, I want to make a comment about the idea that a quarter point doesn't matter. I think people need to be aware of the kind of fine-tune engineering that Powell's trying to do here. If you go back and look at what's happened to the 2-year since June, remember, the Fed held in June, did not raise rates. What happened to the 2-year? It gradually lifted higher. What happened today? The 2 years down, a couple bips, maybe not at all. What's going on here is that the chairman is trying to kind of tweak or fine-tune the funds rate, not without, at least in the 2-year space, being a huge decline in rates that would be stimulative to the economy. Right. So that's why those other 25s or the additional 25s and the possibilities, that's why it matters. I think it's a bit like a balloon. You get up there and you put the
Listen, remember you guys have
altitude level. That's what he's trying to do.
triple Qs, or TQQQ, SQQQ, all that fun stuff
the chairman has about the loosening of
that you can also use to your advantage. You don't have to go crazy. It's also better to short the NASDAQ than it is to SPY anyway.
The short end of the yield curve. What I think he's trying
I mean,
to do is keep those yields high.
you can make money on both, but it's like you'll have a tendency to make more on the NASDAQ because it'll give you a much further percentage.
Create stimulus from the stock market as well as from the bond market.
I mean, since the June meeting,
I'll short the SPY and stuff like that, but
and the S&P 500 has gone up 5 percentage points.
if I can, I would rather do it with the
How do you think that
Qs.
factors into the Fed thinking? I mean, in a way, markets are telling us that the worst is behind us. And the
Let's
things
see if we
are
get a rally,
on.
a little
You
bit
know,
of a rally on
the
our
risk,
hands.
has been to the upside for the markets. The pain trade has been to the upside for much of this year. People didn't want to believe that things were going to be a soft landing, that we're going to have a soft landing, and yet now everybody is coming around to that thought. So how does that set us up for the back half, given the the possibility that the Fed could be on the sideline for the rest of the year?
Well, we'll see if they're going to be on the sidelines, but they're definitely at the latter stages in terms of hiking rates. That being said, they're not going to ease anytime soon, Melissa. They didn't just work this hard for the last year just to turn around and pivot. So we're not talking about that between now and the end of the year. And the reason the market is going up is because earnings have stayed pretty good. Not great,
Correct.
but pretty good. They haven't collapsed. And that was the call from many people that earnings would collapse. And that's because there's so much underlying momentum in the economy from all of the stimulus that was put into the economy. And we just had the infrastructure bill go through. So that's kind of offsetting what the Fed is doing to some degree. I think in the press conference, I'm going to be interested to hear what he says about where we are with financial conditions, because that'll be interesting to see how he answers that. But overall, I think the statement was exactly in line. The economy is doing fine at 2.4% in GDP. Jobs are strong, wages still and inflation still remain too elevated. And so we'll have to see what they say. But I think they stated the obvious in the press release.
Rick Santelli, we've gone around the horn. Why don't we come back to you if you're still there with some reaction? You still have an inverted yield curve. You still have some concerns out there about a slowing economy. Wrap it up for us.
Well, I think we are not up 40 basis points, by the way, since the June meeting. We're up half that. We're up 20. They're basically at 469. We're at 489. I think if I had to wrap this up, the inverted yield curve is sticky, and I do exactly agree that we need to steepen it, de-invert it. But my feeling is the de-inversion is going to mostly be by short rates moving lower. Consider this. Yes, we moved 20 basis points roughly in 2 since last meeting, about 10 basis points in 10s. but the stock market has zoomed rather aggressively since then. And if you look at just how much the stock market has moved, really, since the June meeting, and compare that to money market rates, it certainly looks as though you have a tough choice to remain on the money market side. Having said that, there is a risk, of course, that stocks may start to move a bit lower. But all things considered, I think that the Fed models, and the relationship with the labor market are most likely a bit distorted. And I will continue to say that the first half of this year looks significantly different than the last half of last year by all the important metrics of the Fed, from the labor markets to inflation.
What would your question to the Fed be, Bob?
Well, I asked the same question on the stock market. You brought up a great point, Melissa. You're a good market watcher. The pain trade all year has been market goes higher because people have bet against the soft landing. Now this is all starting to change. The pain trade is for the market to drop, rates to go up. So I think the logical question here is, what issues does he see that concerns him right now? And he's got to say the stock market in some way, because to them, that's a wealth indicator. And that, of course, pushes up perceptions that everything is okay, and does not help the idea of a slowing economy. He does want a soft landing. He said that, but he said he is willing to go through some pain to make sure that inflation gets down to that 2% target. I can't help but think that a record streak on the Dow, S&P at new highs, 20 times forward earning valuations in expansion range for the economy helps the idea that the market's going to slow down. So I would agree that the question is about the stock market.
All right, Stephanie, gentlemen, thank you very much for a very informative panel. We appreciate your time today. Coming up, we are waiting to hear from the Fed chairman himself about the rate decision. We'll talk to former Fed Vice Chair Richard Clarida about what to expect. And a quick programming note as we head to break. We have a huge list of executives on Power Lunch over the next 2 days. Tomorrow, we'll speak to the CEOs of Crocs and the Travel and Leisure Company. Friday, the CEOs of Valley Bank, Union Square Hospitality Group, and that's not the half of it, folks. Same goes for the exchange. The CEOs of Royal Caribbean, Frost Bank, Golden Corral, and more. We'll be back after this.
I think I might take a play. 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 I think I'm going to get long right here. I think I'm going to get long right here. I think I'm going to get long right here. I think I'm going to get long right here for another run up. At least we'll test this. 455.
Welcome back to Power Lunch, everybody. The Fed raising rates by 25 basis points, or a quarter of 1 percentage point. Interest rates now at the highest level in some 22 years. Let's get some reaction perspective from Richard Clarida, former Fed Vice Chairman and Global Economic Advisor at PIMCO. Richard, welcome. It's good to have you with us as always. I think in the statement, the key word here is, or phrase maybe, is...
Could we get this thing back down here to the to the opening? If we get back here, down here, I might take a shot. I might take a shot.
Exactly. You know, that language.
Do you guys have anything you guys are doing?
June statement, and I think at the time.
And there it goes. You son of a bitch.
Dovish, and then of course in the June meeting we had the skip, but we had the more hawkish elevation of the dots. No dots today, but I think when you look at statements, there is a decision to leave wording unchanged, and I think. I take that as the chair wants to leave all of his option open for the rest of this.
I want you guys to remember when we start coming back out of the end of this, guys. And if we time it just right, not even just right, if we just, even if we're a little early, I'm telling y'all.
The Fed is not behind the
curve. I got a nice play for us. I got a really nice play for us.
15 months into what they
and I still think
territory. They've pushed back on the idea that they're on the verge.
Let's see what emerging markets are doing. They've actually been doing decent. Look at emerging markets. Nobody's talking about EEM, emerging markets. This EEM's actually got a lot of China, so it may not do too well with what they have going on. But
in the statement, Rich, the Fed repeated that tighter credit is likely to weigh on activity. We haven't seen too much of that between the last meeting and today, and I'm wondering, in terms of the long and variable lag effects, what you think the number one concern, the number one effect is in your mind.
No,
is it tighter credit?
Fuck you.
And is that mainly from the banking crisis, or is it from the rate hike?
Fudge you, bro.
I think it's a combination.
All right.
I think tighter credit historically, there is
EEM.
a lag. You are
it's nice pennant, breakout, pull back, boom, boom.
Being turned down has moved up. Loan growth.
I mean, there's a lot of these guys. If you're looking around, there's a lot of these that still have some room to run. They really do.
Conditions. And if you look at other measures, including the SLOOS loan officers survey, that's also showing it. So these things do take time, but I do think we will start to see additional slowdown in the economy from these conditions.
Knowing that the Fed is in the FDIC will meet on Thursday to vote for an initial round on the new bank regulations, Rich, do you think that is in mind when the Fed is going to, when Jerome Powell takes that podium and talks to reporters and talks to the world about what their intentions are, will that factor in, knowing that there are those new capital requirements to come, and that will be an additional
They'll take a long time. They'll take too long, though.
Here I would distinguish between two related but distinct measures. There's the so-called Basel III measures that they will be talking about, and those would be phased in, and there would be a comment period. I think more front and center this calendar year will be after the SVB and related disruption in the spring. We heard commentary from Vice Chair Barr and other Fed officials that they're going to take a second look, an additional look at capital and liquidity standards for banks in that 100 billion plus category, and they can do that without an extensive comment period as they will with Basel III. They can do that under existing statutory authority, and we would expect that to happen as well.
Where would you expect inflation, and specifically core inflation, to be, let's say, a year from now?
Well, here, I think I'm going to say both what I expect and what I hope. I do think a year from now that the Fed's preferred measure, core PCE inflation, will be in the 2s. I think there's uncertainty about, the path.
Did you guys get to read this?
We here at PIMCO are really optimistic that we're going to start seeing some real improvements in the inflation data because, in particular, housing and rental inflation has slowed down. And I think there is good reason to believe that we will have core inflation, in July of next year, somewhere in the 2s, probably north of 2.5. I would imagine somewhere between 2.5 and 3. And of course, the Fed, in its June projections, did have core inflation falling to 2.6% by the end of next year. So I think that's in line with their assessment as well.
Rich, you've been inside the room. Does it irk the Fed, do you think, that the stock market has been rallying all year and is up 5% since the June meeting alone?
I don't know if I'd use the word irk. I think the chair has been asked, and perhaps even by Steve Liesman at recent press conferences, and I think his answer is, look, you know, the market may be assessing a different probability than the Fed does of economic slowdown and the like. And so within range, look, I think they correctly, certainly when I was there, we really focused on broader financial conditions, lending standards, how much does it take to take out a car loan, and the like. And those have clearly tightened. So I don't think they're going to get too caught up in the stock market here.
All right, Rich,
all right, so I might not hear your questions. We got 5 minutes or see them, but I'll be flipping back and forth. I want to see where the queues are at. All right, so we are not breaking out of there. So right now we're still literally right where we opened. I said it yesterday. Tried to tell y'all, don't get too hype unless we get something crazy. You know.
Coming up in about 5 minutes at 2:30 p.m. Eastern Time, the FOMC press conference.
What the fuck? No. What the fuck happened? Isn't that funny how it's on the very end of my box and it just decides to take a shit? Now, I'm leaving the box there was because this was the range that we put in prior to it. So anytime I want to see if we break up and out of it and get an extension, or if we break down and get the extension. We'll break out, pull back, it holds, bang.
BC.
I still think we got more upside than we do anything else. Not really. Not really. Actually, I take that back. I think we just sit here in a range. Like, we have no reason to go lower unless Powell makes the market feel that way.
Give that messaging with any certainty because, you know, people talk about a soft landing.
3 minutes.
The economy never lands. I mean, you've always got another quarter, and sooner or later, winter is coming. We don't know.
So I want you guys to listen to Powell and listen, and I mean listen, because
payroll gains are negative, and at that point, the Fed's going to have to cut rates. So we think.
It might be hard for the breakdown, Brody. Well, actually, no. We're on the top end of the range. You know, 352. It might, bro. It could.
When the Fed raises rates, it's kind of like going up an escalator. And when they cut rates, it's like going down an elevator. And so the Fed,
it's the next area. So we don't really have, like, it's...
never happened. So
I don't even know what I was going to say. I was going to say that just we have no reason to go down unless Powell says something. But we've already also made the run up where we've priced in, a lot for earnings.
Higher than at the last meeting.
I still think it's going to come down to earnings. Like, do we start getting Walmart, Target, and like retailers, Home Depot, like still doing bad, still messing up inventory, and things happening? I don't know. That's what I think the market's more concerned about with right now. We know inflation's going down. We know it's going down. It's the numbers are coming in lower and lower month over month, at least. If it's, So that's all I got to say about that. Think about that. Anytime you're picking a direction, say, what's the reason to go down and what's the reason to go up? Well, there doesn't have to be a reason to go up. As long as there's just something it's not bad. Something, that's going to bring you down. But nothing goes on. Earnings are okay. Well, you can march to the upside.
We're going to have some turbulence, and I wouldn't want to be in the overpriced stocks at that time.
But the tech stocks, the large cap tech stocks, have been viewed as defensive. When SVB happened, money went into the large cap tech stocks. That's no longer the case, you think?
Well, it's admittedly the problem this time around will be a worry about recession rather than about inflation. But I still worry about valuations, because if you have a market correction, a significant market correction, people are worried. They'll start looking at valuations.
All right, let's get it, team.
Keep an eye on valuations.
Let's get it.
Abroad, where valuations are much cheaper.
We're going to wait for Powell. I got a feeling he's coming through that door right about now. He's finishing up his little M&M thing at the sink in the. I got my mom's spaghetti all over me. He gonna come out with mom's spaghetti. Watch. Bet. All rise. Your Honor, Powell. All right, let's do it, guys. Listen up to him.
Good afternoon. My colleagues and I remain
going to be
squarely
watching
focused
rates and
on
yields.
our dual mandate to promote maximum employment and stable prices for the American people. We understand the hardship that high inflation is causing, and we remain strongly committed to bringing inflation back down to our 2% goal. Price stability is the responsibility of the Federal Reserve. Without price stability, the economy doesn't work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Since early last year, the FOMC has significantly tightened the stance of monetary policy. Today, we took another step by raising our policy interest rate a 1/4 percentage point, and we are continuing to reduce our securities holdings at a brisk pace. We've covered a lot of ground, and the full effects of our tightening have yet to be felt. Looking ahead, we will continue to take a data-dependent approach in determining the extent of additional policy firming that may be appropriate. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has been expanding at a moderate pace. Growth in consumer spending appears to have slowed from earlier in the year. Although activity in the housing sector has picked up somewhat, it remains well below levels of a year ago, largely reflecting higher mortgage rates. And higher interest rates and slower output growth also appear to be weighing on business fixed investment. The labor market remains very tight. Over the past 3 months, job gains averaged 244,000 jobs per month.
This is pre-written, just so you guys know.
A pace below that seen earlier in the year, but still a strong pace. The unemployment rate remains low at 3.6%. There are some continuing signs that supply and demand in the labor market are coming into better balance. The labor force participation rate has moved up since last year, particularly for individuals aged 25 to 54 years. Nominal wage growth has shown some signs of easing, and job vacancies have declined so far this year. While the jobs to workers gap has narrowed, labor demand still substantially exceeds the supply of available workers. Inflation remains well above our longer run goal of 2%. Over the 12 months ending in May, total
I
PCE
will, buddy.
prices
It's not
rose
going to do anything
3.8%,
until I will.
excluding the volatile food and energy categories.
Wait
core
till the
PCE
questions are
prices rose
asked. They're going to dig in.
4.6%.
The
In
pre-written,
June, the 12-month
pre-written
change in the
statement is
Consumer
not going to
Price
give us any
Index, or
volatility,
CPI,
as you can tell.
came
We're
in at
right where we opened up,
3.0%,
kind
and the
of.
change in the core CPI was 4.8%.
NASDAQ's trying to hold the level.
Inflation has moderated somewhat since the middle of last year.
376,
Nonetheless,
74,
the process of getting
64,
inflation back down
looking
to
like
2%
it's trying to
has a
hold.
long
We
way
got
to go.
volume. This is why I was wanting to get some calls down here. Look at the volume.
Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys.
Let them
of
ask the
households,
questions, and then we'll
businesses,
get
and
into it.
forecasters, as well as measures from financial markets.
Because this is all pre-written.
The
This
Fed's
is actually
monetary policy
online.
actions are guided by
So it's
our
not like you
mandate
guys
to promote
can't
maximum
find this
employment and
and
stable prices for the American
Get
people.
this before he says what he says.
My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher cost of essentials like food, housing, and transportation. We're highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning to inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by a
Year-end
quarter
target.
percentage point, bringing the target range to 5.25% to 5.5%. We are also continuing the process of significantly reducing our securities holdings. With today's action, we've raised our policy rate by 5.25 percentage points since early last year. We have been seeing the effects of our policy tightening on demand in the most interest rate sensitive sectors of the economy, particularly housing and investment. It will take time, however, for the full effects of our ongoing monetary restraint to be realized.
Guys, this
especially on inflation.
454.85,
In addition, the economy is facing
454.90
headwinds
is
from tighter
still
credit conditions
resistance.
for households and businesses,
It's still resistance.
which are likely to weigh on economic activity.
And we're getting an
hiring, and
increase in
inflation.
volume, and it still can't break it.
In determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. We will continue to make our decisions meeting by meeting based on the totality of the incoming data and their implications for the outlook for economic
I
activity.
knew it. I knew that
and
they were going to
inflation,
break
as
through
well
it
as the
and
balance
then
of
just start
risks.
ripping. All right, so we're out of the range.
We remain committed to bringing
Still
got
gotta
to
watch yesterday's close, though,
and to keeping
and just
longer-term
wait.
inflation expectations well anchored.
We get a little test.
Reducing
We'll run this
inflation is
test up
likely to
to. I'd
require
like
a
to see
period
if
of
the SPY
below-trend
gets
growth
to
and some softening of labor market
455.80.
conditions. Restoring price stability is
455.80
essential
maybe.
to set the stage for achieving maximum employment and stable prices over the longer run. To conclude,
Just
we
wait
understand
for the
that our
questions
actions
again.
affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
All right, we're taking questions.
Mr. Chairman, thank you.
Oh, Steve
You
Leisman.
have, I think a couple times in your
Get 'em,
opening
big
remarks,
dog.
talked about
Get 'em,
this
big
language
dog.
in
Hoo,
determining
hoo.
the extent of additional policy firming that may be appropriate. Should we take that to mean that additional hikes are likely on the way? And should we also believe that all future meetings, say September and November, are live?
They
or are you
have
in
not made a
every
decision.
other meeting mode? Thank you.
So we haven't made a decision to go
Oh,
to every
how
other
funny.
meeting. It's not something we've looked at. We're going to be
How
going
funny.
meeting by meeting, and as we go into each
mad
meeting, we're
today.
going to be asking ourselves the same question. So we haven't made any decisions about any future meetings, including the pace at which we'd consider hiking. But we're going to be assessing the need for further tightening that may be appropriate. You read the language to return inflation to 2%
There
over
it
time.
was.
I would say that the intermeeting
Hold on,
data
baby.
came
Please,
in
you
broadly
pick-
in
you
line
pick
with
the worst
expectations.
times to eat
Economic
and ask me to
activity
feed
remained
you.
resilient.
You know
Job
that.
creation remained strong
pick
while
the
cooling a
worst
bit,
times, my
and the
love.
June CPI report actually came in a bit better than expectations for a change. And the June CPI report, of course, was welcome, but it's only one report, 1 month's data. We hope that inflation will follow a lower path as was.
They get
it'll be
PCE
consistent
this
with the
Friday.
CPI reading, but we don't know that, and we're just going to need to see more data. So what are we going to be looking at? Really, it will be the whole broader picture, and starting with
155.
we're looking for moderate growth, right? We're looking for supply and demand through the economy coming into better balance.
Where are we at here?
including in
The
particular in
spies
the
or
labor
the
market. We'll
Qs
be
are
looking at
ripping on
inflation. We'll
volume.
be asking ourselves, does this whole collection of data, do we
Fuck.
assess it as
I
suggesting
knew
that
I
we
should have
need
grabbed
to
calls
raise rates
down
further?
there.
And if we make that conclusion, then we will go ahead and raise rates. So that's how we're thinking about the next meeting. And
All
how
right, this
we're
is going to
thinking
be
about meetings going
resistance.
forward potentially.
And
but, you
there
know,
it was.
we're now mainly thinking about the next meeting. I will also say, since we're talking about it, between now and the September
on, baby,
meeting, we get
please.
2 more job reports, 2 more CPI reports. I think we have an
All right,
ECI
so we
report
came up,
coming
the
later
Qs
this
tested
week,
high of
which is
day.
Employment Compensation Index, and lots of data on economic activity. All of that information is going to inform our decision as we go into that meeting. I would say it is certainly possible that we would raise funds again at the September meeting if the data warranted. And I would also say it's possible that we would choose to hold steady at that meeting. We're going to be making careful assessments, as I said, meeting by meeting. And I'll close by saying we've raised the federal funds rate now by 525 basis points since March 2022. Monetary policy, we believe, is restrictive and is putting downward pressure on economic activity and inflation.
Yes, and it is.
If I could just
You're
briefly
right.
follow up on something you said there. You said the data in the intermediate period, it broadly came in line with expectations.
Yep,
Does
that's
that mean
a
there's
nice
unlikely
area
to
of
have been a change
yesterday's
in the,
close. I want to see
overwhelming
what we
outlook
do
of
at
the
yesterday's
committee that 2 more hikes
close
are necessary?
on the Qs.
I'm just going to go back to what I said. That's the question. We have 8 weeks now until the September meeting, and all that data that I recited, we're going to be looking at all of that and making that assessment then. And it really, we did have the one good reading, and of course we welcome that, but it's just one reading, as everybody knows. And you know, we've
These
seen
fucking
we've seen
calls
this
went from
before in the
80
data.
cents to
Many forecasts call for
$1.85
rates, for
something.
inflation to
They
remain
went
low, but
over
we just don't know that until we
100%.
see the
I
data.
knew
So
it. The
we'll be focusing on
volume told us right here we needed to go long. Look at that.
Thank you.
Even on
Thanks
the
for taking my
pullback.
questions, Chair Powell. Obviously, you updated the language around growth in the statement today. You know, we've seen the Barbie movie numbers. We've seen everyone going to Taylor Swift concerts this summer.
I still
got to
think about
consumer is
a
in pretty good
rejection.
shape, and it does seem like growth is sort of picking back up a little bit, or at least doing well. And I wonder, from your perspective, if that continues, if we see growth not just stabilizing but doing, you know, performing well this summer, is that a problem because it's inflationary, or is it good news
question.
because it suggests that a soft landing is more likely? Just how are you thinking about
It doesn't
that sort of
matter.
trajectory?
Doesn't matter what it does.
Yeah,
Growth's already slowing.
I would say it this way.
That's a
The
hypothetical
overall resilience
question.
of the economy, the fact that we've been able to achieve disinflation so far without any meaningful negative impact on the labor market, the strength of the economy. Overall, that's a good thing. It's good to see that, of course. It's also, you see consumer confidence coming up and things like that. That will support activity going forward. But you're right, though. At the margin, stronger growth could lead over time to higher inflation, and that would require an appropriate response from monetary policy. So we'll be watching that carefully and seeing how it evolves over time.
Thanks, Chair Powell. Neil Irwin from Axios. So as you referenced earlier, in the intermeeting period,
Axios.
soft CPI, jobs reports, still strong but moderating, JOLTS look good. So if you're data dependent, why not pause again? Why not stay on hold? Why
Right.
not take another meeting off when the data was at least cutting in the direction you want to see?
It has been.
So if you go back to what we're trying to do here, we're trying to achieve a stance of policy that's sufficiently restrictive to bring inflation down
is
to 2%.
still high.
At the last meeting, we wrote down our individual estimates of what that would take, and the median of that was an additional 2 rate hikes.
Yeah.
So I would say we looked at the intermeeting data, and as I mentioned, broadly consistent, not perfectly consistent, but broadly consistent with expectations, and as a result, we went ahead and took another step. And that's, you know, a labor market that continues to be strong, but gradually slowing. I mentioned that the inflation report was actually a little better than expected, but, you know, we're going to be careful about taking too much signal from a single reading. And, you know, growth came in stronger than expected. So that's how we look at it, and so we did take that step
Financial
today.
conditions have eased too, though. Wonder if anybody brings that up. did they
Nick
bring up?
Timmeros of the Wall Street Journal. Chair
Nick
Powell,
Timmeros.
markets,
There he
widely
is.
The median FOMC participants' inflation forecast.
That's who the Fed talks to right there
June
from the
for
Wall
fourth
Street
quarter
Journal.
this year
Nick Timmeros.
will be too high, given
When the Fed
autos
does
and
something, they
shelter,
tell that guy right
that
there.
by September, that may warrant a downward revision in the inflation forecast of 20 to 30 basis points. Would that type of inflation progress be enough to hold rates steady from here, or do you need to see below-trend growth and decelerating labor income growth to be convinced that you've done enough?
So it's hard to pick the pieces apart and say, how much of this and how much of that. We'll be looking at everything. And, of course, we'll be looking to see whether the signal
Those
from
fucking
June CPI
those calls were
is
at 80
replicated
cents. Now they were just
the
peaked
opposite
at
of
like
replicated, or whether
196.
it's somewhere
I
in the
think
middle. We'll be looking
they were
at the
just
growth
under
data,
$2.
We'll be looking at the labor market data very closely, of course, and making an overall judgment about that. It's the totality.
What is that?
Of the
We're just
data,
under a
I
standard
think, but with a
deviation on the
particular
move.
focus on making progress on inflation.
I gotta pay attention.
Last month you
and
said
make
there were
something
benefits to
happen here.
moderating the pace
We are
of
getting some
increases because it
volatility.
would
I'm
give you
really
more
surprised
information to make
that we're
decisions.
even getting this
Would
much
another
volatility.
CPI report
We
like the
haven't
one
gotten
we
much.
just had
We've
in
gotten a
June
dollar move. It
allow
looks
you
like
to
a
at
lot,
least
but it's really
maintain
not.
that slower pace and defer until the fall any decision on whether you need that second rate hike?
So I'm just going to tell you again what we're going to do in September. We're going to look at
So that looks to
two
be a
additional
bounce
job
off of
reports,
yesterday's
two additional CPI reports, lots of activity data, and that's what we're going to look at, and we're going to make that decision then.
Looks like
and
the
that
Q's
decision
bounced off
could
of
mean
the
another
close
hike
yesterday.
in September, or it could mean that we decide to maintain at that level. And again, the question we're going to be asking ourselves is the overall signal one that we need to do more, that we need to tighten further? And if we get that signal whenever we get it, then, and that's the collective judgment of the committee, then we will move ahead. If we don't, then we'll have the option of maintaining policy at that level. But it's really dependent so much on the data, and we just don't have it yet.
Yeah, they're over $2 from 80 cents.
Hi,
The
Chris
July
Reaver,
26,
Associated Press.
455 call.
Consumer confidence in the economy is
Unbelievable.
rising,
I
likely
almost
in large
fucking
part because
grabbed them.
of the declines in headline inflation. You also see wages are also rising faster than prices now, after trailing them for a long time. How much are Americans truly harmed by inflation at its current level, headline level of 3%? And with that in mind, when do you put some weight back on the employment side of the dual mandate?
So I guess I'd say it this way. First, it is a good thing that headline inflation has come down so much, because that's really what the public experiences. And
That's because
I would
China
say that
opened
having
up, man.
Headline inflation moved down that much.
I don't know why
almost
they didn't give
creates
it time.
It will strengthen the broad sense that the public has that inflation is coming down, which will in turn.
All right,
we
so I
hope,
want to see if we
help
can
inflation
hold
continue to
the
move
high of
down.
the day today. Q's 397,
So you were really- sorry,
77,
what your question was?
392.
Well, I mean, you've talked
377.92, so
press conferences now about
370.
the harm created by inflation, how hard that
378.
is for people. So how much of that are we still seeing with inflation now down at 3?
So I guess I would put it this way. I'd say it this way. It's really a question of how do you balance the two risks, the risk of doing too much or doing too little. And, I would say that, we're coming to a place where there really are risks on both sides. It's hard to say exactly whether they're in balance or not, but as our stances become more restrictive and inflation moderates, we do increasingly face that risk. But we need to see that inflation is durably down that far. As you know, we think, and most economists think, that core inflation is actually a better signal of where headline inflation is going, because headline inflation is affected greatly by volatile energy and food prices. So we would want core inflation to be coming down, because that's what we think core is signaling where headline's going to go in the future. And core inflation is still pretty elevated. There's reason to think it can come down now, but it's still quite elevated. And so we think we need to stay on task, and we think we're going to need to certainly hold policy at a restricted levels for some time, and we need to be prepared to raise further if we think that's appropriate.
Well, and then if inflation were to, just a quick follow, if it stays at 3 or drops even a little bit more, I mean, how much of an increase in unemployment do you think is acceptable to get that last bit of inflation? People are talking about the potential difficulty of the so-called last mile of inflation. So, but how much unemployment do you think is justified to get down that last?
So it is a very positive thing that actually the unemployment rate is the same as it was when we lifted off in March of 22 at 3.6%. So that's a real blessing, and that we've been able to achieve some disinflation. And we don't seek to, it's not that we're aiming to raise unemployment, but I would just say the historical record, we have to be honest about the historical record, which does suggest that when central banks go in and slow the economy to bring down inflation, the result tends to be some softening in labor market conditions. And so that is still the likely outcome here. And we hope that that's as little as possible. We have to be honest that is the likely outcome. The worst outcome for everyone, of course, would be not to deal with inflation now, not get it done. Whatever the short-term social costs of getting inflation under control, the longer-term social costs of failing to do so are greater, and that the historical record is very, very clear on that. If you go through a period where inflation expectations are not anchored, inflation is volatile, it interferes with people's lives and with economic activity, and that's the thing we really need to avoid and will avoid.
At this point, you say the policy is restrictive, but all year long we have seen growth surprise to the upside, unemployment to the downside, and inflation lately to the downside. So I'm wondering, by definition, should you be restrictive enough right now under these conditions? Do you think you might need to do more? Because I'm curious about what you see as inflation dynamics now. Is the economy still moving in a direction where it creates more inflation? People talk about base effects and higher energy costs, and now we have some large labor settlements. Or is the economy disinflating, and you're able to go back to the old Fed policy of opportunistic disinflation?
So I'll just say, again, the broader picture of what we want to see is we want to see easing of supply constraints and normalization of pandemic-related
support there,
distortions
guys.
to demand and supply.
There's your
We wanna
put in
see
your support
economic growth
at pre-market
running at moderate
lows.
or modest
Just
levels
hold on.
to help ease inflationary
I don't know if it's
pressures.
going to hold yet.
We
Don't
wanna
just
see
sit here and take
continued
along
restoration
because
of supply and demand balance, particularly in
calls
the labor
are way
market,
too
and all of
expensive
that
now.
should lead to declining inflation.
Those things just went from 80 cents to $2.
Pieces
so.
of the puzzle coming together, and we're seeing evidence of those things now. But I would say that what our eyes are telling us is that
could be
policy
our
has not
lower
been
high
right there, restrictive
So.
enough for long enough to have its full desired effects.
Fuck, man.
So
As
we
soon as
intend
the
again, to
fucking
keep
move
policy
happens, it gets
restrictive
away
until
from
we're
me.
confident that inflation is coming down sustainably toward our 2% target, and we're prepared to further tighten if that is appropriate. And we think the process, still probably has a long way to go.
Well, do you think under current conditions you are restrictive enough unless something changes?
Well, I think we think today's rate hike was appropriate, and I think we're going to be looking at the incoming data to inform our decision at the next meeting about is the incoming data telling us that we need to do more, and if it does tell us that collectively, if that's our view, then we will do more.
You ain't doing more.
Thank you. Colby Smith with the Financial Times. If September is in fact a live meeting, how does that square with the need for a more gradual tightening pace that you spoke of last month in explaining the rationale for holding the funds rate steady at the June meeting?
So a more gradual pace doesn't go immediately to every other meeting. It could be 2 out of 3 meetings, right? It just means if you're slowing down. The point really was to slow down the decision cycle as we get closer and closer to, we think, our destination. And I wouldn't want to go automatically to every other meeting because I just don't think I think it's not an environment where we want to provide a lot of forward guidance. There's a lot of uncertainty out there. We just want to keep moving at what we think is the right pace. And I do think it makes all the sense in the world to slow down as we now make these finally judged decisions. And so that's what we did. And so I think it's possible, I mentioned before, it's possible that we would move at consecutive meetings. We're not taking that off the table, or we might not. It's really going to depend on what the data tell us. That's the best we can do.
So we shouldn't assume that every other meeting is the lowest tightening frequency, let's say. It could be, longer intervals in between as well.
I think we're going to look. I think we're going to make a decision about the next meeting, and then we're going to make a decision about the one after that. And I think it'll sort itself out.
They're about done. They're done.
Thanks. Howard Schneider with Reuters.
Let the
among
man
your
go
colleagues,
home.
there have been people
He's got
who
no
said
more
they
to
feel
say.
very little transmission has taken place so far from monetary policy into the economy, and there are those who feel, they say it's happened very fast this time and it's kind of up to date. Where are you on that continuum?
So there's a long-running debate about the lags between changes in financial conditions and the response to those changes from economic activity and inflation, right? So we know that in the modern era, financial conditions move in anticipation of our decisions, and that has clearly been the case in this cycle. So in a sense, the clock starts earlier than it used to, but that doesn't necessarily change the process from that point on, and it's not clear that it has. I'll tell you what we know and then what we don't know. We know that financial conditions affect economic activity and inflation with a lag that can be long and variable, or lags, plural, that can be long and variable. A lot of uncertainty around the length of the lags, and by the way, that's just one component of the broader uncertainty that we face. So I'll tell you how I think about this. The first thing to say is we're determined to bring inflation down to 2% over time, and we will use our tools to do that. No one should doubt that. I would look at it this way, though. The real federal funds rate is now in meaningfully positive territory. If you take the nominal federal funds rate, subtract a mainstream estimate of near-term inflation expectations, you get a real federal funds rate that is well above most estimates of the longer-term neutral rate. So I would say monetary policy is restrictive, more so
I'm trying
after
to be
today's decision,
patient and see if I get a pullback.
meaning that it is putting downward pressure on economic activity and inflation.
I don't know if I will.
Monetary policy restrictive
That's it.
until we
Fuck.
think it's not appropriate to do so. So that's how I
Goddamn,
think
sorry
about
to
it. I mean, if I sum it up, I would say we've come a long way. We are resolutely committed to returning inflation to our 2% goal over time. Inflation has proved stronger than we and other forecasters have expected. And at some point that may change. We have to be ready to follow the data, and given how far we've come, we can afford to be a little patient as well as resolute as we let this unfold.
On the credit side, I'm wondering if you saw anything in the latest SLOOS data that made you think you're getting a quantum of credit contraction beyond what you'd expect. The bank lending data really is, the growth rates edging down towards and heading below zero, which is usually a recession indicator.
So I guess the SLOOS will come out early next week, and I would just say it's broadly consistent with what you would expect. You've got lending conditions tight and getting a little tighter. You've got weak demand, and it gives a picture of pretty tight credit conditions in the economy. I think it's really hard to tease out how much of that is from this source or that source, but I think what matters is the overall picture is of tight and tightening lending conditions. And that's what this SLOOS will say.
Rachel. Hi, Chair Powell. Rachel Siegel from the Washington Post. Thanks for taking our questions. Could you break down the reasons why inflation has fallen and what share of that credit you would give to factors that don't stem directly from rate hikes or that might be within your control at all, like easing supply chains and a drop in energy prices over the past year?
Yeah. Interesting question. So let me start by saying that the inflation surge that we saw in the pandemic resulted from a collision of elevated demand and constrained supply, both of which followed from the unprecedented features of the pandemic and the response from fiscal and monetary policy. And we've always expected that the disinflationary process would stem from both from the normalization of those broad pandemic-related supply and demand conditions and from restrictive monetary policy, which would help return the balance between supply and demand by restraining demand.
Today.
And we think that's broadly what we're seeing. So to go break it down a little further, of course, headline inflation has come down sharply from elevated levels as energy and food prices have come down, mostly due to reversal of the effects from the war in Ukraine. And that's a good thing.
We're already up 8%,
that,
guys.
as I mentioned earlier. For core inflation, I'd say there has been a role for both factors,
13%.
that I mentioned. Clearly, for goods, normalization of supply conditions is playing an important role, as is the reversal,
please.
the beginning of the reversal of spending back into services and away from goods.
Give me some volume.
And say, take autos as an example. The combination of an increase in sales
it might
and
revert
inventories,
back up.
while vehicle inflation has decelerated, points to a substantial role for supply. but there's also a role for demand as, you know, the loans and things like that are more expensive. So they're both working there.
Yeah, this might not work,
Housing services inflation now starts to move down. Clearly, higher rates have slowed the housing market.
That's where you want to be sure.
You know, I would say monetary policy is working about as we expect, and we think it'll play an important role going forward, in particular in non-housing services, where really we think that's where the labor market will come in as a very important factor. So we think both of those sources of disinflation
right here,
are
guys.
playing an important role.
See, and just to follow up, do you think that of those two sources, that core will rely more heavily on seeing an impact from rate hikes, or
We might break out to new highs, guys.
I think monetary policy
We
is
might
going
break
to
out
be
to new highs.
important going forward, because we're sort of reaping now the benefits of the reversal of some of the very specific pandemic things. We're seeing that with goods in particular, with supply chains and shortages moving, and we're seeing. So I think going forward, monetary policy will be important, particularly in the sector, in the non-housing services sector.
Guys, we're holding support here, guys. I think we're going to rip higher.
Let me compliment your tie.
I think we could. Just don't get caught.
So thanks for taking our
Don't
question.
get
So
caught.
the Beige Book, it said input cost pressures remain elevated for services firms, but eased notably for manufacturing sector. Is that an indication that there's a wage inflation pressure? And how do you target and pressure on the wage inflation without pushing the economy into recession?
I think as it relates to goods, it's really an indication
had a better
that
fill,
supply
and now it's
chains
gonna drop
and
further.
shortages are easing. And so what was the first part of it?
So wage inflation,
That was
like how
nice.
do you,
That
how do
was
you
a nice
target wage
scratch. There
inflation
we go.
without pushing
It was nice.
an economy into a recession?
That was nice.
I don't think we're targeting
That was
wage inflation.
nice.
I think what we're looking for
All
is
right.
a broad cooling in the
So
labor market
now we are
conditions, and that's what we're
retesting
seeing.
this
So
bottom area
wages
that we
have
just
actually been
were
gradually
holding.
moving down. They're still
Now,
at
do we
levels
come back and test the
that will be
high of
consistent
the
over a long
day?
period of
That
time
is what
with
I
2%
am
inflation.
curious to
Nonetheless,
know
we're making
of.
progress there, and by so many indicators.
We just hit
labor
the
market
90
demand
MA.
is
Do we
cooling.
get
You
some
can-
buy
you can look
orders
at
in there, or are we
surveys
gonna
by
break it
workers and
again?
businesses who see that. You can look at the quits rate normalizing. You can look at job openings coming down.
You want to
can
watch
look
the
at just
volume.
Job
Keep
creation
an eye on
in-
this.
in
This
the,
volume told you back here
establishment
what is
survey has,
what we were
you know,
thinking
still at a
about
high
doing.
level, but it was at
That's
really
what made me
extraordinarily
say
high
I
level
want
for
calls.
most of the last 2 years. So you see cooling,
Read the
particularly
tea
in the
leaves,
private
guys.
sector in the last,
You know, that's just
in the last report.
it
So I
worked.
think we see that.
That's all
and
I can
it's
say. If
happening
you
at a
hung in there, it
gradual pace.
worked.
So that's actually not a bad thing in a sense.
Thank you guys
because
for joining us. If you're
what
new,
we see is a labor market, very
subscribe
strong
if you
demand for
haven't
labor,
subscribed.
which is really the engine of the economy.
457. I
People
just don't know
are
if we're
getting
going to get
hired,
to that
many
level.
people going back to
Let's
work,
see if we double
getting
top
wages,
to that
spending
level.
money, and that's really
And I want to
what's
see
driving
if
the
I
economy.
have.
But that it's gradually slowing, it's gradually cooling. That's a good prescription for getting where we want to get.
But still, we see a push to raise minimum wage. We're seeing a lot of unions go on strike or threaten strike. And the common thing is they come out with agreements like big pay increases, like UPS, and we have the auto workers coming up. Are you concerned then about a trend of series of big unions, these contract pushing wage inflation?
Is this going to be it?
Not for us to comment on contract negotiations. Not our job, not our role. You know, we monitor these things and we'll keep an eye on them. But really, that's something that's handled at that level. And
Look, is that a low volume push, guys? What do you guys think? Do you think we go down or up from here? Down or up? What's your
Victoria
suggestion?
Guido with
Or
Politico.
what are you guys'
I
thoughts?
wanted to ask about the SEP, which suggests that you would cut rates as overall and core PCE get to around or under 3%. And so
She's
I'm wondering,
hanging out.
is the level of inflation what's sort of important there as you think about getting to 2% and when you might start cutting rates? Or is the speed at which inflation is falling also important?
I think you'd take both into account. I think you'd take everything into account when you
I
start.
think that
cutting
might
rates.
be it,
would
guys. I think
depend
we
on
might get
on the whole,
our
on a
test.
wide range of things. And when
Just
people
wanna
are
look
writing down rate cuts next
at
year,
some other Fed.
you know, it's
couldn't open
it
file.
just is a sense that inflation is coming down, and we're comfortable that it's coming down, and it's time to start cutting rates. I think, but I mean, there's a lot of uncertainty between what happens, you know, in the next meeting cycle, let alone the next year, let alone the year after that. So it's hard to say exactly what happens there, what's motivating people.
So if it's sort of stubbornly in maybe the high twos, you wouldn't necessarily cut rates.
I'm not saying that at all. I'm not giving you any numerical guidance around that. I'm saying we'd be comfortable cutting rates when we're comfortable cutting rates, and that won't be this year, I don't think. It would be, but you know, many people wrote down rate cuts for next year. I think the median was several. for next year, and that's just going to be a judgment that we have to make then, a full year from now.
I'm
And
with you,
it'll be
Powell.
about how confident we
I
are
think you good,
that
bruh.
inflation is in
I'm
fact
just
coming
playing.
down to our 2%.
It might come a little bit sooner.
A good part of Wall Street has become more confident that the Fed is going to be able to engineer a soft landing, and they've reduced their forecast for a recession. And I'm wondering if the staff has changed its view on the likelihood of recession being likely.
I want to go through
and
these
if you
Fed meetings
personally have
see if we
changed
have
your
one.
view in terms of becoming more confident
We have
that
one
you
that
can
where we
achieve a
put
soft
in
landing.
a higher high here, and then it
has
pulls
been
back.
my view
And now
consistently
I remember that day. It sold
we
off
do
the rest
have
of the
a
day.
shot, and my base case is that we will
where's
be
the
able to
close
achieve
at? Oh, I didn't take a picture of
inflation
the
moving
close.
back down to our target
Shit.
without the kind of really
And
significant
if you guys have any
downturn that
questions or
results in
anything at all,
high levels of job losses that we've seen in some past
throw 'em in the
instances,
chat.
many past
I'm trying to help
instances
you out
of
with whatever
tightening
it is
that
that
look
I
like
can.
ours. That's been my view.
Thank you guys for
that's
joining us.
That's still my view.
If you're new,
and
think
I
about
think,
like,
you know, that's sort of
sharing,
consistent with
subscribing. That would be
with what I
great.
see today. So, but it's a long way from a short, and you know,
again, if you have any
we have a
questions,
lot left to go to see
you
that
can
happen.
throw 'em in chat.
So
We'll
the
help you
staff
with
now
whatever it
has
is you need
a
help with.
noticeable slowdown
Wanna
in growth
know
starting later this year in the
whatever it
forecast.
is.
But given the resilience of the economy recently, they are no longer forecasting a recession.
15-minute chart on AMD.
I just want to note that it's that our staff produces its own forecast, which is independent of the forecast that we, as FOMC participants, produce. Having an independent staff forecast, as well as the individual participant forecast, is really a strength of our process.
I still think you might get a bounce
There's
on
just
AMD.
a lot of I think constructive
Look at the
diversity
volume.
of opinion
It's so low on
that
this
helps us
sell-off.
make.
It held, but it's
informs our
trying.
deliberations, helps us make.
Volume just feels
I
pretty
hope better
low.
decisions.
And is the reason for optimism that inflation has come down and you still have a strong labor market? I mean, is that?
I'm looking, guys. It's
add
just
to the
hanging out up
optimism?
here.
I wouldn't use
Spy.
the term optimism about this yet. I
don't know if I
would
should be
say
looking at
that
the
there's a
cues.
pathway. And
Which
yes,
one
that's,
is
that's,
leading?
that's a good way to think about it.
Which one is
We've seen
lagging?
so far
Now, the sell side
beginnings
volume's
of
getting heavier.
disinflation without
We're just sticking
any
this
real
ground
costs
here.
in the labor market. And that's a
I
that's
think
a
you
really
might
good
give up
thing.
here, guys. I think this
I would
is
just
it.
also say the
I think
historical
this is
record
it for the
suggests that
downside.
there's very likely to be some softening in labor market
think this
conditions.
is it.
And consistent with having a soft landing,
Damn it.
you would have some softening in labor market conditions, and that's still likely as we go forward with this process. But it's a good thing to date that we haven't really seen that. We've seen softening through not through unemployment, not through higher unemployment. We've seen softening through job openings coming down part of the way back to more normal levels.
There's
the quits
still some
rate, so
decent
people
buying
not quitting as much. We've seen participation, people coming in, and so labor supply has improved, which has lowered the temperature in the labor market, which was quite overheated,
Look what I'm
going back a
buying
year
it
or
up.
so. So we're seeing that kind of cooling,
Watch
and
the
that's
volume here if you
very
guys
healthy.
can see
and,
it.
We hope it
How
continues.
it just ramps up.
Thank you, Mr. Chairman. Jeff Cox from CNBC.com. You and other Fed officials in the past have
Like,
suggested
look at the candle
that
going
you
down in the
don't
volume.
need to
There it
keep
goes. There
hiking
she goes. I
until
was like, yo,
inflation
why is the
hits
volume not moving?
2%, that as long as you see continued progress. So I'm wondering, how close do you need to
There
get
we
with
go.
the inflation
All
numbers
right, so
coming
we got back
down?
to where we
How
traded.
many months
And you see how you got the
data
bounce right
do
off
you
of
need
it?
to see that will,
That's why it's
that
good
will
to have
give
those
you
boxes
sufficient
there.
confidence? And how far does this fight need to go before you're willing to kind of declare victory on it?
So the idea that we would keep hiking until inflation gets to 2%, it would be a prescription of going way past the target. That's clearly not the appropriate way to think about it. So
Look at that follow
in
through,
effect, if you
man.
look at our forecasts, the median participant, and again, these are forecasts.
We might just stay right where we
open.
opened. Remember, we have PCE,
people are cutting rates
we
next
have
year
GDP,
because
we have Bank of
the
Japan
federal funds
interest
rate is
rate
at a restricted
decision,
level now.
we have
So
European,
if we see inflation coming
ECB,
down credibly,
interest rate decision,
sustainably,
Michigan
then we don't need to be at a
sentiment.
restrictive level anymore.
What else?
We can
Some more,
move back to a neutral level.
real estate data,
and then below a neutral level.
You know,
at a
there's
certain
still
point.
a lot
I think
on
we
the
would,
table,
you know,
everyone.
We
A
of
lot
course
on the
would
table.
Be very careful about that. We'd really want to be sure that inflation is
So
coming
I took
down
a
in
small
sustainable
trade,
level. And it's
taking
hard to
two
make,
green trades
I'm not
today,
gonna try
Tesla
to
and
make a numerical assessment
short
of
the
when and
SPY
where that
there
would be, but
on that
that's the way I would
downtrend.
think about it. Is you'd stop raising long before you got to 2% inflation, and you'd start cutting before you got to 2% inflation too, because we don't see ourselves getting to 2% inflation until, all the way back to 2 until 2025 or so. So.
Jennifer. Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. It's been over 4 months since a handful of regional banks, including Silicon Valley Bank,
There
failed.
we go.
When you
We're
look
getting
at
the
credit
questions
conditions
that
now,
we
given
needed.
Bank of California's acquisition of PacWest, does this acquisition suggest the full impact has not been
Look at
felt?
that.
Or are
Look
you
at it,
comfortable
guys.
saying that we've seen most of the ripple effects
Look at the
that may have
volume there,
occurred at
guys.
this point? And how does this
Pay
play into
attention
your
to the
outlook
volume.
for
I was
policy?
trying to say that.
So I don't want to comment on any particular merger proposal, but I will say things have settled down for
All right,
sure.
they
out
bought-
there.
they bought the
Deposit
dip.
flows have
They
stabilized.
bought the dip.
Capital and liquidity remains
That's
strong.
official. They bought the
Aggregate
dip.
bank lending was stable quarter over quarter and is up significantly year over year. Banking sector profits generally are coming in strong this quarter, and overall the banking system remains strong and resilient. Of course, we're still watching, the situation carefully and monitoring conditions in the banking sector. In terms of the actual effect on, if you think of a particular set of banks that were affected because of their size and business model and things like that, that were more affected by the turmoil in March than others, it's very hard, as I mentioned, it's very hard to sort of tease out the effects on this very large economy of ours from them tightening.
So the
They may be tightening a little bit
454
more,
puts that
probably
I
are,
was in,
than other banks. The
they
SLUS
went
has
to
been telling us
$80
for more than a year
from
that banking
14
conditions
cents.
are tightening. That
That's the
process
type of
is
volatility
ongoing,
you can
and that will
expect,
restrain
guys.
economic growth.
You don't have to go
I think-
crazy
I think
big
we
to
have to
make
take a step
decent
back
money
from. I
on
can't
volatile
separate
days.
those
I'm very
anymore.
surprised
I think
it's even this
basically
volatile.
We're just looking at the.
I think that
overall
it's also
picture,
because
which
the
one
VIX is
of
low, so the
tightening
VIX
credit
is,
conditions, and that's
you know.
going to restrain economic activity.
Just
It is
throwing it
restraining
in the
economic
chat.
activity. So that's how I would look at it.
And how is that informing your outlook for setting policy?
So I think that is an expected result of tightening interest rate policy, is that bank lending conditions would tighten as well.
Let's see. Let's
And so the question
paint the picture.
is it more effective this time
paint
because
the
of what
picture.
happened in May? I just don't think we know that. I think we're looking at the current data in GDP, and we're seeing strong spending. We're seeing a strong
goes
economy,
AMD.
and it's made us confident that we can go ahead and raise interest rates now for the third time since the March events.
We're gonna get to
And
453.
it seems like the economy is
I
weathering
need a
this
bounce.
well.
I need a bounce if
But
I'm
of
going to
course,
get
we're
short
watching it
again.
carefully and expect to continue to do that.
This is big, guys. This is huge.
Hi, Chair Powell. Thanks for taking our questions. Megan Casella with Barron's. I wondered on wages if you were at all concerned about any inflationary impact of wages now outpacing inflation, which is likely contributing to the boost in consumer sentiment and the continued strength of the consumer that we've been seeing.
Well, wages in excess of inflation means real wages are positive. Again, that's a
Kinda
great
like
thing.
he likes her. Let's
Of course,
take a
we
look.
want
He's
that.
like,
We want
"Oh,
people to
well,
have
how
real
are
wages,
you
but we
today?"
want wages to be
I didn't
going
know
up
you
at a
were
level
here.
that's consistent with 2% inflation over time. As I mentioned, nominal wages have been coming down gradually.
It was just kinda funny. It
And
caught me off
that's
guard.
what we want to see. We expect to
just a
see
joke,
more of
by the
that.
way. It was just
That's
a
just
joke.
more of what's consistent over a longer period of time. We don't really think that wages were an important cause of inflation in the first
I'll put
year or
Powell
so
right
of
here
the
on the
outbreak.
right-hand side next to
But
the bear,
I
just
would
like
say
my thumbnails.
that wages are probably an important issue going forward. Labor market conditions broadly are going to be an important
we also have
part
meta
of,
earnings.
Of getting inflation back down, and that's why we think we need some further softening in labor market conditions.
This goes sort of to the balance of risks question, but you mentioned at the start how you're keeping an eye on consumer activity and whether there might be some sort of a rebound there. And I'm curious what the Fed's explanation would be to families if further interest rate hikes start to hit the labor market, start to drive
will.
that sentiment back down.
I
What's
will.
the message
I'm gonna-
there
I will
of
message you.
why you continue to keep rates elevated or
And-
to raise them?
Well, we have
as
a
soon
job
as
assigned
we're
to us
done, I
by
got you, I
Congress
will.
to get
I
inflation
will.
under control. And we think the single most important thing we can do to benefit those very families, especially families at the lower end of the income spectrum, is to get inflation sustainably under control and restore price stability. We think that is the most important thing we can do now. and we're determined to do that. And I would just point out that the people who are the most hurt by inflation right away are people who are on a low fixed income, who, when you're talking about travel, or transportation costs, heating costs, clothing, food, things like that, those, if you're just making it through each month on your paycheck and prices go up, you're in trouble right away. Even middle-class people have some resources and can absorb inflation. The
thing is
people
I
in
want
the
to
lower
buy
income
this
income
dip,
spectrum
but
have a harder time doing that. So
I feel like
we need
it's
to get
not
this
going to
done,
go
and,
anywhere
the record is
because
clear that
look
if
where
we-
we're
if
at. We're
we
right next to where we
take too
opened.
long, or
and if we just sit
if we
here and
don't
wait for
succeed,
Meta's
that
earnings,
the
you
pain
just
will
made
only
one
be
big
greater.
move up
So
and one move back
that's
down.
how I would explain what we're doing.
And that's it.
Thank you, Chair Powell.
Volatility
Simon Rabinovich
might
with
be
The
over
Economist.
with. I don't know, though.
You had said last month that this meeting this week was going to be a live one. In the event the market had assigned a roughly 99% probability to the rate move that you announced today, the decision was, of course, unanimous. And the statement was basically unchanged from last month. So may I ask, to what extent was the meeting actually a live one? Was there ever any doubt over the past 2 days about what the decision was actually going to be?
Well, I mean, was there doubt? Look, I would say there's a range of views on the committee, and when you see the minutes in 3 weeks, you'll see that. There's a range of views about what we should do at this meeting and what we should do at the next meeting, and it's a process that we go through. Many times when we go into a meeting, the decision is not, fundamentally in doubt. Nonetheless, we have the meeting, and some meetings are less uncertain than others, and I'll just leave it at that.
Evan Reiser, Market News International. Thank you, Chair Powell. Financial conditions have been loosening at a fairly steady clip in recent weeks, the dollar, the stock market, et cetera. What does that mean for the Fed in being sure that inflation will come down to target?
So we monitor, of course, financial conditions, broad financial conditions. You're right, it's the dollar and equities, and we're of course very focused on rates and our own policy. We're going to use our policy tools to working through financial conditions to get inflation under control. The implication is, we will do what it takes to get inflation down, and in principle, that could mean that if financial conditions get looser, we have to do more. But what tends to happen, though, is financial conditions get in and out of alignment with what we're doing.
They go back and
ultimately,
forth.
over time, we get where we need to go.
If I could also ask about the SEP from June that showed rate cuts. Do you expect the Fed to cut nominal rates next year while also continuing QT?
So that could happen. The question is, is that consistent with...
Why wouldn't they?
So if you think about both of them as normalization, imagine it's a world where things are okay and it's time to bring rates down.
I wouldn't mind that.
From what are
We get
restrictive
some cool
levels to more
volatility.
normal levels. Normalization in the case of the balance sheet would be to reduce QT. So or to continue it, you depending on where you are in the cycle. So there are two independent things, and really the active tool of monetary policy is rates, but you can imagine circumstances in which it would be appropriate to have them working in what might be seen to be just different ways.
That was a really
but
good question.
That wouldn't be the case.
Thanks,
All right,
Chair
so
Powell.
there
Kyle
is,
Campbell
the
with American
volume is
Banker.
kind of
I have a question about the discount
died off
window.
there.
And I'm wondering if since the bank failures of the spring, if you've seen signs that banks have taken more steps to be proactive in assuring that they're ready to use that facility if they need to. And if you have any sort of thoughts on whether policies might be appropriate for making sure that banks sort of test regularly to show that they are prepared to use it. Thanks.
So that's a very important thing, yes, and yes to both sides of that. Yes, banks are now working to see that they are ready to use the discount window, and we are strongly encouraging them to do that, banks broadly. We did find, as you know, during the events of March, and that that it's a little clunkier. It can be a little clunkier and not as quick as it needs to be sometimes. So why not be in a situation where you're just much more ready in case you need to access the discount window?
Let's go to Mark. Cameron?
Mr. Chairman, Mark Hamrick with Bankrate. You've talked in the past about getting the housing market back into better balance, excuse me, and also that the market might have bottomed. Where do you see that situation and balance, or lack thereof, right now, particularly with the constrained inventory of existing homes that might otherwise be coming onto market at a time when existing homeowners are reluctant to move? And of course, all of that happening with the 30-year fixed rate mortgage still around 7% on the heels of Fed tightening, and with what you're talking about, tightening industry lending standards. Are we getting closer to balance or farther away? What's your sense?
I think we've got a ways to go to get back to balance, really for the reasons that you talked about. With existing homes, there are many people who have low-rate mortgages, and whereas they might want to sell in a normal situation, they're not going to because they have so much value in their mortgage, which means that supply of existing homes is really, really tight, which is keeping prices up. On the other hand, there's a lot of supply coming online now.
That was a low volume.
And there are people coming in. A lot of the buyers are first-time buyers coming in at buying it, with these relatively elevated mortgage rates. But I think this will take some time to work through. Hopefully, more supply comes online, and we work through it. We're still living through the aftermath of the pandemic.
We'll go to Nancy for the last question. Hi, Chair Powell. Nancy Marshall-Genzer with Marketplace. Russia has pulled out of an agreement allowing shipments of grain, safe passage through the Black Sea, and alternative routes at this point could be closed off. Just wondering, how could that contribute to higher food prices and inflation generally, and how closely are you watching that?
We are watching it, of course, very closely. And you're right, the withdrawal from the Black Sea Grain Initiative does raise concerns about global food security, particularly for poorer countries that import a large share of their food. Grain prices did go up on this news, but they remain well below their peaks of last spring. And the moves that we've seen so far, I would say, are not expected to make a significant contribution to U.S. inflation. Of course, we will be watching that situation carefully.
So you don't think it would have a big effect on Fed policy at this point?
You wouldn't
Not
say
at
so,
this
looking
point.
at what we know now.
Thank you.
Thanks very much.
Why do you gotta play the music? Come on. Come on. What about the behind the scenes? Like, I want VIP access. They were short with, well, they did it for about an hour, so I guess not really. All right, well, that's it. You got your you got the guy. You got the verdict that is in. They found him guilty. Guilty as charged. Inflation is here to stay. All right. So, what do you do from here? It's all up to you. What are your thoughts? You're supposed to go long, or you going to go short, or you just trade the range?
In June, Steve's as well. Let me officially welcome you to Closing Bell. I'm Scott Wapner. We are live today from Double Line Capital in Los Angeles. And Jeffrey Gunn.
There he is. There's my guy. My guy.
Exclusive
My guy all the way from Buffalo, who lives in San Francisco.
Indeed. Welcome back. It's been a long time.
The Buffalo, San Francisco area.
Your reaction to the decision when you were with me in June.
Look at all the Bloomberg terminals. I love it.
Yet here we are.
That's
Yeah, they
awesome.
raised again, and,
There's another one back there. Another one here.
ahead of this. I mean,
So let's see. That's 2, 4, 6, 8, 10. There's 10 grand just a month in terminals.
And I don't think we've had a meeting really since this all started where there's unanimity of opinion that
There's another one back there.
a hike, but that there wasn't even any debate that was going to be 25 or 50. So they're obviously slowing down. The yield curve remains inverted.
This is Jeffrey Gunlock, by the way, from Double Line Capital.
Banking problem with SVB, and
Hopefully he's
that
all
was
right.
a real recessionary sign. That was a
Doesn't
moment
seem
where
okay today.
markets were getting pretty nervous because the recessionary signals really you get on watch when the yield curve gets very inverted. But as was brought up in some previous guests on your network today, it's when it starts to de-invert that you really get worried. And that stopped happening. once the bank crisis calmed down. So the de-inversion is what you have to look for, and it hasn't really happened. I mean, we're back out at about 100 basis points, 2s, 10s, and we're really inverted from the 3-month bill to the 10-year treasury. So we're watching for that. We're also watching for the gap between consumers' views of the present.
Yeah, the 3-month and 10-year.
And meet up with sort of what they have with the view of the future, which is almost always on the pessimistic side. It's kind of weird. They always think it's going to be a little worse in 12 months. That has started to narrow a little bit, but not enough yet. So the other thing that's really important, I think, why I thought that the Fed wouldn't raise rates, and I think they shouldn't have. I kind of agreed with David Kelly, who was on right before I think the statement was announced, that they have the right to be and a reason to be careful here. And we've been talking about this the last few appearances I did with you, that inflation is coming down.
I wonder, listen, if you guys want my thoughts on the rest of the afternoon,
I mean, people say it's 3, but amazingly,
I think we kind of,
and there's big numbers rolling
we
off
slow it down a bit.
for,
We're back in the range. We got meta. This is why you want to, like, during Fed meetings, you want to put in your range. What's your range? And look, we broke out of it, broke up to it, you dance, boom. Right back into it on the bottom end of it. Double bottom. Now, do we just trade to the top of the range? We could. You want to see how it works? Might not be good with options, but buying the stock itself,
pretty much where
you know.
The Fed should really be happy with where it's right now. No, I did a funny study. I said, we keep getting this rhetoric of the 2% average inflation rate over time.
You
Do know
also,
the
guys, by the way,
core CPI
we have 20
average over the
minutes
last 20
left.
years per annum? 2.0%.
That's late volume there,
It's exactly
too.
there. So we're exactly there. And if you took headline CPI and replaced the owner's equivalent rent, which is a big slug of the headline CPI, if you replaced it with actual home price movements from these indices, CPI
Okay,
would not
now
be
it starts up, okay.
2.98% on the headline. You know what it would be? 0 if you replaced owner's equivalent rent with home price appreciation. So I think the Fed
Tomorrow's going to be a good one. We have Meta earnings tonight.
not to
I'm just trying to listen to Gunlock,
be on a
but
programmatic sort of situation because the data seems to be getting a little bit
Meta, ServiceNow. ServiceNow is another one I'm looking for to see what type of valuation is it trading at. Lamb Research, eBay.
because they don't need to. I don't think they do. That was kind of my point of view when we spoke last time. So I think that obviously what's really changed a lot is psychology. I mean, the stock market, particularly the NASDAQ, is up a ton. But one thing that's interesting, it feels like it's in a nonstop tear, but the asset class that actually has the highest return since the last Fed meeting, amazingly, is commodities. The BCOM index, thanks to a lot of the surge in agriculture. It's up 8%.
You guys hear that?
The NASDAQ's only up 4% since the last Fed meeting. It feels like it's up a lot more, doesn't it? And I think that because of the tear year to date for the NASDAQ, I think
That's why you listen to this guy. He gives you insights like that.
The Dow Jones Industrials is only up 8%. The NASDAQ is up, what, 38 or something like that?
Well, the Dow's catching up. The Dow's going for its 13th straight day of gains.
Every day. But still, I still think there's catch up there. I think the manufacturing.
But it also didn't sell off, too, though. That's the other point to that.
Also, on the inflation side, Scott, I like to talk about certain types of inflation numbers. One of my favorite is import and export prices, because they don't have any of these hedonics, they don't have seasonal adjustments, they're just prices. And they were just off the charts a couple of years ago. And that's why I said everyone is way underestimating what's coming in inflation. But people don't pay enough attention to this. These are down in the negative double digits now, year over year. One of them, I can't remember which is which, but one of them's down about 11% or so, one's down 18% or so. That's a real disinflationary type of pressure. So I think that obviously if we just zoom out, when we dumped all that money,
ServiceNow, $575, man. I wish I owned this thing.
Obvious that we were going to have a bulge.
God, I wish I bought this.
Distortions, and
I don't know how I didn't. Look at
this.
this.
Going to be inflation, and that's still sort of bubbling through the system. One thing that a lot of economists talk about, and I think rightfully so, is M2 is negative year over year. And so when you start with that, you think, wow, inflation's really going to be shrinking. But one thing that people aren't really paying attention to is the bulge that occurred in 2020 and 2021 is still sort of with us. M2 is negative year over year, but the monetary base is still huge. There's still money sloshing around from all the stimulus.
But isn't that then why Powell suggests, and he did again today, that a recession is not his base case? That the cushion was so big, as you rightfully point out now, going in, that it can provide enough cushion on the backside as inflation, as you also said, is coming down.
Yeah.
Why does there have to be a bad ending?
Well, I just feel like just historical patterns, when you have inverted yield curves and you have credit conditions tightening, I just think it almost always just leads to some sort of a catalyst occurs, and you start to realize why the bond market is sussing out, you know, this inverted yield curve and all that other stuff. But I think you need some sort of a shock to the system, and that hasn't been happening. It felt really bad earlier this year, but things have really calmed down. The bond market yields and the Treasury market are the same as they were at year end. They're the same as they were last September. They haven't changed at all. And that's led to a calming effect on psychology, because the volatility of the bond market was such a stomach churner last year, and it led to bad returns everywhere. But the bond market's been completely well behaved this year. Returns are not terribly high. If you go down in credit, you've got good returns. CCC corporates, which I don't really ever invest in heavily, but they're up double digits. Junk bonds, bank loans are up 7-8%. I mean, it's pretty good, and it's done it with not a lot of volatility, except for that window of the regional banking crisis that scared everybody.
Let me bring in our Steve Leisman, who was in the room, as you saw, asked the very first question. Steve, you heard Jeffrey Gundlach, and he's not the only one suggesting that the Fed shouldn't have gone today, that they shouldn't do any more because they don't need to. It's not exactly the tone you got out of Chair Powell today.
No, Powell is keeping all of these meetings live. He wants you to believe that there is still the possibility of a rate hike. He's not ready to say that inflation has been vanquished or that the Fed's job is done. Maybe we'll just listen to what he said about the possibility of a hike in September.
I would say it is certainly possible that we would raise funds again at the September meeting if the data warranted. And I would also say it's possible that we would choose to hold steady at that meeting. We're going to be making careful assessments, as I said, meeting by meeting. And I'll close by saying we've raised the federal funds rate now by 525 basis points since March 2022. Monetary policy, we believe, is restrictive and is putting downward pressure on economic activity and inflation.
Scott, there's a bit of a game going on here. Let me see if I can explain it. I'm interested in what Jeff thinks about it. I'm thinking about Powell like a jockey on a horse that's well known as a closer, and he's hanging back on the reins. He does not want that horse to run, at least not yet, because he does not want the market to believe that either the Fed is on a long-term pause or that it's eventually going to be cutting rates anytime soon. It doesn't want to have a dramatic loosening of financial conditions because it doesn't feel like he's really vanquished inflation just yet. So I think the reason why these quarter points hang out there, not that they're incredibly consequential necessarily by themselves on a nominal basis for tightening financial conditions, but they do, I believe, keep the market from running, and I think that hangs a bit like an anvil over the head of the market, the idea that you could get another quarter point down the road.
Jeffrey, what's your reaction to that?
I agree with that. I think that today's meeting I would characterize as being as bland as you can possibly get in that basically the answer to every single question is data dependency, which makes a lot of sense to me. The 2-year yield has not gone to new highs. The 10-year yield is lower than it was a year ago, or about the same as it was a year ago. And so I think the Fed should be data dependent, and they don't have a preconceived conception. It's quite clear to me. And I certainly agree, though, that they don't want to loosen financial conditions. But financial conditions have loosened. If you look at some of these indicators, and it's largely because, like, the VIX index is down. It's that volatility is down. That's one of the biggest drivers of why financial conditions are looser. So they actually are pretty loose if you look at those charts. And I do agree that the Fed wouldn't want to get a more overvalued, say, S&P 500 with a big running of the horse, as Steve uses the analogy. Because the S&P 500 is, I mean, people are expecting earnings to go up by 10% or so next year. But if they don't, if they only go up by half of that, you're looking at a pretty high PE, even on a forward basis of probably 21, 22 times. And that's kind of a lot. And a lot of this is driven, of course, by almost a mania type of feeling with that burst of the AI, the acceleration of the AI stocks, which reminds me a lot of the dot-com situation. I mean, it might end up being an excellent moneymaker, just like the dot-com stuff, if you held on to it, went to new highs, and some did super, super well. But it's got that feeling of a chase going on.
Steve, you've got a good handle on reading the room, I guess, as they say, and you know the chair well enough, I think, at this point, and certainly how to read him, and in not only his language, his body language, et cetera. Do you think that this was the last move in this cycle?
I thought you were going to ask me if you think he was going to go to another Dead & Company concert. I could have answered that question a little more easily.
He might.
I don't. He might. I don't think he's necessarily done yet. I think he's got a committee, Scott, and the committee was committed. Not committed. They have strongly forecast that second hike in there. They may yet do it, but if the data does turn dramatically the other way, and some of the numbers that Jeff was talking about become reality, a 2% handle on maybe a headline PCE, that would be a very big deal. And you could see what would, I think, happen is I don't think Powell wants his committee to fray. And there would be, if there was enough data, another month of data. Friday, by the way, is a very important day. We get another round of PCE data. And then the next one after that's going to be important. The idea that if you get a couple of these in a row, Scott, remember, they were burned badly in January, and I think this was very instructive for Powell. Not only was the February data lousy, but they went back and revised the November, December, January data that showed that improvement. So he's going to be cautious here. If you do get a couple good ones in a row, I think he likes this period. I wouldn't say he's going to move in September. I feel pretty confident he wants to, if he does anything, do it in every other meeting basis, even though he wouldn't commit to that. I think that's where that's how he wants to do things. But I think he comes back, and if the data supports it in November, he would do it if you remain, as he keeps saying, far above target. If you're still on a 4 or 5% core number, I think he'll hike again, if you ask me. I do want to say one other thing about his sense. He does seem pretty confident and feel pretty good about the outcome here of being able to bring down inflation pretty sharply.
I was looking for 450 area to see if we could
I think he feels pretty good,
trying to see what I think could bring. Again, we have some data tomorrow morning.
Steve, I really appreciate it. I'm going to let you go. I love the engagement of you and Jeffrey as well, and I want to continue that too when we visit with you guys on Fed Days. Thank you, Steve Leisman. Look, you guys don't think that Powell's going to pull this off. I mean, your deputy thinks we're going to have a deeper recession and that the Fed's going to have to cut 100 basis points in one fell swoop.
I think what Sherman was saying there is just
Sherman
simply observing that, and I think this was David Kelly again. He said they take the escalator.
Sherman's got long hair.
And bring rates up, and they take the elevator on bringing rates down. I just think that the pattern of this economy
there he is.
There's
old Sherman.
That when something happens, exogenous shock, that all of a sudden there's a radical rethink of the economic situation. And the history has been some pretty aggressive rate cuts when those problems occur. And I'm wondering about the housing market, which has really baffled everybody, because you would have thought, with mortgage rates going up by 500 basis points, or 450 anyway, you'd have thought with the home prices up so much and the mortgage rates up so much that the housing trend would have weakened as it started to. But amazingly, they've gone up 4 months in a row. And the drawdown on the average median home price is almost non-existent again. We're almost near where we were. And so the reason that's happening, though, is because there's a huge bid-ask spread that's going on. The sellers are reluctant to sell unless they get a really high price that they have in their mind, because they've got this mortgage at 3%. And what are they going to do if they sell their house? I mean, their mortgage is one of their most valuable assets, actually. You can actually have your 3% mortgage and put in T-bills. Just put money in T-bills, and you get an arbitrage spread there of about 250 basis points. So the sellers are in a good, the owners are in a good situation, but the buyers
You learning?
to confront the 7.25.
You all learning? You hear what he just said?
As well.
You can do it with cars.
Their wages have been going up, which is good.
Anything.
This recent move back up in
There's a
housing
2%
prices is
difference there.
problematic. I wonder at what point we're going to start seeing a shrinkage of jobs in the real estate market, because obviously this gap is creating what I call the bid-ask spread, if you will, on the home transactions. There's almost no activity at all. So this data could be highly misleading as a forward-looking indicator, because there's so few transactions that if there was a reason that would create catalyst for selling, I think that there could be a lot of downward movement in those markets that have gone up a lot.
At what point do you say, you know what, I'll be darned, they actually pulled it off? They actually pulled off a soft landing. They were able to crush inflation without crushing the economy.
If we get the 2s10 spread to be 100, 150 basis points, and inflation is at a 2 handle and not a 0 handle, which is one thing that I still think is plausible here, then, you know, I think if that happened, you would say that we're in a normal situation again, and they pulled it off. But Powell has maybe learned from his big mistake of transitory inflation, because that's a real egg on the face sort of a thing. I mean, they thought it was going to stop at around 4, and it went to 9 on the headline CPI. I think he's learned from that, but I think he needs to focus again on the fact that maybe he's making an echo of that mistake. Maybe inflation's going to go lower with these import-export prices, with, you know, the balance sheet reduction, some of this. I'm not really worried about inflation in the short term at all.
What's the best play then, right now for you? You still like the long end?
I have the long end.
Long end.
Has not done much this year. It feels like it's been a lot of volatility.
Because it's not time.
A few percentage points. I still like.
It's not time for the long end.
And this is something that's
It's not time yet. Wait till like December.
Over, you've got to
maybe
dancing near the door.
late fall.
The bank loan sector still. Their floating rate, their coupon just went up another 25 basis points today. They're cranking out returns in the first half of this year of about 8%. I don't like the lower tier of that asset class, because the interest rates risk is so high, and the yields they have to pay above the Fed funds rate or SOFR are so high that I think there's really growing default risk. And I think that's one of the stories that's going to be coming that may make it so that they can't say that they pulled it off, is the default rates could very well be going up as lending standards are tightening. And that is something that I think is in prospect for the next, I don't know, 6 to 12 months. I still like the asset class, particularly the double B category at the present moment. The cash flow is really, really high compared to where it was even just 18 months ago.
Do you think rates have peaked? We're looking at treasuries right there on the screen. 483 is where the 2-year is today.
Yeah,
I think we have.
When we were down in
If we do go higher, I don't think we go much higher.
At an event, I said,
personally.
I think the 10-year's already peaked.
Hope you guys are alright. Hope you guys had a good day. Thank you guys for liking. If you're new, thanks for joining us. If you guys have any questions or anything about what he's saying, anything.
I mean, it's about 40, 50 basis points below. And even the 2-year Treasury has peaked. With the Fed raising rates, you know, since the regional bank crisis, it hasn't put the 2-year into any sort of form of distress. So yeah, I think rates have peaked. I'm completely comfortable owning treasuries. I say I like these bank loans, the higher quality bank loans. I think the dollar has started its weakening trend. We see that with the commodity price bump. I don't mind commodities that much now with the dollar weakening. And I think there's a good opportunity for emerging market debt investment that unfortunately I think is a little bit late because the spreads have tightened so much. We're down to only about 415 basis points on a basket of EM, and the average spread has come in a fair amount, but what's really come in is the dregs, the triple C categories. Thanks to the stock market going up so much, particularly the NASDAQ, from about February or March on, I guess, there's been a little bit of a rush to lower credit and grabbing at yield and stuff like that.
You still like India?
I do. It's doing okay this year. It's not up as much as the United States, but that's a long-term play. I think the demographic setup there and the need for political and legal reform is very acute because they need to deal with
I think
the
we all
same
like
type
it.
of demographic
I think
pull
we all do.
that China was faced with about 30 years ago. And you know what happened to China? Their GDP went up 10 times or more over that time period, and now they've went from 10% of the U.S. GDP to 75 or 80. I think that's going to happen in India. And so I've been invested there for a long time, and I just would put that in a core portfolio and just don't worry about it because it's a long-term play for your grandchildren's college fund.
When do we get the first rate cut, do you think?
I think the first rate cut will come next year. I think we'll get it. I think it will be encouraged by ultimately a drop in 2-year yields. And I think the steepening yield curve there and the lower inflation rate is a big part of that. I think we're going to see 2% inflation in the PCE. I don't know about the core PCE being quite that low, maybe at a 3 number. I think I think CPI is going to be living in a 2 handle. And I think we're going to get there in a few months. And I think we're going to stay there. I mean, who knows? I mean, oil prices go to 200 or something, all bets are off. But I think it can stay there. And that's why I think the Fed, what you said, I mean, I think they sort of have a little bit of a mission accomplished mindset, or at least they're entertaining that idea. They're playing with it, because this meeting was a lot different than a couple meetings ago, where there was dissensions and is it 25, is it 50, and now it's just unanimous 25, data dependent, data dependent, data dependent. And I think the data is not going to be supportive of more rate hikes.
I mean, he's still fixated on the core, as he said today, which he suggested is still too elevated.
Yeah, the PCE core, but that's coming down. There's 1.8% that's rolling off in the next 4 months or so, and it could drop another percent. So that number could definitely be in the 3s, in below 3.5 this year, before the end of the year. And I think that if you have the core PCE in the below 3.5, and you have the headline CPI at 2.25, which is our base case based upon today's commodity complex, I don't think there's any reason to hike at all.
I mean, he still suggests that it's just way too elevated, and that it's going to be more sticky, perhaps, than people would suggest.
That's why I say I think he's doing an echo of his transitory mistake. I just think it was so obvious that inflation was going to go up much higher than the Fed thought in 2022, and everything that we're looking at, we think it's going to be the trend remains in place for these lower inflation prints. And I think Jay Powell is just a little afraid to buy into that, because if it doesn't happen, he's got a problem. But I think it's going to happen.
Well, also, you have to take into consideration, too, I think what Liesman in some respects suggested, and maybe you did as well, words versus action. Right? They have to talk the way they are. He has to say the things he is saying on days like today. Whether the actions follow the words remains the central question.
That's right, but nobody's even pushing back in this present moment, this present environment, that the Fed just says, we might raise, we might cut, we're data dependent. The market is completely accepting of that, and I think that's.
Well, don't you want that? Why wouldn't you want that?
I'm not saying it's a bad thing, and I think that's why the stock market went up so much in the middle of this year. I think that they were being increasingly calmed, that we're slowing the pace. Right, we went from 75 to 50 to 25 to nothing, and now at 25. I mean, the trend is fairly obvious here, and the market moves ahead. I mean, it discounts. It's amazing. Last March, everybody thought the bears, it was like all-time bearish readings. And, we have a big rally, and now everybody's feeling comfortable again, and kind of Fed's feeling good. But, things don't stay stable indefinitely. It's just sort of been a good run of economic statistics.
We will make that the last word, and we will look forward to speaking with you in September.
September it is. Yes, we have two job reports, 2 rounds of inflation reports. And I think they're going to be such that the Fed won't be raising rates. But I was wrong last time, so I'm wrong 30% of the time. So don't hold me to everything I say.
All right. Well, you'd be in the Hall of Fame if you were a baseball player. So I appreciate you having us back.
Thanks, Judge. We'll look forward to the next one.
All right, that's Jeffrey Gundlach. By the way, Dow's up about 40 or so points, as I suggested at the top, going for its 13th straight day of gains. That'd be the longest streak since 1987. To the results of
Right
our
before the crash.
Yeah, believe me, people hear 87, they get nervous. They get nervous. If it gets 14 days in a row, by the way, I think you got to go back to 18 something, but we'll cross that bridge when we get there.
Right.
Again, Jeffrey Gundlach having us here at Double Line. The results of our poll coming up. We asked followers, was today's Fed rate hike the final one? And the majority of you said no. It was close, but the majority of you said no. Up next, we'll talk to New Edge's Cameron Dawson. We'll get her first take on the hike, what she thinks Powell's next move might be, and most importantly, what it could mean to your money. Plus, we're setting you up for the big earnings in overtime. Meta and Chipotle still set to hit the tape in a few moments. We'll break down the key themes you need to watch there. We'll do that, of course, in the Market Zone.
You guys don't know, we do have Meta after the bell. Alright, so we have Meta here in a couple minutes. We got 10 minutes to go. I hope you guys had a great day, didn't hurt yourselves. Yeah, I'm going to have to find that in a little bit. Meta earnings. Meta earnings. We have jobless claims tomorrow. Like, we're going to get some volatility. So, if you missed out, it's all good. There's always tomorrow. You know, but you need to capitalize and kind of figure out what it is, what's going on, what it is you need help with to be able to capitalize on these moves. All right, did we get some upside from here? Oh, it just went quick right into that level. Look at this buy. It like was trying to hold that level and then it just flushed it. It flushed it. I think we want to go to the downside, guys. If this volume is any indication of a direction, I think we're just waiting for earnings. I really do. I don't even know what the hell this was about. Or this.
We're now in the closing bell market zone. New Edge Wealth's Cameron Dawson here with her reaction to the Fed decision, these crucial moments into the close. Plus, we do have two key earnings reports coming out in overtime. Julia Borston on what to expect from Meta, and Kay Rogers with what to watch for with Chipotle. Cameron, begin with you. Was this the last move by the Fed, the last hike?
Well, as you heard from Powell, it is still very data dependent, which just means that if we do get a hot inflation print sometime in the next couple of months, then it may not be the last hike. But if the current trajectory in inflation continues, then yes, it is the last hike. We don't think that the Fed wants to take a victory lap on inflation just yet. As Steve Leisman talked about a bit today, that they've been so burned by calling disinflation too soon, which just means that this will remain a market that's hypersensitive to incoming inflation data and probably hypersensitive to good data coming in from a growth perspective, meaning we could still be in this good news for the economy is bad news for markets.
Well, what happens now to the rally? Because the market certainly doesn't seem to be upset by what it heard today. Either the bond market and the stock market might suggest that this was the last one.
Yeah, and what we've seen this year is that the Fed hasn't mattered for markets really at all. We've seen the pricing for the terminal rate go up quite significantly through the course of the year, and we've seen the push out of the start of interest rate cuts, and yet we've seen market valuations continue to expand. You have the S&P up 40% or 20% in its PE valuation, NASDAQ up 40%, which just tells you that the pricing of the Fed's expectations this year really has not mattered for markets. And really what matters more is positioning becoming deeply underweight, moving to be more overweight, things like AI boosting optimism. So really, it is a question for going into 2024 if the Fed, if we continue to push out the start of cuts, if that will matter at all for markets. It remains to be seen.
But I mean, you've been pretty cautious, right? And too cautious. I think you would have to admit at this point. Are you starting to come more positive on the market?
Well, we have been cautious in the sense that we haven't been expecting the big lead in some of the more speculative parts of the market to be the leaders, as they have this year. You can see things like meme stocks up 70%. We weren't expecting that with a Fed that was continuing to remain tight. Now, we stayed invested through 2022 and into 2023 by focusing on quality, focusing on those names that we want to own for the long run. The question for us is then where do we find value in adding new capital today? Back at the beginning of June, we started talking about how the equal weight index was actually really cheap if you looked compared to the cap weighted index, which was being boosted by just a couple of tech names. So we still find value in pockets of this market. We remain valuation disciplined because we are long-term investors, and that's where we look to things like value, maybe not focusing as much on financials and equal weight in order to put new capital to work.
Yeah, well, speaking of tech, Meta is going to report in overtime tonight. Julia Borston, what should we expect?
Well, investors are hoping Meta will accelerate its revenue growth after the stock's 147% gains this year, with 83% of analysts still rating the stock a buy. Now, the social giant has been struggling with the same ad market weakness the whole industry has seen, but Meta has the advantage of massive scale and new revenue drivers, including better monetization of Reels and also AI as a tool to improve ad targeting and measurement. Analysts are expecting the company to grow revenue about 8% in the quarter, accelerated from 3% revenue growth in the prior quarter. Meanwhile, thanks to cost cutting, earnings are expected to grow 18.5%. There are some other key issues to watch, including, of course, Threads, with the question of whether it's held on to users after its big launch, and after YouTube reported 4.4% advertising growth and Google had better than expected results. A number of analysts do expect Meta to follow suit. Back over to you, Scott.
Yeah, Cameron, I mean, is there any reason to believe that this trade is not going to continue to work? You know, we got some numbers yesterday from some of the mega caps. We're going to get this now. We've got Apple and Amazon coming next week, too.
Yeah, I think that what we've seen so far is that strength in other parts of the market haven't been coming at the expense of leadership in tech names. Maybe there's some consolidation, digesting of recent moves to be had, mostly because we have seen so much valuation expansion. But if earnings deliver, then the trade can continue. What encourages us the most is what we're seeing outside of just the tech names. Look at names like Union Pacific and Boeing today in the cyclical industrials. It's likely that we start to see industrial activity start to recover and re-accelerate, which just points to a continued broadening out of the market, which then, if you look again, that supports that equal weight look of things where you aren't paying top dollar, top valuation, and you can continue to see a bit of a catch-up trade and rotation.
Well, we'll have another closely watched earnings report in overtime as well. Julia Borston, thank you very much. Kate Rogers, to you now on Chipotle.
Scott, analysts are looking for $12.31 adjusted on revenues of $2.52 billion for the second quarter. Same-store sales, an important metric, projected to increase 7.5% according to FactSet. A few key things will be of note this quarter: commodity inflation, and if it's cooled at all for Chipotle, which has two high-price items featured heavily on its menu in beef and avocados. Any color on consumer sentiment will also be notable. Chipotle's been able to really hang on to consumers and even grow traffic in the face of higher prices over the last year, and CEO Brian Niccol has long touted the brand's pricing power, and there's been really little resistance there from customers. And finally, more details on its international expansion plans. We reported last week that Chipotle signed its first franchise partner in the Middle East, so any details on what might come next will be of note. Remember, this is one of the best performing names in the restaurant sector year to date, up about 50% so far. Back over to you.
All right, Kate Rogers, thank you very much. We'll see what the numbers are. Cameron, the consumer's been hanging in. For how long, I suppose, is the question.
Yeah, I mean, I think that the consumer will continue to spend as long as they have jobs. So as long as the labor market remains tight, we can see resilient consumer spending. Interesting, what we've been seeing this earnings season is a little bit of pushback against higher prices. You heard from folks like Kimberly Clark or Danone that they're raising prices. They're raising prices at about 8%, but it is starting to come at the expense of volume. So if that continues, maybe we see a slowing in price gains. But overall, the consumer is healthy because they have jobs. Yes, we're seeing an uptick in defaults in consumer loans. However, it's just getting back to pre-pandemic levels. So we think we have a fair amount to go before we get to a point where the consumer, from a balance sheet perspective or an income perspective, really gets pinched.
We got about 2 minutes to go before the close. Dow is still positive again, going for its 13th straight day of gains.
All right, guys. So I still think we're in a downtrend. Just going to put it to you like that. I think we're in a downtrend right now. All right. My guy, I will text you in a little bit. As soon as these earnings are over, I will.
Maybe energy. You tell me.
Yeah, I think that is the story for the second half of the year, which is that as we start to continue to see this better economic growth, that you should see cyclical sectors do better. You should.
Excuse me. Sorry, guys. Great job today. Thank you guys for joining us. Try and get this a little bit better. I got run to the store. Well, looks like it wants to rally. We'll see what Meta earnings are. Yeah, I'll text you. Thank you guys for joining. Oh, that was so loud. That hurt. Fuck. I'll have to remember that. All right, let's see what earnings are.
Done really well. They've been trading near a high. That broadening out of the market has people feeling a lot better about where the market is as it's continued its gains. It hasn't been just technology.
Yeah, that is very supportive of the rally continuing, and what we would look for is a continuation of earnings to get better, meaning that you see earnings revisions move higher as the recession is priced out. So we'll be watching that very closely as we move into the back half of the year.
It's so loud on the floor, I can't even tell if Cameron has stopped talking or not, so I'm just going to take it. Cameron Dawson, thank you very much. The Dow ramping a little bit into the close. It's going to get its 13th straight day of gains again. That's the longest streak since 1987. We set you up for Meta and Chipotle after the bell. I'll send it into overtime with Morgan and John.
Finally, somebody who hits the mother flipper like you should. There you go. Somebody that hit the that closed us off on a nice hit, nice batter. I hit it like. What? They come up there, they're so damn goofy. Where's the excitement? Where, you know?
And investors are now set for another huge hour of earnings. Meta, Chipotle, eBay, Mattel, and Lam Research all set to report results. We will break down all those numbers as well as ServiceNow as soon as they hit the wires.
Yeah, let's get straight to it, though. Joining us now is Barbara Duran, BD8 Capital CEO, and David Zervos, Jefferies Chief Market Strategist. Good afternoon to you both. David, want to get your thoughts not only on the increase, which the market expected, but what we did hear from Chair Powell today, especially what he had to say about inflation and specifically the wage piece of the puzzle.
Well, I think he did talk about wages, and he certainly was interested in that ECI number that comes out later this week. But, he was very specific, I think, on data dependence, no forward guidance. September is really about these next two CPI reports, the next two pieces of payroll data, a little bit about that wage data. And then he kind of even pulled it back and said, really, it's the inflation data that's the primary driver. So I think he laid his groundwork pretty simply for September and really tried to steer away from anybody's questions on what's coming for the rest of the year. A lot of people quizzing him on rate cuts for next year and whether those were likely or unlikely. And he said, of course, a few people are projecting those in the SEP. But, I don't think he gave us a lot. He just said September could go, could not go, and it all depends on really two pieces of data. I think the next two CPI prints.
Yeah. What do you think, David?
What do I think? Look, I think that's exactly right. I think that's the right way to do it. So I don't have any issue with the way he did it. And I think those CPI prints are, I wouldn't say look, I think a lot of economists have some pretty good ideas of where these are coming in. We're talking about a lot of very fine tuning. We've done 525 base points tightening already. This is about as fine tuning as you can get. So I really think the story is moving to the back burner. And now we're more or less talking about, I think, bigger picture issues, which I don't think we have a lot of answers to, which is how have we raised 525 base points and this economy has stayed so resilient?
Barbara, so maybe that means that it's less about the Fed, because we're not going to get a whole lot more action from the Fed for a while now, more about these earnings. Alphabet closed up nearly 6% today. You think that bodes well for Meta, which you own? I mean, what's this really going to move on, though? Maybe not Threads, since it's so small, relatively speaking, but beyond just that core ad number, Google moved on Google Cloud and also on YouTube. What matters to Meta?
Yeah, no, first I agree that it's not about the Fed. The Fed, even if they raised another 25 bips in September, November, I think that's already discounted the market. So we are appropriately focusing on earnings. And in general, if this is the trough, I think the Google results do bode well for Meta. Meta does have high expectations going into this, although the stock did trade off this last week, except for today. And I think investors are going to be looking at a number of things. One, 98% of their revenue is ad spending. So people are going to be really looking at that and what's happening, because it's a macro issue, but two, they've also seemed to have gotten hold of how to really maximize the ad targeting and optimization. They're doing very well in that. So we want to see that. But we also want to see the user engagement and base. Is that still strong? And that's sort of a given, but you never know what's going to happen there. And yes, we want to see all the other revenue streams. I mean, Reels for Instagram is ramping up very nicely, and there should be good advertising numbers
sales
to
of
report there.
1.09
We want
billion
to know
is
what they're
a beat
thinking,
for
WhatsApp,
Mattel.
and the monetization, when and how are they going to do
Mattel
that?
shares
And of course,
popping here,
Threads, which probably won't be
22.14.
much to say. There was a big sign up, probably not a lot of
Tango,
engagement to
Mattel,
talk about yet. But I think
META,
the
Meta,
ad story is going to be the big
Meta
one. But I think it's going to be
reporting.
more about how they're optimizing,
Meta
and getting
platforms,
good advertising dollars in there.
And then, Barbara, I wonder about the also-ran effect. Snap
Monthly
didn't
active
fare so
users
well
on Facebook
yesterday,
are
even
3.09
as
billion, an
Alphabet
increase of
did. And then
3%
you look at
year-over-year.
Lyft, for example, versus Uber hasn't done well lately. We got eBay,
$2.98
which is an also-ran
for
to
Meta.
Amazon. What do they need to show, or
The
what's the
estimate was
danger here?
$2.91.
Yeah, I think it's going to be very tough for eBay. I mean, if you look at any of the long-term forecasts, you're talking maybe low single-digit revenue growth, and they're trying
Just want
to
to interrupt you
Alpha,
for a moment,
Meta
just to let
shares
people know Meta
spiking here
results
at
are
$325
out, and
on
we
Meta.
are going through them right now. You might not be surprised to know it is
That's
popping
Michael
on that
Tango
initial
Alpha.
release in the after hours, up about 7.5%. Barbara.
You like that. Can't wait to see what's behind it. So, but anyway, back to eBay. If you still want to chat about that, but I think they've got a tough road to hoe. Because one, there's macro challenges for them. A lot of their items are consumer discretionary. For U.S., we know consumers have pulled back from spending on goods, more on services and the experience. And two, competition. They have been steadily losing share, and it is the Walmarts, it is the Amazons, it is competitive platforms. So I think it's going to be, and they have done this new focus, focusing on used handbags and luxury goods and that. The luxury part actually did better the last quarter, but I don't think it's going to be enough. So I think this stock is very much an also ran, and you're not going to see a lot of upside potential.
Okay.
I think for a more longer run.
Well, let's get more on Meta. Julia Borston has the details now. Julia.
We see Meta shares spiking on better than expected results on the top and bottom line. Revenues were expected to grow 8%. Instead, they grew 11%. Revenues coming in at $32 billion versus their $31.12 billion estimated. So this is showing accelerating revenue growth, and I think that's really what's behind the stock jumping 7% right now. We also have earnings beating estimates coming in at $2.98 per share versus the $2.91 expected. We're going to continue to dig through these results here and take a look at the guidance, and we'll be back to you with more. Back over to you guys.
All right, Julia Borston, thank you. Barbara, do you want to get your reaction to that? We're still waiting on more details here, but the fact that you do have a top-line beat for Meta, how does it speak to what we were just discussing?
Can I just add in there, since you didn't have a chance to mention, daily active people up 70%, monthly active people up 6% year over year, Barbara.
Well, that's fantastic. Well, the fact that they beat on the EPS number, bodes well in terms of their continued cost control, because as we know, that's really what got the stock started in the fall. That they were really okay. We're getting, we're going to cut 20,000 jobs, which they ultimately is the number they did in different tranches, and so that's also something people want to see. But we also want to hear on the guidance call, because everybody we know from listening to Google and Microsoft, they're going to really up their capex on AI. Yes,
you mentioned guidance, so let's get the details on that from Julia Borston as well. Julia.
The company is guiding for revenue in the third quarter of between $32 and $34.5 billion. This is higher than analyst expectations. Just to put this into context, analysts were expecting about $31.3 billion. So the fact that that guidance is higher than anticipated, I think, is another factor that's influencing the stock and moving it higher. And the fact it really looks like a beat across the board here. So I'm sure we'll hear more from Mark Zuckerberg, especially about the role of AI here, but strong results across the board. And he cites with Llama 2, which is the large language model, Threads, Reels, and new AI products in the pipeline, saying they have an exciting roadmap ahead. Stock now at 6.5%.
Julia, thank you. Barbara, I'll also mention that Meta's saying they anticipate full year 2023 total expenses will be in the range of 88 to 91 billion, up from the range of 86 to 90 that they expected due to legal expenses. I don't know how much that matters, along with everything else that you're hearing in the guide.
Yeah, no, I think it's legal, things like that, sort of one-time things. I think people are still a little nervous when it comes to the metaverse. But again, we want to see a little bit more if they're going to do, how much is CapEx going to come up. We also want to see a bit about the margins, because if this is also the revenue beats across the board, it would reflect advertising and what's going on there. And that should be higher margin. So it'll be a very interesting call.
Yeah, it looks like it also says outlook includes approximately $4 billion of restructuring costs related to facilities, consolidation charges, and severance, personnel costs. Reality Labs operating losses to increase year over year in 2023 as well. We have eBay earnings too. Courtney Reagan has those details for us. Hi, Courtney.
Hi, Morgan. Yeah, it looks like a beat on the top and the bottom line. eBay reporting earnings per share of $1.03. The street was looking for 99 cents on revenues of $2.54 billion. The street was looking for 2.5, so that's also a little bit above expectations. It does look like the third quarter earnings guidance is a little light. The range is 96 cents to $1.01, and the street was looking for $1.02. Although the third quarter revenue guidance does look about in line with expectations. They are guiding to $2.46 billion and $2.52 billion. The street was looking for $2.47 billion. As you can see, eBay are down at least immediately in reaction on these results. Back over to you.
All right, Courtney, thank you. And in that time, Lam Research earnings out as well. Christina Partsinevelos, what do the numbers look like?
Well, we are seeing a top-line beat EPS of $5.98. That's about 91 cents higher than what the street was anticipating on revenues.